like it's in 1080p. Check 1, 2, mic check. Check 1, 2, mic check. Good morning out there. Woo. Check 1, 2, mic check. Almost there, boys and girls. Got a few more things to do here in the background. Yeah, couldn't tell I was watching a monitor with the show on, and it was like really blurry. Let's do this. Good morning out there. How's everybody doing? Welcome. Dude, yesterday was 70 degrees in Michigan. It was a beautiful day. This morning, not so much. We're getting rain because of it, so we're down to 50 again this morning. I want to say welcome back to you all as well. We're going to get right into the market brief. I'm a little bit late this morning. I've got some internet issues, so I had to reset my router and my internet in total this morning. I don't know if it's because I'm streaming so much. It's just like, go F yourself. I guess I didn't even swear. I'm doing good. I didn't swear this morning in the first 15 seconds of the show. We're going to get right into it, though, and try to catch up before the market open here and get you all caught up on what to expect today. I kind of look tired this morning, too. I lost my voice as well. All right, so starting off this morning, Wall Street hit by tech decline after hawkish Fed speak. That's the story that we're running with this morning. We're going to get into it today with over this topic of conversation. Last night I made a market brief yesterday, quoting CNBC. In the morning we started getting hit with articles that the top was in. By end of the day, whoever works at JPM said, to hell with this, put out another article. So like 5 p.m. or 6 p.m. yesterday, another article popped up on my Pro subscription, something about how inflows are still coming into the markets, even though JPM's calling a top. So we'll get into that this morning, take a look at all that stuff. What's most fascinating about this is there's almost a fight between CTAs, retail traders, big banks out there right now. So CTAs are net long right now. They are not long. And then, of course, retail traders are rolling higher. We saw that yesterday with the market, the market gamma profile. They're rolling it higher to 530. So there's a fight brewing between the attempt to change sentiment and instill fear in the market. Now, I got to asterisk that with. I have to put an asterisk on that with the reality of the market, right? The landscape of the market is not what these guys are saying it is. And we have this sentiment every week. We start the week out. Matter of fact, Vol Wiz was on Friday, and we discussed the idea that on Mondays or Tuesdays, we find a place to sell. We sell the market, right? We trade sideways and down into Wednesday or Thursday. And then before all of these data releases, they sell the volatility just before the data release. And this time sounds different to me, at least. But, until it changes, you really can't believe it, right? Because what happens is you come into those Wednesdays and Thursdays and you're like, oh, yeah, I've been drinking the Kool-Aid all week long. We're going to roll down, and they blast it north again, right? You end up ripping, and you get blown out of these trades. And what's funnily enough, too, last night, I had some people contact me. These are bears, right? Early in the night. This is about 7, 8 o'clock. They're leaving me DMs and stuff like that. That's probably it. And I'm like, man, they fuck it. I'm like, are these guys trading with real money? These are friends of mine. I'm like, I don't believe that they're trading with real money. I just don't. I don't think they close on a Thursday or a Wednesday and take the money and run. As a matter of fact, I've had on a hedge now in this market for March 28th, looking for a pullback, some kind of whether it's fast or not, some kind of a seasonal low, right, for this month. And this put spread is like printed 30%, or I think it printed about 50 or 75%. I still needed some of the theta on it, some time on it, so I was like, I'm going to leave it on. Then it printed like 30, 40, 50%. They're waking up this morning, but am I going to get a print on them? I don't know. It's a hedge on the market. They haven't printed for what I wanted them to print for at least the past month that they've been on. So I haven't seen anything that says otherwise at this point. So we're going to get some of the data this morning. And you can already see right now, right? Stocks fell as hawkish comments from a Fed Reserve policymaker reinforced the message that the U.S. Central Bank is not in a hurry to lower interest rates. I read everything that was said on that yesterday. We're getting 2 interest rate cuts this year. Maybe just not back to back, right? I think that's what was said yesterday. But we don't have that many rate decisions this year either, right? What do we got? 4? So you're talking about every two rate decisions, at least 2. And then another fascinating thing here is there's some sentiment change right now with who's going to be the president. There's talk out there. You can hear it in the news. You can see it in the matter of fact, yesterday on Reddit, all of the comments on Reddit yesterday was panic by Democrats that they're losing a tide or some kind of a tidal fight with Trump. And that opens up a whole nother can of worms relevant to the market, relevant to the Fed. And we may try to delve into that today. If possible. I don't want the conversation to devolve. I don't want you to think I'm a Trump supporter either. I'm not. But I'll treat it fairly because it does impact the stock market if he actually becomes president. Excuse me. Sorry, I'm losing my voice already. We're going to probably talk about that later today at some point as well. So contracts for S&P 500 fell 0.3%, putting Wall Street on course for a lower open, while those for the NASDAQ lost 0.7%, weighed down by pre-market declines for AMD, Tesla, and Apple. AMD fell more than 2.5% after encountering a U.S. regulatory obstacle in its ambition to export an AI processor designed for China. Tesla's stock is expected to fall further after poor vehicle shipment data in China. Weaker China sales also hurt on with Apple, with data indicating a 24% decrease in iPhone deliveries in the first 6 weeks of 2024. Investors are particularly anxious ahead of the Fed Powell's congressional hearing on Wednesday and Thursday. You saw my mockery of that on the thumbnail this morning, I'm assuming. We know that they love to roll out, CNBC likes to roll out that package, right? Traders brace for Senate hearings on Wednesday and Thursday. It's like a regularly scheduled, we got to get this in this week. We got to get the package in for the traders brace, and then we got to get markets in turmoil, and we haven't had that in a while. Atlanta Fed President Raphael Bostic stated Monday that he expected the first rate cut scheduled for the third quarter to be followed by a pause. A spate of solid economic data has already caused markets to postpone the first rate cut until at least mid-year and limit the number of cuts this year now to 3. 3 rate cuts. I hope that they don't cut rates. We should talk about that this morning as well, because I was on the phone yesterday with Joe Donut, and we were making some just some rehashing of old conversations that we had about inflation and how brutal it actually is right now. So if we have some time, maybe we'll hit on that topic today, as well as we brace and prepare for the Senate hearings, as that stuff might get talked about in those hearings. In Europe, the Stoxx 600 index is down 0.2%, with automotive mining stocks suffering the most, as China's newest market-supported measures revealed Tuesday failed to soothe investors. UK Chancellor Hunt will cut national insurance by 2p in budget, The Times. Whew. Biden is set to launch a force to crack down on unfair pricing. That's CNBC. We have the U.S. Red Book year over year, 3.1% forecasted, previously 2.7%. The effective funds rate is 5.33% of March 4th versus 5.33% of March 1st. On the docket this morning and for the rest of this week, today is the 5th. We have factory orders at 10. ISM services is at 10, so you might be in the clear if you're a seller until 10 a.m. or close to 10 a.m. At 12 p.m., we've got Michael Barr speaking, and then at 3:30 p.m., we have him speaking again. So we're going to kick off that volatility this week right around 12 p.m. Then we get huge data dumps on Wednesday, Thursday, and Friday, along with the Senate hearings. Starting at 8:15 a.m., we've got ADP employment. Then at 10, we've got Jerome Powell testifying to Congress at 10, right? U.S. wholesale inventories at 10, jobs at 10 a.m. Somebody asked me yesterday what my thought on jobs and unemployment was, and I was kind of dismissive, not quite dismissive. I shouldn't have been. The question was, like, how does jobs impact maybe, I can't remember if it was policy or rate path stuff. And I wasn't as dismissive. I just said they're manipulating these numbers right now. So if we have a chance, we will take a look this morning at all of the macro you need chart. And I look at it every week. And, you know, we can look at previous examples of this in history. And they want that. If you had anything to take away here, right? If there was any takeaway from that question about jobs, the Fed wants, I'm gonna make it really, really crystal clear for you. The Fed wants no velocity, right? We talk about velocity all the time, right? They want no momentum in jobs, unemployment, in inflation. They want this steady, like, sideways up and down. It just kind of moves side to side. This is unemployment, jobs, inflation, even rates to some extent. The less like wiggle, or the less violence, I should say, up and down. Historically, I'm getting thunderstorms right now outside. I hope the fuck I don't lose internet or the power. A couple things here. I have to interrupt. I have thunderstorms rolling over my house right now, big ones. I can hear them. If I lose power, okay, I have a generator. If I don't lose the internet, I will reboot this live stream. It'll probably take me about 15 or 20 minutes if I do lose the show, because I gotta go out there and, like, flip the breakers and all that kind of stuff and make sure that I can turn it all back on. But I can. And number two would be this: if I lose the internet, I will get on my phone and trade with you inside the Discord. So just a warning there: if I do lose power at any point, I can hear big booms outside of my house right now. All right, so back to it. We got 3 minutes left to the start. So we've got that job openings at 10 a.m. on Wednesday, and we will take a look at that chart today to show you how we do not have velocity right now in any of those numbers, and I expect that to continue as long as they possibly can until we see something they can't hide or massage in the background. At 2 p.m. on Wednesday, we've got the Federal Reserve Beige Book. At 4:15, we have Neil Kashkari speaking for the Fed, right, trying to clean up any of the mess from the Senate. On Thursday, we have claims at 8:30 in the morning, then U.S. productivity revision. They love those revisions, don't they? And that goes right back to my previous comments. After that, we've got Powell again at 9:40 in the morning. We've got Cleveland Fed President Loretta Mester speaking, and then consumer credit at 3. We will have, during this Senate hearing, I have a special package. It shows like the charts, the interviews, the live read or regular comments, highlights for the news squawker. I'll run that with you today as well, and you tell me if you like how it looks, or if we need to make some changes maybe, so that you guys have an enjoyable experience. It'll be something that you'd probably want to watch on your big screen TV and not your cell phone, due to the fact that we're probably going to have 4 each if you have like a grid of 4, you're probably going to get a chart, the news squawker's interpretation of quoted comments, the Fed speaking at the Senate, and then a chart in the bottom right or left-hand side or whatever, and then my ugly face commenting as well along the way. After that, though, there's one more key point here for the weekly expected news, and that would be Friday. Oftentimes when we get these Fed speakers on a Wednesday, Thursday, there might be an initial reaction up, let's say, not even let's say, it has been volatility into the event, right? And then we spike up. The vol leaves the market, and we go higher immediately. Now, there has been a few events that we've had data coming out on a Friday, important data, and that squeeze is short-lived. We come back down, and then you get more doom and panic claims. And then at 8:30 in the morning on a Friday, we blast to the moon finally, right? We just keep ripping. Now, we're going to talk about that point that has happened consistently, as it looks like the vol landscape continues up and to the right into mid and late March due to a bunch of other volatile events that we have coming out into end of March. And we'll discuss those events and their impact and the heightened awareness that you might hear. You should be hearing doom at this point, regardless of stock market price, for the next few weeks. So look forward to that on Friday. Keep that in your thought process that you're going to hear a mantra sold to you in public that we're waiting for Friday news still. We don't care about Jerome. We've got Friday. We've got Williams speaking at 7 a.m. and then we've got non-farm payroll and the unemployment rate at 8:30. You can't do nothing until we get that data. So expect that conversation as well into the end of the week. Whew. That was long-winded. We probably at some point need to talk about my voice here too, and the amount of time we're spending on the screens, but we'll get into that in a few moments. All right, opening bell and positioning this morning. So we last night I left you with a market brief that said this is a pullback. Now this is not the top, and that you need to have some confirmation. You need to have some confirmation of this being a top. One of the ways to check to find out if this is the top is by a rejection and a rejection of the hourly trigger and a new low. Whew. I'm not on a coffee break yet here either. Hold on a second here. Jim's getting coffee. Why is that showing right now? Well, I got the wrong one showing right there. So, and what you're looking for here this morning is you can see price has broken down below the hourly trigger, right? You got a break here, a breakdown below. And what you want to see is, do we actually reject the hourly trigger or do we hug the hourly trigger? And you are watching for that this morning. So even on this open this morning here, you want to be watching. Oh, wait a minute here. You want to be watching if we begin to reject this hourly trigger. Now, this cross up here of the half an hour in the hourly trigger is bearish on this open right now. But and you've seen some rejection here, but not quite the retest. Not quite the retest at this point. So I'm going to be interested to see if we have more continuation to the downside, or if we come up and reject this and start continuing to the downside to confirm this move lower. And I'm going to show you some prior examples of this before we continue on with the day. How we have not rejected that cross in previous pullbacks. when we have tangled with the hourly trigger. Well, I don't know why I'm not showing this. Oh, there we go. Hold on, I'm having some issues here with hold on a second here. Whoop. Maybe the 30-minute will help us do it. One quick second to get this to spin up here. There we go. I don't know what's going on with the, I'm getting some weirdness this morning. I hope I'm not losing the stream here. I hope I'm not losing the internet already. Give it one more second to spin up here. Get that one there. Get rid of that one. Get rid of that one. Okay. Now what I want to show you here is right here. This example is a prime example right here. When you're watching stuff like this, where price is ducking underneath the hourly trigger, but not confirming, right? It's just rolling like this, right? Following the pullback. This is a pullback. This is not a roll, right? What I really want to see here is some kind of a roll down, right? And then we get the new low, and we're down just like that. Just like that, something like that. Without seeing anything like this, I'm hesitant to call this the top at this point. I want to call it the top. I want to see us get a seasonal low. I've been begging for one for like 2 months, but without seeing that as of now at this point, right now I want to see that. Right. This looks good here. I like this. I like the initial blast down underneath. I like the pullback in the overnight down here, and I like this one right here at, I believe this is at 4 a.m. I saw this come out this morning. I'm like, yeah, I like that going down right there. So let's see if we can get some continued downside moves. We'll have some projections for what to expect. Currently, right now, we're going to take a look at the SPX gamma profile so that you can take a peek and see what all of this means down. This is what I really want to buy, is like at least that right there, if possible. We're coming down to check that right now. I'm going to draw that box in right there. Right there. Hold on 1 second there. Right in there. We're going to switch over to the main screen really quick so we can get into that gamma profile. Oh, no, the hood lost itself last night. Hood down this morning at 1619. We've got Google this morning ripping face still. Well, look, take a peek at Google down here in the bottom left-hand side of your screen. Google's recovering right now. All the doom and gloom. They have a 30-minute target here at 133.04. I'm interested to see if they break above this half-hour trigger and can get above to 134.13. We'll talk about Marvel later. Marvel. We'll talk about them later as well. We're going to take that one off for right now, because that was a prior conversation. So Google trying to fight its way back. SMCI not doing too much. They had a new high yesterday, even amongst the big banks telling you stop buying SMCI. They're like begging you out there, stop buying SMCI, right? Tesla still lower this morning. I did notice that the big banks are like, we want a better price on it this morning. I heard them saying that. I was like, oh, here we go. The fight with sentiment change. Currently trading 183 on Tesla. I'm still long here on Tesla. I bought Tesla yesterday over in this area right here. And I think the first time I bought it was, I think, right there. And then I bought again down here for a trade to the upside. And we'll show you some projections for that trade this morning. Matter of fact, I'll try to get a chart up for you on the website so you can see the projections on what this trade should do, even though it's burning this morning. I've got AMD up this morning as well. AMD supposedly, right? AMD was something that was like doom and gloom yesterday in AMD. And we've got an event coming out right now, or this month we've got an event coming out for NVDA. And a buddy, or Vol, I spoke to Scott, Vol Wiz, last night at like 11 o'clock. And like 11 o'clock at night, and he's like, it's like, he explained, he goes, it's like college and the first good day of spring. He goes, where'd you go to college? And I said, I went to Riviera. And he goes, do you remember in springtime when college students, the first warm day, would slam their windows open and put the speakers in the window? I'm like, I do remember that. And he's like, it's going to be like that for people that believe in AI leading into that event. So I'm not quite sure yet that AMD is doom and gloom, as much doom and gloom as they say that it is. On Qs this morning, here's QQQs. Looks like some buyers are attempting to come in this morning right here. You can see on the half an hour candle. And on SPX specifically, let's look at this chart right now. No, wrong chart. Bottom right-hand side chart. Are we on that? All right, here we go. So if you remember yesterday, we had local resistance above, right at 5150. We came right, oh, wait a minute here. Pause all of this for me, please. So right yesterday, we came right into this local resistance, almost to a pin strike, right? Immediately sold off of that. And then where are we this morning? Take a look at where we are this morning. We're on local support right now. Do you see it? Just parked down here on local support. Now we'll take a look at this gamma picture and see if anyone is buying if anyone is buying a put protection here. We're gonna update this chart this morning, but just notice that right now, local support, local resistance, not seeing the doom and gloom that everyone is still talking about. Still stuck in this zone. Yesterday, I talked to you about how, I'm just going to bring this back a little bit. There we go. Yesterday, I talked about how the floor is glass, right? That we don't have a lot of development to the downside. To the downside in the put market. Nobody is protected here. 0 people are protected. You see the no fair in the market shows itself to these lower numbers. There's something I want you to keep yourself aware of here. If you are at home watching right now, there's 2 points I need to get across to you today. Very important points, okay? The first one is going to be that I want you at home to snap a line for yourself at 4,900, okay? 4,900. That's an important level for you as a bull. It's an important level. You can you snap yourself a line, you right-click on it, and you can add an alert on the horizontal line here and have it sent to you via text message, email, whatever you like, so that you can be aware that if we sell that line, this is the line in the sand down here at 4,900. And I'm going to show you why here in a couple seconds, but that's the line in the sand for you as a bull and as a bear. You can buy dips all the way down to this number down here. And if we fail that 4,900, if you see any kind of action like this right here, right? We blast down. You're buying the dip there, right? Yahoo, I'm buying the dip. It rolls back down on you and you get underneath. And we start selling that, right? We will correct hard, like hard correction. If you're looking for what I'm looking for in that seasonal low, it is below 4,900. This is your like demarcation. What this triggers is CTA selling. Unless we get below this 4,900, they will remain long. Remember that I said that to you this morning, okay? 4,900. Now we're going to update this gamma chart right now and check and see if anyone is buying that protection or not. Give me one quick second here. I'm gonna put up these new levels from the calculations this morning. Well, wait a minute, there, right there. Slam these in here and see if anyone's buying anything, any kind of put protection. And sure than shit, they got one more down here. Look at that, 5015. We got 31 million in put gamma that just showed up this morning down below here at 5015. So they are buying some protection. You see that some in the money puts, 31. We got 31 million down here. That came into the markets this morning for you. So if you want to take a picture of this, right, now is the time to do it. And I'm going to change some of this stuff for you here. In one quick second, we got 5106. A little bit less gamma on the market, right? About 358.9. Way down there, right? 358.9. And then we've got the gamma flip this morning at 50.90. 90. So marching ahead right now. Even the gamma flip came up. You see that right there? We got negative gamma was at 50.30. Then it went to 50.70, and now it's at 50.90. So it just keeps creeping higher and higher and higher. Local support right here. Actually, you could put it right down here if you wanted to, but that's really, truly local support right there. So they are buying the dip right now. You don't want to lose this local support. You can swing down. There can be moments where we reject up here, come swing back down, and then hug this line and make our way higher as the days go on. So there's your gamma picture this morning. Whew. I got to get through a lot. I got to get through a lot with you guys every morning. Let's go back to the 1 minute trigger here on SPY. Right in there. There we go. Right in there. And this is also local support. Let's write that in there. Local support right here. So you guys can all see it. And then the gamma flip is, where's the gamma flip? Excuse me. 1530, 1600, right around 1600 on Thursday. Right there, right there. Right there is your gamma flip. Thursday, right there. Come over here. We'll draw that in two for you this morning. I bet you're a bear. You're like, oh, I love when he draws this in. This is your gamma flip right here. Should we put that one in yellow maybe? Let's change the color of that to like yellow doom or something. Gamma flip. There we go. Right down there, that's your gamma flip. Let's see what happens this morning. See if they can pound down, baby. Get us underneath the gamma flip here. Buyers stepping in currently on the opening bell on S&P 500 and tech stocks. I think we're going up if you want to know the truth. Not buying the doom. I'm not buying it. I hope that we get the doom, but I'm not buying it at all. I need to see proof. We do this every single week. And there you go. I'm going to unpause this one so you can go from ticker to ticker this morning. What was the other one that I was looking at yesterday? GME I was taking a look at last night. They had a good day, and they rolled down this morning. We'll keep GME on here for you. GME rolling underneath its hourly trigger this morning. They've got a daily trigger at 1438. They're trading S1 right now. It looks like a little bit bearish here on GME, so we'll keep that one up for you as well. Yeah, I'm thinking I might take a trade with you this morning. I've got a bunch of shit on, too. I've got, like, RGF. I got Tesla. I got a SPY hedge. What else do I have out there? Let me open my thing and take a peek and see what I got this morning. But I haven't taken any SPY zero-day trades at all, but I'm interested in taking one today. See what we got here. I'm taking a peek right now at the options chain. Still a little expensive. They want $1.60 for 513s. Yeah, I don't know if I like that. Is that correct? Hold on, I got to reset this thing. Make sure I got that right here. The Tasty's new platform haven't been satisfied with it. I'm not trusting of it right now. I've had it go down on me while I've been in trades. Yeah, that wasn't even the right options chain. I think that was yesterday's options chain that was on my screen. This new platform from Tasty, man. Any of you guys else experienced anything with that? 509. So I'm going to look for, what do we got down here? S3 and Gamma Flip. I'm going to wait here, but I am interested in taking some calls today. I'm going to be looking at, we'll see. We'll hang out here for a minute. I'd really like to get like something like that. We'll see. We'll keep our eyes on it here. Maybe one more touchdown here at see like down here on SPX. It's just like one more touch, like an exact touch, and then boom up. So I don't even know if I should wait at this point. All right, so good morning. How's everybody doing? Welcome back to the show. So we've got some stuff to talk about this morning. We got a ton of stuff to get through, getting ready for Wednesday and Thursday. The first thing we have to discuss this morning is my voice. Yesterday, when I got off the show, I lost my voice. Yesterday was day one of the week. I lost it on Saturday. Normally I won't lose it if I'm speaking a lot until like Thursday. I give you one quick second here. All right, hold on. I normally won't lose my voice if I'm speaking a lot until Thursday. Yesterday, my voice was gone. Gone. And I woke up this morning, I had to eat like throat lozenges and stuff. I'm not sick or anything. This is from just like blah, 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 talking to myself all day long. So we probably at some point need to discuss more breaks. Like if I come on and do the open with you and then take an hour or two break to rest my voice, come back. If we have any major moves or market's starting to blast higher, starting to blast down, any of that kind of stuff, I pop back in the chair and start blabbing. Or I sit here with the camera on, but I just don't speak for like an hour or so to rest my vocal cords, because I will blow them out. I can actually do some damage to them, permanent damage, and we don't want that to happen. Yeah, communicate through interpretive dance. Yeah, it's not I can chat with you via chat all day long. I can do that too in Discord. It's the voice that's like when you're talking that many hours, it's brutal. So consider that as we move forward, that the stream will always be up every day, but there may be like time frames where I'm not speaking. It's like, what is it, 8 or 9 o'clock in the morning until 4 in the afternoon. It's a pretty long day for the voice. It's like 7 hours minimum. And then I've got, wife, kids, family, friends, all that kind of stuff. And then I've got people working for you guys in the background that I got to talk to them throughout the day and night as well. And it's just like, it's too much. What do you got there, Hoot? What did you say there? Semaphore? What is semaphore? I'm trying to read the chat right now. I got to make that chat bigger so I can read it. I'm getting old. So I'm to move that up a little bit so I can read it better. There we go. Yeah, nothing wrong with watching, even saying anything for 15, 30 minutes. Yeah, that's how I'm feeling about it. I'm feeling I'm scared by it that I could do some real damage. Flag the language. Start just beeping myself. But I could have Bork just start beeping my voice when it's time to take a break. He'd probably enjoy that. He's going to shut his ass up right now. Beep. I'd say something else, Cap. Beep. Well, it's like on breaks, I leave the CNBC up for specific people. It might not be you, but I do leave it up for specific. You can always mute the broadcast when that is playing in the background. Though I still think we should check Bloomberg, or I think maybe Bloomberg Radio at some point, and see if that's a better broadcast for you guys. Morning, how's everybody doing out there? Morning, Stacy, how are you? Good to see you. It is nails down. I'm not going to disagree with you. CNBC is nails down a chalkboard. Blows my mind. And sometimes it's good. Sometimes I watch CNBC. I got to admit this. From time that. Oh, wait sorry, my property manager is here. Give me one quick second, guys. One quick second. Sorry about that. I've got a meeting this morning with my property manager. I got some stuff that I need done. I don't even want to talk about it because it's making my eyes bleed. CNBC is better for CNBC retail or retail sentiment. CNBC is a weird thing. It's like I used to get so frustrated with it that I was like, I'll never watch it again. So I stopped watching it. My trading became better not watching CNBC any longer. When I turned it back on recently, I listened to it now, and it's a mixed bag. It's a mixed bag. Sometimes it's spot on, and other times I'm like, what are they fucking selling this morning? Like, what are they trying to push to you this morning? So it's a mixed bag for sure on CNBC. I'm going to read a morning brief to you this morning. This is coming to you from Gamma Labs this morning. Traders have rolled calls higher from. Yeah, dude, you guys got to understand this. I want you to listen to this, okay? This is very important. And we're going to look at some of this stuff this morning as well. Traders have rolled calls higher from 5,100 to 5,200 yesterday. So when I was down there buying the dip, I wasn't the only one. According to fresh open interest data, while the gamma flip level moved higher to 5090, signs of ongoing bullish repositioning are still there. So even with that doom this morning, right, I want you out there to realize that behind the scenes, the bulls are out there buying this. And they probably will until it doesn't work any longer. I got to be clear with you on that, that they don't give a fuck. I'll swear, the bulls don't care. They don't care what you're out there saying. They don't care what you're out there pushing. And oftentimes, you'll hear that narrative pushed by big banks. You'll see like Marco come out and tell you the top is in. And he gets run the fuck over. All of them do. They also push narratives to you publicly that is not the same narrative that you get. Like, so if you're a member of like JPM Private Bank, if you have money managed by those banks, the letters they send me are a lot different than the ones that they say publicly to you on CNBC, on FinTwit, in interviews, that kind of stuff. So there is bullish repositioning going on right now. Does that mean we go up? No. If we ever get real money selling in the market, we know that can change the landscape, right? We know that when banks make moves, real money buying or selling, it can overrun the gamma landscape, the options landscape, and they have to kind of do it at a time when buyers are no longer in the market, when dealers no longer need to delta hedge, when we've got contracts ending. We have that coming up in the end of quarter. So there are some, like, as I think Spot Gamma says, is it them or I don't know if it's Gem or Spot Gamma, window of weakness. Doesn't mean it's going to happen. They can get run right over. Like Marco can get run right the fuck over. Even though we might have a window of weakness, an opportunity, right? But you did see yesterday, even though we're rolling stuff higher, the narrative get pushed on CNBC. They were relentless yesterday, that narrative, to get you to believe that this is the top, right? They're like, hey, please start selling. We want a better place to buy. Even Jim Cramer this morning on CNBC. I'm going to read to you what he wrote this morning. I mean, even he's pushing. It's like they paid him a bonus this morning. What did he write this morning? He said, the article, I don't know if he'd said this last night, but Jim Cramer said something like, if, ready? Cramer says, get ready to buy if there's a market sell-off. I have my shopping list. So again, trying to push the narrative of changing sentiment. We're not seeing that, though, in the back end of this. People are like, get fucked, Kramer. We're buying the dip again. Total implied Taylor gamma is running at 375M, down 757M from yesterday on a retreat in S&P futures, which is mainly driven by weakening mega-cap growth stocks. So we saw the sell-offs yesterday in Google, the weakness in Google. We saw the sell-off in Apple. We saw it in Tesla. And think about this for a minute. So I was talking to Scott last night, and I'm like, the S&P 500 held up pretty good. It actually hit an all-time high. SPY did hit an all-time high yesterday in all that weakness. Normally, when you see the market go down, you'll see a larger moves in NASDAQ. The pullback yesterday in Qs was nowhere near what it should have been for the major sell-offs that took place yesterday. Whew. Oh, this is a good one. I think I posted this yesterday. S&P 500 CTAs are, listen to this closely, bears. Listen up closely. I'm going to say it to you right now. You ready? S&P 500 CTAs are still max long. Listen to me closely here. Still max long. But we think it makes sense to slowly start monitoring them again. Okay, so this is where you have awareness. This is where you have awareness, but it doesn't make it so, right? We don't have anything yet showing that this is nothing more than a pullback. So it makes sense to slowly start monitoring again as the market is ripe for some consolidation, not distribution. Consolidation. According to our model, we think systematic sellers will start to offload exposure at 4,900 and below. So that's some key important information for you this morning. So be aware of that if you are a seller, a bear, any of that kind of stuff. There's two things. I guess this leads us into our next part of the conversation. This is the fireside chat moment this morning, and we're going to talk about it briefly, okay? We're going to talk closely here. If you're a bear, a natural, I like to sell, I'm going to beg you to be very tactful in your selling. I want you to be like, I don't know, a sniper. You can walk this market down to 4,900. Do not get crazy unless we break that 4,900. If you want to get like balls to the walls, bared up, 4,900. And you will get what you're looking for in velocity to the downside, okay? So 4,900 is when you get, I don't know, you start lubing up, you shave your chest, you shave all the hair off your feet, start sending me sexier feet pics. See that right there going back up there to test that hourly trigger? That's when you get really crazy, okay? Now, here's the converse warning for bulls. If you are a bull, I implore you, I'm imploring you here. I was on the phone with Bork last night. Bork asked me a question via text last night. And I had something to tell Bork. Bork was asking me a question about our chat. Specifically, he was like, chat is great. I'm like, it's awesome. I was like, I love our chat. I said, the one thing about our chat, though, is retailers are normally bulls. They're forever optimistic. And so when things are going in a bull's favor, everything is fine. They might get a little bit of panic here and there, but they will buy a dip and it'll come back and they're happy again. And they come back and say, look, I just bought the dip. Everything is great. I'm making money. Everything is wonderful. You understand what I'm saying here? Now, the problem that comes in for bulls is you become trained for that to always happen. You take on more risk than you should. You don't pay cheap insurance. You don't manage your risk. Managing risk. And you become more aggressive and you become more, you know what? Fuck it. I'm a great trader. Right? So then you're like, you know what I'm going to do? I was trading $500. Then I was trading 1,000. Then I was trading 10,000. Then I was trading 100,000. I was doing $35,000 blocks, $50,000 blocks like it's nothing. And I'm printing money. And everything is great. You begin to take trades that are very high risk. You begin to lose those trades. You lose one, then you go, you know what? I'll just make it up on the back end. I'll take a bigger trade the next time. I got like 9 straight wins here. There's no way I'm going to get 2 or 3 or 4 in a row. You start to lose trades, right? And all along, rather than just managing your risk, you start to make poorer and poorer decisions as a trader. So I want you to consider that as we move into the rest of this week. I want you to consider that as we move into the end of March, into the quarterly OPEX, and the volatility that is actually coming down the road. So you can stay bulled up. You can still buy the dip as a bull. But the reason I'm saying this is because in that chat with Bork yesterday, bulls are happy right now. And if they begin to blow up large leads in the market, they start to become saltier and saltier. And they want to rely upon you to, they want to rely upon me too, to be like, well, that guy's great at calling tops. He's great at calling corrections. He makes private videos for me, posts them on Discord. That's what I do. I actually make videos that are private and post them in the Discord, right? For our community, at least. And that is how a lot of bulls manage their risk. I'm going to look towards a furu. I'm going to look towards a bottom and top collar to be my bellwether for this is the top or this is not the top. That is poor management of risk. And especially right now, especially as we haven't had vol, the run has been outstanding. If you are a bull, you pay to play is my point. It's okay for you to buy cheap protection. If you're taking, this is simplified, but if you buy a call for $1, I'm assuming that you're not expecting that call to go to $1.10. I'm assuming that you're expecting that call to go to $2 or $3 or $5, whatever it is. But more than likely in your brain, you're saying to yourself, if I buy a call for $1, I'm expecting to go to $2. I want 100% print on that call. So right now at this point, I'm begging you out there, mark this. Can you, someone out there on Twitter, Twitch, a moderator, or Bork, if you're out there, if you could please put a marker on this video right now, because I don't want to come back and say, I told you so, and you say, I don't remember that, Cap. I want to be able to cut this part of the video out and say, do you remember when we had this conversation on March 5th of March, the 5th of March, to be thinking about this conversation that we're having as a bull or as a retail bull, that you should be putting on tops from now into end of March, cheap hedging, just dirt cheap. Part of your plan, whatever it is you're doing. Overconfidence is a slow and insidious killer. Absolutely. And it's likely going to catch some people off guard sooner than later. Not like it's early in January or December or October. Right around now, there should be some high volatility coming into the markets. Not necessarily down, but volatility. And if you are not a great trader and you try to trade volatility, how many of you out there think you can trade volatility well? How many of you think that you're great at trading volatility? Because trading volatility is not easy. It's very difficult. You're looking for a dip, you're selling the rip. You're looking for a dip, you're selling the rip. You are like tactful. You're not so much just buying a dip and I'm going to watch that shit. You just buy a monthly call and I'm going to come back and it's going to be printing 5,000%. That time period is likely over for you for a period of time. You're likely going to get, instead of doing this right here, right? You're likely going to see more of this right here. You see what I'm saying? Stuff like that. And you have to be able to trade this right here and not so much that right there. Does that make sense to you? I'm trying to simplify this for you as a trader. I'm hoping that gives you a better idea. Because you'll come back and say, hey, Cap, look at that. We got a new high up here, right? But then like the next day we're down here, right? So your calls are like going to get wrecked in here if you're thinking you're going to get this trade up there. And look at that. We got a nice little pushback right here on that 5-minute trigger, trying to send you right back down. Look at that volatility right there. Almost already proving my point. They're trying to sell you right off the hourly trigger up here. It's pretty bearish right there, by the way. I'm so glad I'm not in calls right now. I'm so glad I'm not in calls right. Well, I'm in calls, but not those calls. Hold on 1 second here. I got time on my other calls. I got till the 18th, so I'm still feeling good about those. Put that right there for you, right down there. I think this is where I want to buy calls, right here if I can. AMD's still looking good this morning. Oh, is that? There it is right there. There's your local support. Wrong one. Not that one. All right. I think this might be the one. Look at that, huh? Almost near perfect, right? See that right there? Bam. They just came in right there and just bought it right there. Whew. Did any of you buy 0 dates down here or no? Did any of you guys take profit on that trade? They sold right on S2 up here, right on 510.63. I got a trade set up right now. I haven't taken it yet, but I'm looking to take it. I'm trying to squeeze down in here right now. Good morning out there. How y'all doing, by the way? Let me check the chat over here and see how everybody's doing. Jimmy, I tried to call you last night. I can't wait to actually speak to you on the phone. You bought some because there was, I was just excited yesterday, close, oohing lower. I bought because Rivian bucked. Rivian bucked the market trend for 20 minutes off the opens, but it's giving it all back. So glad I'm not in those calls right now. Let me see here. In the actual TradeTix website, they have dark pool levels for spies, a possibility to provide those in Discord. I don't know. I'll have to check and see. I think we can get the dark pool levels in Discord. No, I thought we could. I'm not a member of TradeTix. I don't know how to do that. If you're gonna find a way for me to do it, let me know, and I will. If there's a way to do that. Who is asking that question? Burn a pirate. If you know a way to do that, let me know, man, and I'll totally do it for you. Let me know, man. Woo. Trading volatility is a spectator sport. What is causing the Dixie to be so weak? Overconfidence is a slow and insidious killer. That was a first-time commenter. Nino saying, I've listened to this. I've done it myself. Do not do it. Career Low saying, I remember selectively when it confirms my bias, 100%. Why is the Automod holding a comment? Hold on a second. Front Row, I'm sorry that your comment was held for. Oh, that's funny. Hold on one second, brother. I'll put your comment back up there. How do I do that? Front Row, I don't know why your comment was held for moderation. He's front row Alpine this morning asking, I just bought a 2025 Tesla 480 call for $590. Thoughts? I'm comfortable with it. I think you're fine. You know what? Well, I don't know about fine. I think personally, I think Tesla sees that $80 mark, but I don't think that it's today. And even if they do see that $70 mark, it's not usually a straight line down to that mark. I think it's fine to buy anywhere here or even where we were at the open yesterday and down to 70 or 80 bucks. I think it's fine. I think especially that far out, I think Tesla's going up in the long term here. I think you're going to look back next year on Tesla and you're going to go, holy fuck, where are we now? You know, remember, we're watching a 1 minute chart here, front row. It reminds me of the Tesla right now reminds me of the market, the greater market in 2022, where people were, you know, don't buy these dips down here. I also remember people saying, I'm not buying this dip because no matter what, we will be back here. So I'll get my chance. We're now trading 509 today, right? We're not trading 34.50 today, are we? So they missed out on that entire run. So like back in 2022, front row, I would be looking at price and saying, what am I expecting here on Tesla? Probably a low of 80 bucks. And if you mix, this is not financial advice, but if you do a mix of buying from here or even yesterday's price down to that $80 for next year, payoff next year, I think it's fine. I'm not in the camp of Tesla going to zero. I'm sorry. I wish I could. I mean, they do have some really bad shit ahead of them. I think China is a real threat, and cheaper EVs is a real threat to Tesla to some extent. But I think Tesla is going to still be in that game. Tesla's like Apple to some extent. You know, it's like fine for me to buy my daughter a Volt or something, but it's not the Apple, is it? It's not the Apple. It's not the Tesla. It's a status thing with Tesla. And I think that brand that is still important to Tesla and to price as well. I think we're just getting started on Tesla. That's my honest opinion. I think that $20,000 for an original share in 20 years is easy. You know what? You know, you say that about can't be valued more than every other car company, but I'm reading the actual data, not the fake data. I posted it on FinTwit last week. Made a post about the southeastern Michigan. It was the University of Michigan and like southeastern Michigan business leaders, and they did a huge study on the car industry. So I live in the car industry. I don't know where everybody else out there lives. I live in the car industry, and there's a real fear here that real researched fear that you're going to see those car companies start to declare bankruptcy by like 2030, 2035. They're not even going to make the jump here. They're not even going to make the jump. The outlook for ICE vehicles is bad, And watching like Ford scale back on their production and development of EVs, I think is a poor decision. I'm against that decision. Um, the projections here are that EVs are going to take over, at least for your like light vehicle class of vehicles. I realize that's not going to be the case in extreme environments and stuff like that, but the outlook is not good. And these are from smart people. This isn't like you and I talking. This isn't some guy on FinTwit saying some shit. Tesla Q saying something, or I don't know, some guy driving a F-150 or an F-350 down in Texas that's dropping his stuff. This is like citable data. This isn't like I don't know, a Tesla bull or something like that. I have it posted. Let me see if I can find it right now for you. I'll get it for you and I'll post it right now for you. Hold on a second. Let me see if I can find this for you. You should read this, especially if you're throwing stuff like that out there. Because I somewhat agreed to that to some extent, or like a little bit of validity to your statements. But then I'm starting to read some of this stuff, and I'm like, I don't know. I don't really know if I believe that. So give me a quick second here. We'll take a look at it. And you read this, and you tell me what you think of this. Maybe you think this is bullshit. I don't know. And this is why I posted it, too, is because when I read it, I was like, oh, shit. And these are people that are smarter than you and I, right? These are real scientists and stuff like that. Let me see if I can find this here. I already got to go potty. Right here, I found it. I would read, especially if you're a believer in ICE vehicles, you should read this. So here, let me see if I can post this in Twitch. This is concerning to me, at least. I'm going to post a link to this. You tell me your thoughts on that. And I'm going to post it as well inside of YouTube so you can get your hands on this as well. Just read through this because I read this stuff. Hold on here. I read this stuff because, not because of Tesla. I don't read this stuff because of Tesla. I read this stuff because I own homes in southeastern Michigan, and I'm considering selling right now. So I read this stuff because I want to know, is southeastern Michigan going to be on the rise? How long is it going to be on the rise? There's a talk out there that climate change and affordability is going to drive growth in Michigan, where this leads into the conversation with Joe last night. So Joe Donut and I were talking about if you're a young engineer, you get out of school and you're making $90,000 a year, $100,000 a year. Can you afford? And there's a narrative to this too that like you can afford $500,000 mortgage. That's just not real. You're not going to have $100,000 in the bank for a down payment. You're going to be barely skating by, trying to afford a $500,000, $600,000 home. And there's a narrative in Michigan right now that cost of living is cheaper, housing is cheaper to buy, and that climate change is going to force people or to want to move to a nicer climate. With more water resources too, right? Now, I don't know if I believe that shit, but they're pushing that narrative. So I'm trying to find the data to support this stuff or not. So I ended up reading that article. You should read it too. This isn't like from you and like some guy on Wall Street Bets or some guy on FinTwit or some guy from even the New York Times, a reporter. This is data that scientists are accumulating and then publishing. So take a look at that. Tell me what you think of that post that I just gave to you guys. Florida is closed. Aren't you guys dealing with like a measles outbreak down there? What's going on in Florida right now? You guys have measles in Florida? I read that this morning. I was like, what the hell is with measles in Florida? Yeah, I'm looking for some calls today. I got something set up right now, so. Is the measles outbreak at is it taking place in like Anna Maria and stuff, Sarasota? Where is it taking place actually? What town is it in? Yeah, so we had an explosion last night. So that is so okay, hold on. So ooh, look at that blood down there. So much look at all this down here. They're just like all violent down here. So if this is Detroit, this is the city of Detroit, right? There's an outer ring. It's almost like Washington, D.C. There's another outer ring right here. And the explosion took place like right there. Now, the good thing is for us is that the prevailing winds are this way. Normally, not always, but oftentimes right there. And I live right there. Maybe right there. So we're pretty safe right here with that explosion that took place. But that was a big one. Did you guys see the video of that explosion? It was wild. I thought we eradicated measles. Is that not true? Let me check that out. Let me confirm or deny that. I just said they said measles are everywhere. Let me check that data right now and see if that's real. Let me check that right now and check that statement. Let's take a look at that statement that I just read there. What does that say right there? Following widespread implementation of this recommendation, improvements in first dose MMR vaccine coverage, reported measles cases declined even more. Measles was declared eliminated, absence of continuous disease transmission for greater than 12 months from the United States in the year 2000. So I'm going to say no. That's not true. That's not true. Yeah, do you guys know what the dark forest? Do you guys know what the dark forest is? With some of these diseases, have you guys ever heard of dark forest? Let me look this. I think it's called dark forest. Yeah, I know. I still don't trust Google. Hold on here for a second. I'm gonna look something else that's kind of cool up. Dark forest with disease. Hold on. Dark forest with disease. Is that what it's called? Is that what it's called? No, this is tick forest. Disease transmission, maybe. I think that's what it's called, but I could be wrong. Transmission. I could be totally wrong in this. My wife's like a doctor. I gotta ask her and see what she says. Kind of a doctor. She's like a quasi doctor. She thinks she's a doctor. Yeah, this one's bringing up. I don't know if it's called dark forest, but I could be wrong in that. So I got to find out what it's called. There's like thing called like it's not. I don't know if it's dark forest or something like that, but how disease weaves its way through people that are vaccinated. And you get hot spots everywhere. Yeah, there's measles outbreaks right now everywhere. Absolutely, I'm in agreement with that. I think there's a huge outbreak right now in Florida, right? Am I wrong in that? Let me see if I got that right or wrong. I swear I'm reading stuff and you guys are saying some things are not true and some things are true. You guys are like, I think it doesn't matter right now what they say. You're just anti whatever they say. If they tell you there's no measles cases, there are. If there are measles cases, there aren't. I don't know. Oh, so it's Southwest Florida, Weston Public Schools. Yeah, Jewish communities are good vectors for that stuff too, for any kind of disease. It's like I thought it was called dark forest, but disease will weave its way through communities that are unvaccinated. This Q's blasting down right now, all the way down to 436.95 here. We're below local support right now at 509.14, now trading down below at a low of 508.13. Gamma Flip sits down at 507.50-ish or so. Come on. Dude, Tasty Trade is sucking balls. I don't know, man, if this Tasty Trade shit's going to work for me. All right, so I'm set up here on 509C. $509C. Come on, baby. Come on, baby. Should we be looking at 508s maybe? It's like 507.60 or something like that. What I'm watching right now is this down here. Hold on here. I want to buy some of these 509s. Let me show you this. I want to buy this if possible right here. Let me draw this in so you can see it before we do it. I'm going to try to buy that right there. Captain wants to buy this. Right there. Leave that up for you right there so you can see it. Come on, baby. Come on down. Yeah, 509 should be fine. Those 508s are coming down too. I said 509, but I think I might switch right now to 508s. Oh, go down there, clear that trade. Now I'm looking at 508s. We got a rack here. We're just waiting to place the trade. Almost there. This is about the gamma flip, like right here. It's not exact. So I'm going to keep my eyes on SPX down here. We're almost there. Do you see it down here? Make this bigger here for you. We're almost on it. This could be a little bit higher here. It's probably like right there. I'm long 508C right here. Pray for me. Long 508C. They're bouncing all over the place. We're still selling too. That 1 minute trigger is still vertical here, so I'm a little sketched out on this trade. Come on, baby. Move my cursor off the screen there. I got someone fucking I got a guy stopping by my house right now too. I should not be doing this. Not liking this right now. I'm up 4 pennies right now, but I'm not liking this at all. Come on, baby. I'm trying to take my stops out here. I'm watching HYG here in a 1 minute chart. There's a bear plane above. Come on, HYG. Keep on squeezing there. Give me that big green bar, baby. Come on, HYG. No, man, they're trying to sell HYG here. I got to watch this like a hawk. Still long. Sweating bullets here. Oh. There we go, HYG. Come on back, HYG. Come on, HYG. There we go. Come on, HYG. There you go, HYG. There you go. There you go. HYG now trading 77.26 to the upside right now. NDX turning around a little bit here. Calls are up to 95 right now. 96 right now. 97. Come on, baby. Come on, baby. Turn around for daddy. HYG trying to make a move to the upside right now. Come on, baby. VIX about to close its next gap right here. VIX has a small gap to close up to 1450.49. Sellers want to see VIX get up to the previous high at 1610. Still sitting in these calls. I hope I don't get like a quick like rip faces down to the blast down to the depths of hell, and I get stopped out here. Still long calls. Price all over the place. A little bit of flattening in the 1 minute here. A little bit of sideways action. What I don't want to see is like a fast rip down and then you get the V-shaped recovery and I got trapped right here. I'm a little early. productive. HYG turning around in a big way, now trading 77.28. Would like to see HYG get a little bit more productive here. Trading 94 again. Bouncing around, though, it's like 84, 97, all that kind of stuff. So still not happy on either side of this trade. I don't want to get my stops taken out, but there's a possibility of it. What I'm afraid of is, some kind of bullshit like this, right? Like you just do that kind of nonsense. Takes out my stops. I'll keep an eye on it here, see what happens. 1 minute triggers starting to flatten, but still no confirmation. Would prefer to see some kind of like upside, come back down, consolidate, and start to head higher to get like, yeah, everything is great and fine. Right now, not so much. Still very risky taking this trade right now. Got minus 41 on hourly velocity here. Would prefer to see minus 50 on hourly velocity. So still not convinced here. I feel like I could get my fucking hand right on the goddamn sell trigger here. Gap's almost closed on VIX. 15-minute gap closures at 1450. Market's starting to squeeze higher now. Remember, local support is right about here. This is your gamma flip right here. Can you give me like 2 minutes? All right, sorry. So I'm sitting in a trade and I've got a person here that I need to meet with briefly. I'm in some calls right now. I don't know what I'm going to do here. I want to leave the calls on. I want to leave them on to like right about there. But I don't know that I can, because if it rolls back down to the downside over here, I'm going to get trapped. I'll come back in like 15 minutes and you'll be laughing at me. I'm still up. Well, right now, I was up there just for a minute. Now I'm down. I'm not down, but I'm only up a penny right now. Nope. Now I'm flat right now. So give me a second here. I'm gonna leave this trade on. That's what I'm gonna do. I'm gonna leave this trade on right here, and I'm gonna get fucked here. I'm gonna hope and pray. I'm gonna put a stop on it. Hold on a second. I got to stop on the trade. I got to sell stop. So I will be back with you guys in 15 minutes. Okay, I'll be right back with you. I'm going to leave it on. I'm leaving the trade on. I believe in this trade, so I'll be right back with you guys. Give me just 15 minutes. I'll be right back. I got to sell stop on, so if I get torched, You're going to know when I get right back. Give me 15 minutes.
Chinese government has been playing it down, saying that this isn't much when compared to the U.S., that the U.S. has 4 times the defense budget, the size that China has. But at the same time, it has been raising some eyebrows because the government has been in this effort to try to modernize the military. And also now we see this change in the language with the omission of the word peaceful when referring to Taiwan and its unification.
Eunice, they're also doing a debt issuance, I think, and I'm just curious about that, what the reaction is, what the money may be used for that they are doing. It's kind of off balance sheet almost, as it was at least described in the Wall Street Journal.
Yeah, that's right. So there are 2 sets of bonds. What was interesting is that they're all called long-term bonds or ultra-long bonds, they said. But some of them are going to be Treasury, and some are for local governments to help some of the finances for the authorities there. So the money so far has been earmarked, they said, for strategic importance, as well as for what they've described as kind of new productive forces, or a way to try to shift the emphasis of the economy towards more advanced IT and new growth drivers.
All right, Eunice, thank you. A lot there. Appreciate it. It's good to have you with us here from Beijing tonight. As we had to break, Elon Musk officially losing the title of the world's richest person. Find out why and who just took the top spot after a quick break.
Or download the app. Check out shares of Albemarle tanking more than 10% after the lithium miner announced it plans to raise some capital, planning to sell $1.75 billion in shares to help fund its spending in an environment of plunging lithium prices. Lithium prices down 80% over the past year.
Speaking of lithium, let's talk about Tesla. Its underperformance this year leading to a big shakeup in the rankings of the world's richest men. Jeff Bezos overtakes Elon Musk. He is now, at least according to this, the world's richest man. Let's go over to Robert Frank. Give us the details behind this devastating decline in wealth for Elon Musk.
Yeah, David, as you always say, bring out the tiniest violin in the world. Now, for the first time in 3 years, Jeff Bezos is once again the world's richest person. Bezos now has a net worth of $200 billion, just passing Elon Musk at $198 billion. Musk lost $18 billion just yesterday. That is one of the largest one-day losses ever in dollar terms. He's down $31 billion for the year. Meanwhile, Jeff Bezos is living his best life. He moved to Miami, spending time on his 400-foot yacht with his partner Lauren Sanchez, and he's saving a lot of taxes. He sold $8.5 billion of Amazon stock in February. By moving to Miami, he saved up to $600 million in taxes that he would have paid if he still lived in Seattle. The big question right now is, what does Jeff Bezos plan to buy with all this cash? He had a year to sell that stock under that sale plan. He sold it all in just a few weeks. So he is in a hurry to do something very big. Speculation around Bezos possibly interested in United Launch Alliance. That's the rocket launch company that could add to Blue Origin. Now, despite that massive share sale in February, Amazon shares still up 18% for the year. And guys, if Bezos puts that money, if he parks it in a money market or even a CD, he will earn the equivalent of $1 million a day in interest.
Wow.
He's probably not going to do that, though.
No. By the way, I mean, if he hadn't gotten divorced, there wouldn't have even been a contest, right? I mean, Mackenzie, who has been incredible when it comes to philanthropy, obviously got a lot of money from the divorce.
Yeah, she's giving it all away. I don't even know where she ranks, but she's at least $60 billion. So you're right, he would be at 260 plus. And then he's got all this cash. And the amazing thing is that Amazon stock has not really felt the effects of that huge share unload by Elon Musk. So it's amazing that Amazon shares remain so strong despite Bezos' sale.
What $8.5 billion in 9 days he sold? What can you do with that?
Yeah. Yeah, a lot.
Many things.
A lot.
I don't know. We're gonna have to stay close, as Robert will, of course. Thank you, Robert. Don't miss the president of TD Cowen in the next hour, arguing for fewer and later cuts from the Fed, perhaps even less than the market may be expecting. Live market coverage continues. Don't go anywhere.
MSNBC.
Good Tuesday morning. Welcome to Money Movers. I'm Sarah Eisen with Carl Quintanilla, live from Post 9 of the New York Stock Exchange. Today, targets surging on improving margins despite seeing annual sales fall for the first time in 7 years. Morgan Stanley lays out the bull case on the name this hour.
We'll get to Apple's China troubles. A new report shows falling iPhone sales as the stock sells off again.
And finally, short seller Spruce Point Capital revealing a new short in Zillow. Just out this morning, its founder and CIO, Ben Axler, joins us to defend the call.
Topping the tape for us this morning, the S&P approaching some year-end street targets. Right now, the market's off a little bit as we lost 5,100 earlier today. The question now is, can the market pull off a smooth rotation into sectors outside of the market of tech and AI? Let's get to our CNBC senior markets commentator, Mike Santoli. We just had a discussion, Mike, with Scott Cronin of Citi about broadening out later in the year.
Yeah, and there's been plenty of that. And as a matter of fact, the market's trying even today. I just think it's a lot to ask for it to happen in a really seamless way. You're likely going to hit some bumps in the process of doing that. Obviously, it's because of the unbalanced nature of the indexes. And what's interesting, too, is people have fixated on things like, the small cap Russell 2000. Well, today, the Russell 2000 is trying to hang in there when its two largest high momentum stocks are super micro and micro strategy, and they're on the downside because of all this high velocity speculative flow that's been running through this market. So I'm on alert for the market kind of getting a little more unsettled in this process. It doesn't have to. I mean, yesterday there was a ton of new highs in the S&P 500. This is not overall just a few stocks working and everything else suffering. But it is, I think, a moment where, because we've reached a lot of targets, because there's a lot of house money that's built up in some areas of this market, I think you just have to be wary that maybe you're going to have to, have a little bit of an attitude adjustment or a reset in the psychology that it just can't all work at once.
Mike, I brought up with Scott, and I think it's worth highlighting again, the correlation is getting funky between stocks and bonds. It was stocks and bonds buying together and selling together in the last few years. And now, and I don't want to make too much of it, but today's session is a good example. We've seen it all year long where stocks have not minded the higher yields. And today, bonds are rallying pretty hard and stocks are selling off.
Yeah, and I think, Sarah, once a couple of months ago when we basically got into a range when it came to treasuries, what stocks didn't like last year was this sense that they were completely untethered, yields were, and they were going higher, and it was because of supply, and it was because inflation wasn't coming down, and the Fed was going to have to stay tough. So I think that right now, since we've just been kind of meandering between, the high threes on the 10-year yield and 4.25, 4.3, there's been not a lot for the equity market to reprice along that front. So to me, as long as we're in that range, bonds are not kind of the prime mover. But yeah, I agree with you that, it's not about the equity market looking for pockets of economic weakness to get the Fed to go easier, to get market bond yields down. It's a little more, I think, complicated than that, simply because you've had stocks that were ripping in terms of the big growth stocks that really had nothing to do with the macro. It is mostly about, the AI investment theme that everybody wanted to grab onto. And then all these other story stocks that were big kind of growers within their sectors. It's the Costco's, Abercrombie and Fitch, Wingstop. Just look at those charts. They're the same chart. They're just going vertical because they're the winners in their respective groups.
Got it, Mike. Thank you, Mike Santoli. So when it comes to finding value, our next guest says today's market is giving her flashbacks to the 1990s, saying the current bull run still has legs amidst broadening S&P and a stronger consumer. Joining us here at Post 9 is Lafler Tengler Investments CEO and author of The Women's Guide to Successful Investing, Nancy Tengler. It's so good to see you.
Thank you. So good to be here.
So when you say 1990s, that was a good period for stocks where interest rates were sort of in this nice level where the economy was doing well, and we saw this big run up, until 99?
Yeah.
Why do you think we're there now?
There's so many similarities, Sarah. For example, we have a tight labor market and companies investing in technology, driving productivity. We've had 3 great productivity quarters. Interest rates were the 10-year was between 5% and 7%. Inflation hovered around average 3% for the decade. That was when share buybacks really began, and I think that's going to put a floor under this market. And I could go on with geopolitical shock and a brief recession and an inverted yield curve and a soft landing. So I think you take out your 1994 playbook and subsequent for what the Fed's going to do.
And therefore, you would be buying even still after the strong run-up we've had?
Yeah, well, if you look at the NASDAQ, for example, 22 and 23, it was actually negative those 2 years, even after the big run-up in 2023. So we're still, I mean, the valuations are nowhere near where they were in the 1990s. Remembering Cisco at 100 times peak earnings, Microsoft at 51 times peak earnings, and now trading around 30 plus, and not peak earnings right now. So I think you pick your spots, you wait for a correction, and then from there, you add to the high quality names you want to own.
I guess if you're looking for differences from that period, you would point to globalization was just really finding its legs. We had a peace dividend, right? That was a lot talked about, sort of the era of glasnost and perestroika. Can we look past some of those differences?
I think so. I think because of the productivity enhancements from generative AI and digitization, like our investing theme, Carl, is old economy companies that are embracing the digital and generative AI pivot. So think Walmart and others, McDonald's, many old economy, a lot of industrials, and then the suppliers of the picks and shovels. So we don't own growth at any price, but we do own a number of names. And by the way, I think the market's broadened. Like we've been trimming back Spotify, Uber, Chipotle, Costco in our portfolios. We also have been trimming American Express. These are all names that, you know, have performed better than the market. So I think we've got a stealth broadening going on.
And within tech, I mean, you said picks and shovels. So is that NVIDIA? Is that code word for NVIDIA?
I wish. I own the poor man's NVIDIA, which is Broadcom. But we've been trimming.
Had a good run, though.
No, it has. And we've been trimming all of those. The unsung hero, Adobe, ServiceNow, Microsoft, of course. And we've been trimming back on those names.
So those are a source of funds to buy what?
To buy some more industrials, to add to financials, to add a little to healthcare. And we've also added a growth, what we would consider a growth REIT, Equinix, and Prologis. So I don't want to just own them on the interest rate play. I want companies that can generate earnings growth.
I was going to say, to what degree is the Fed discussion a factor on your model right now?
It really isn't, because back to the analog of the 90s, you can coexist with strong stock performance. Remember, the NASDAQ was up over 800% during the decade. Dow and S&P were up over 400. So if you've got productivity improvements, and you know, we've had 3 quarters, notoriously volatile, but if we just kind of keep the trend line going up, I think you really can expect to see strong growth and strong stock performance as China exports deflation and disinflation.
I guess the big risk would be if the economy weakens more than expected. We've had a set of weak numbers today, weakening, definitely not recessionary or anything like it at this point, but that's got to be a risk factor.
It is for sure. That's why we haven't gone I know this sounds counterintuitive, but we haven't gone to the defensive names, because in a slowing economic environment, you want to own the reliable growers. And we were adding to technology and consumer discretionary in October of 2022. I got a lot of pushback. Worked out pretty nicely. We were trimming last summer, and then when they sold off, we bought more, and now we're trimming again. So you want to take advantage of these companies that can generate 25-30% earnings growth and top line growth as well.
How's the performance been so far this year for you?
I wish I remember that, but all of our strategies are handily beating the benchmark. And last year, our 12 best ideas portfolio was up over 40%. Our GARPI strategy was up 37%, and our traditional equity income was up 14%. So I'll take it.
Yeah, I know. That's why we like to hear what you're doing, Nancy. Thank you.
Thank you, Sarah. Thank you, Carl.
Let's turn to China this morning. The country does set its 2024 eco growth target around 5% during its 2 sessions meeting. That's alongside a number of announcements, including plans to increase defense spending, issue some ultra-long bonds for some key projects. Joining us this morning to talk about that is China Beige Book CEO Leland Miller. Leland, great to have you. The knock on it this morning is that the growth targets some find specious, and that the stimulus, I think it was Citi, called it medium-sized. What do you make of it?
Well, I think the growth target is specious. You know, it's incompatible with everything else they're saying, which is the property sector's too big. We needed to leverage it. We're worried about reckless credit expansion. We've moved away for years from bigger stimulus. There's less a priority on growth. So then in the middle of this, they just throw out a target of around 5%. You know, markets are trying to interpret this. You know, how do they get there? What are they going to do? It's a lot simpler than that. They're throwing out that number. It's not a priority. And, they have a couple of different ways to get there, one of which is lying about it. Another one's revising the previous year's numbers down, which they've been doing for several different years. But look, I think the number is less important than understanding the dynamic in China, which is that they are not pushing for higher levels of growth.
Is that explain in part why this briefing by the premier has been discontinued for now?
I think that has more to do with the fact that the premier role, like most other roles at the very top, are being minimized compared to the role of Xi. It seems like there's less and less information coming out. They're not even pretending anymore. So I think that the idea here is we're going to throw this number out. We're going to let you guys puzzle over it. But the reality is there's a completely different economic dynamic at play here. The play is we're embracing the idea of slower growth. We're going to try to make it healthier. We're going to refrain from bigger stimulus and let foreign markets digest that as they will.
Why are they refraining from bigger stimulus? The market's been girding all of last year into this year, eagerly awaiting the bazooka that just has not come. What's different? Because they've done it in the past.
Well, they've done it in the more distant past. The recent handful of years, they have not done that. And I think the reason markets are always anticipating bigger stimulus is because the people who are talking about China are talking their own book. They want more stimulus. They want growth to go up. They want their investments to go up. So they're constantly preaching about the need for stimulus. She has a very different idea of how to run the economy. They're worried about the reckless credit expansion. They're worried about the property sector. They want to just batten down the hatches and focus on national security priorities, build a domestic chip ecosystem, solidify the core of the economy, concentrate on advanced manufacturing. This is what she is focused on. Foreign investors, foreign analysts, they'll talk about stimulus all day long, and they're just leading us down the wrong path.
They do talk about providing support to property, trying to bring in more foreign dollars on manufacturing, focus on exports. In other words, the old traditional pillars. Are you hearing any new ideas, or is it enough to try to bolster the ones that have been in place for decades?
No, it's a lot of the old ideas, and I think you hit the nail on the head with manufacturing. Everyone keeps saying that China's topped out in terms of how much they can export. Well, that's not what they're saying in the EV sector, the solar sector, the battery sector. Right now, there is a move away from property into funneling credit towards advanced manufacturing and manufacturing of all types, actually. So they need to get that export engine up. That's going to cause a lot of problems globally, politically. That's why I think we're going to be entering into a trade war next year because the Chinese economic growth model is not sustainable considering the political sensitivities of the rest of the world.
Yeah, not to mention what happens here in the U.S. There's already talk of it. So, Leland, the question is the economy there getting better or worse as they try to achieve this 5%? You do the China Beige Book. You have a pretty good real-time indication of what's happening with business there. What's going on?
The irony of all this is that everyone went into last year extremely ebullient, and then they went to the middle of last year. The rally expectations faded. They thought China was collapsing. It's actually just been sort of, dog pedaling through the entire way. It's not very good. It's not falling apart. And the leadership is not terribly worried about that. They're not focused on making sure the growth hits 4% or 5% or any other particular number, the growth target notwithstanding. They're worried about just making sure there's enough of enough support in the economy to avoid a doom loop in confidence so that the bottom doesn't fall out. As long as the bottom doesn't fall out, they're happy to just continue on doing what they're doing and focusing on very different things than what foreign analysts are focusing on.
Yeah, to your point, I do remember a lot of 7% targets at the beginning of 23. Those got revised pretty quickly. Is the street making too much of these defense spending numbers and the drop of the word peaceful?
Maybe so. I mean, look, some of China's military budget is off balance sheet anyways. I mean, I think the clear trajectory is that they are doubling down on their military spending. They're trying to send a signal that they're serious about it, so they're broadcasting that fact. So I think they're right to be focusing on the idea that there is more of a focus on defense and on national security priorities. So I think the street is right to be focused on that. The number is less meaningful than the signaling on this, which is clearly, we're preparing for tensions down the road.
So when people come to you, Leland, and say, okay, China's market's gotten pretty cheap, big declines, lagged the world, they're committed to growth, they're trying to fix the problems, what do you tell them? Is it a good investment?
Well, there's investing in the stock market and there's investing in the economy. The stock market is a roulette wheel that is primarily not based on profit and losses. It's based on the idea of forecasting the direction of government policy. You know, we have that in our data. We know what the policy is. If they're going to stimulate, if doing monetary stimulus, fiscal stimulus, it shows up. They have not been doing that in a big way for the most part for years. So they're not focused on those things. It doesn't mean the bottom's falling apart, and it doesn't mean that foreign investors are suddenly going to wake up and all their investments are gone. But what it does mean is that all these forecasts about China pivoting, sudden meaningful pivots, these are always been fantasy, and they continue to be fantasy.
Leland, important week. Really appreciate your guidance, especially today. Good to see you again.
My pleasure.
Shares of Target surging this morning despite posting its first annual revenue decline since 2016. The details from Target's Investor Day coming up next.
Tesla now down more than 25% since the beginning of the year. We'll get the latest on this suspected arson near its Germany plant when we return.
All right, I'm back, baby.
Fiber.
Hold on 1 second here.
Shares of Tesla under pressure again today after the suspected arson attack near its Berlin plant knocked out power to the area. Tesla's Gigafactory halted production and was evacuated earlier. Another speed bump in what's been a rough year for the stock, losing more than a quarter of its value in 2024. And this morning, Wells warns again on tepid EV demand. RBC, though, takes a more bullish tone, optimistic on Tesla's Megapack batteries, raises its price target to $298. Shares this morning at $178. Anything below 175, Sarah, will take you back to about May of last year, but it's been tough year to date.
Yeah, that's why Elon lost his top spot as richest in the world. Let's turn now to Target. Target higher after delivering an earnings beat in Q4. We heard earlier from CEO Brian Cornell on
Hold on a second, I gotta do something here.
with his outlook for long-term growth. Have a listen to what he said.
We're not satisfied with where we are, and our theme today is all about a roadmap for growth, getting back to growing the top line, growing traffic, and making sure that we make Target a growth company again.
And then in the last hour,
where is this thing?
providing additional color at Target's Investor Day, announcing plans to open 300 stores over the next decade, a new private label brand, and a paid membership program that is set to launch next month. Joining us to help make sense of it all, Morgan Stanley analyst Simeon Gutman. It's good to have you, Simeon. Are these initiatives
Try that one more time. See if that
Target to
works.
growth? Because now they're talking about growth, but there isn't any growth, and they're not forecasting it for comps this year.
Yeah, we think they will. Actually, in the first quarter, we're going to have what looks to be the last negative quarter of comps, and then we see an inflection in the second quarter and beyond. I think the message that at the meeting I just left was about newness. When Brian joined or became CEO just under a decade ago, they did a revamp of the entire stores, both the merchandising and the physical stores. The level of newness that they're bringing in now seems commensurate with that, and that period preceded a period of market share gains.
So how does the stock look? Up 12%, which basically takes it to flat over the last 12-month period or so. It's had a nice comeback, but more lately after kind of a turbulent year last year.
Yeah, so look, Target is a cyclical retailer, and so you're going to have these ups and downs over the retail cycle. We upgraded it about 2 months ago at closer to its lows, and if it's going through an up cycle, it has a long way to go. The earnings, or the margin, which was a big feature of today, is going back from, call it 5 to north of 6% and potentially beyond. Top line recovers on top of that, and you have a multiple that's sitting in the mid-teens. So the right multiple may be somewhere between this mid-teens and even a market multiple, which means you have a long runway to go. And as Target gains share, as we see the fallout across other parts of retail, you have a nice compounding story over the next couple of years.
If things do go their way and they do steal some traffic and some share, from whom?
Well, it's going to come from a lot of places in retail. If you think about the department stores, that's probably one place. You know, Target has been taking share from that cohort for a long time. We cover a lot of these big box category killers. Broadly, Target's taking share from all the above. Craft, party, probably some in sporting goods, apparel. We think all of those categories together, plus food, I should say. And then the big standout over the last few years, beauty, along with its partnership with Ulta, has been driving significant share gains. All of that continues.
Be right
The
back.
Target store in the strip mall.
Old man break
that's the
time.
mall.
Right there.
That's where we think a lot of the traffic's going, and Target's been a good brand to take on all that share growth.
I always like to find them.
What are you guys talking about out there? I'm still long calls here. Let me know in the chat right now. Are you long calls or you long puts? I want to know.
Consumers
Tell me what you are right now in the chat. I see people talking about fucking 25-cent peas and shit. I want to know if you're long or short here, because I'm long.
wonder how that stacks
I
up
want to know if
with
I'm taking your money or taking my money.
competitors, like a Walmart and others, which have seen better results.
I want to call out the bullshitters,
If you look at the product categories,
because I want to take your money from you this morning.
through our coverage, from anywhere from food,
I want you to pay my money for me.
electronics, home furnishing, home improvement. The way Target's business mix is very consistent with that. They don't look like they're losing undue share. Walmart, as you mentioned, they have a
Put that over there.
business, so that creates a little more durability, a little more traffic flow to their stores. But if you benchmark where
Hold on, I got a bunch of stuff like running off the chart over here.
like
HYG recovering on the downside. Dixie's kind of eh.
in all of that look fine.
NDX recovering right now with a target to the upside of 17,991.
Sales snap.
The VIX still elevated. We're going to talk about the VIX today, too. I didn't get the chance to talk about that earlier this morning. I wanted to show you the vol surface. Remember earlier this morning I said to you,
So Target,
you're going to expect the vol to go away
that's a free program, right?
after the events with the Senate, right?
Fun guess if it five
That was the idea. That the volatility would go away after the Senate. And then I said, too, normally they might hold it till Friday for the rest of that data.
between 12 and 15 million members.
And
5 million.
we may not see that this time, right? I think if you're a member,
Was there no last
you should have read that last night when I wrote that post, that market update post for you.
that hit sales?
So let me mute this really quick. And I'm going to show you the vol surface Let me see what I can find here. Give me a quick second. Close this up. How do I toggle that closed? Toggle. Close that right there. Net gamma. Nope. Not net gamma. Delta flows. Nope. Not delta flows. At the money vol. At the money volatility. Yeah, let's look at this. Yeah, look at that, dude. That volatility just falls off after the 6th and 7th. But then it bounces again on the 11th, 12th, 13th, 15th, and 18th. So here, let me see if I can show you this stuff. That's at the money vol. What else do I got kicking around here? Net gamma. This is all open interest volume. No, let's not look at that. Let me see if I can show this to you guys here. What am I looking for here? Yeah, I'll show you. I want to show you two of these here. I'm going to show you that one and this one, right? SPX at the money vol. This is the current at the money vol. Let me show you both. Okay, so the first one I'm going to show you is here. Let me see, how do I show you guys this? So this is this. Let me mute that chat box for a minute too. Mute that right there. So this is these are taken as snapshots at 1 p.m. and 4 p.m. right? Updated at 8 a.m. I want to draw your attention to the idea of at the money volatility rising up into the 5th, 7th, and 8th, right? It comes back down into the 11th, but notice how it stays elevated thereafter into the 20th and 21st. I would say this is the portion that I'm talking about or was speaking with you about this morning, that even though we get the volatility and heightened volatility into Wednesday and Thursday, once we come out of that volatility into the weekend, it continues higher into the upside. Now I'm going to show you the next vol profile right here. This is March 6th, right? 7th, and then dropping that vol, and then it starts to head sideways here into the 12th, 13th, 14th, 15th, and 18th. It actually begins to drop off as of this morning. So a little bit of a contradiction there in volatility, but yet even so, in saying that, you're talking about a setup here for the Senate hearings tomorrow, and then a couple more some more volatility down the road as time goes on. So if you are out there, my point here would be is if you're expecting volatility to leave the market, not necessarily price action, but volatility to leave the market, there's some implied or implications here that we could have volatility extend into at least into the end of the month and end of the quarter, regardless of where price is. So just pay attention to that as the week plays on, as a bull and as a bear. And I can see it right now. I'm looking at VIX right now. It's rolling over right now, but it's still heightened volatility, right? You can see it currently. I'm looking at it right now on a 15-minute chart. Scott's probably out there right now saying, "Look at the VIX 9-day, please." But just be aware of that as time progresses here. Okay, so here we go. All right, I got to go back to that screen really quick. Cap screen, and unmute because I think this impacts the when I mute the chat boxes, it impacts the like the chat box everywhere else or something, like delays the chat box in places. All right, I'm going to get a quick coffee. Give me can you guys give me well, I don't know, I can wait. I'll stick around here. We'll watch this for a few minutes, but I want to see this fucker rip bad, like really, really bad. I kind of wish now I bought calls for Friday and not zero dates. I think I should have bought this for like Friday or Monday or something. So I'll keep thinking about it right now. I wonder if this is the weekly low right here. And just buy this fucker and hold on to it until Monday or Tuesday. Right now I'm on zero dates and I'm like, I don't know. And I'm like something a little bit farther out possibly. If we can break above this band of sellers here on Bookmap, this resistance above us here, I might switch to some Monday or Wednesday, or maybe the 11th. March 11th would be a nice day for it. So I might look at some March 11th calls if we can break above here. Even if we bounce around, trade sideways and that kind of stuff. Or maybe even a call spread for March 11th here. Yeah, baby. I want a print. Give me a fucking fat print. Make me some money to offset my March 18th Tesla calls. Give me some money, baby. I always like coming back to you guys and being like, I got a nice fat print. I was down there in the shit dumpsters buying stuff. SPY coming back up right now. Looks like we timed that bottom. What do they tell you out there? You can't time them? I don't know if we can or not, but maybe. We'll see what happens here. Watch them try to fucking roll us down again. Call's doing well here right now. Did you already get next week? That I was thinking like the 11th. Like a call spread on the 11th is supposed to be the lowest volatility. Now I know it's all bullshit. Like that shit doesn't mean anything. I don't care what they're pricing in. But the 11th looks like it's the low in vol. So, call spread on the 11th. You know, this, I don't know if this is the low either. This is the other thing, too. I was trying to relate this. I didn't post this, but I wanted to. I was like, do I look for a weekly low or do I look for like some fucking doom on this Senate hearing? Or do they leave me behind? Because they've been leaving us behind, right? We're not getting like that big fucking dip. They're like selling the vol on these events before we get to them. Like they're selling them literally right fucking before. We're not even getting the vol in the event. We're getting upside fucking vol. So are you getting left behind? If you're like a trader that's like, well, you know, I'll wait until the Senate hearing and hopefully they fuck the weekly low. I get like that giant fucking bloodbath, even if it's for 5 seconds, so I can grab a nice low down there. They haven't even been doing that. They've been just fucking like literally before the event, they fucking do the vol control and we just start fucking ripping and ripping and ripping and ripping and ripping from there. So this is maybe the first place to start thinking about it. That this weekly low could be it. Not guaranteed. Until it doesn't work. It's been working though, where they're selling it right before these events. Let me know your thoughts on that because, you know, I already know that something works like 10 times and then that one fucking time it doesn't, you get fucking bent over, right? Just fucking railed. You got one nice half-hour green candle here, buyers. So right now, for the last half hour, trying to buy this. You see a little bit of a fight going on in this candle. You see this candle went to the bulls. Likely going to turn around right now. Or cautiously optimistic, I should say. No guarantees. We'll have to see if these people are going to close out their shorts, close out their puts or not. If we get real true buyers here or not, if they get if they get stopped out. I'm going to stay long here until I get stopped out. So we'll see how the rest of today goes. Yeah, turnaround Tuesday. Yeah, dude, that's where I'm at. I'm like, give me a fucking dip buy and I'll let it run until it fails. So I'm on a dip buy right now. If we can get above this band right here, if we get above that band right there, I'm going to consider putting on a call spread for March 11th. We could probably set that up here on the stream as well. I still want to see the turn. I don't want to get blasted down to the depths of hell one more time today and be like, "Oh, surprise, motherfucker! You get one more leg down." Any of that kind of stuff. And this isn't even good enough for me. So it's weird. Like my put spread is like, it either needs time. It's like time, or I need like fucking 490 at the end of the trade too. I needed like 485 in the beginning of the trade to like max it. And now I'm waiting on like time to I need time. Basically, I need fucking time. So I'm hoping at the March 28th that shit's going to print. Turnaround Tuesday, baby. Always love Turnaround Tuesday. What do I got going on here? I got a lot of people contact me. I'm getting all kinds of phone. I got text messages. Oh, my phone is all fucked up. 1, 2, 3, 4, 5. 5 people. If I'm getting, my phone's been blowing up this morning and I can't get to everybody. So Trader Podcast saying that he just posted the updated overlay as of right now. Looks like what's showing up. Posted in the Discord. Thanks, Trader Podcast. Appreciate that, brother. Make sure you get inside the Discord this morning. Check that out. I'll take a look at it myself as well. Where is that at, Trader Podcast? In the general chat? Let me take a look, man. Doom. Did you guys see the thumbnail? Did you guys see the thumbnail this morning? I had like an asterisk with CNBC. Is the asterisk? I thought it was kind of funny. Doom. We're going to pin you here until the Senate hearings. Doom. Qs, I'm not on Qs right now. I'm on SPY. I don't trade the Qs too much. I used to trade the Qs, but not as much. So I can't comment on whether they're holding their value or not. This looks like, to me, where the dealers are horse trading right now, liquidity providers. Like, turn your puts in so we can issue you some calls. I could be wrong here, but that's what it looks like. Not guaranteed. If we get a new low, I'm out of this fucking trade. Hey, Jimmy, what's going on, man? Good to see you again, too. I made his comment. I'm going to try to catch back up with you, man. I have been very busy, brother. Like crazy busy. Responding to emails on Trade the Trigger, and then stuff inside the Discord, and then updates, all kinds of stuff like that. I'm working like 12-hour days, 14-hour days. Well, they're trying to take your stops out right now. Trying to take Spoo's stops out right now. AMD, let's check it on that. AMD looks good right now. SPX, still trying to push down right now. I don't know what they're trying to do here. Let's see what's below this. Oh, hold on. Let's go look at SPX and see why they're trying to break through this. 50-40. So if you were to break this right here, right? If we break this gamma flip, talking about what they want is, where are we at right now? 5084. Yeah, they want to blood this bad boy. 508, 507. Where are we at? 508 right now, right? Can't see that. So they want to target this right in here, somewhere in here. They want this last little bit right here. And this is my one concern. Like, I don't know that we go down there, but my one concern is you get the second leg down. And this was the actual dip buy down here. That's your V-shaped recovery. Now, I don't know if they get that or if they're just going to try to take your stops out or whatever, but they want that last little bit right there at 504 or 505. I think yesterday I had the 507 and 507 and 504 is the dip buy. Let me look back and see where that is. Oh yeah, I can see now why they want that. Let's take a look at that. Now I can see why they want that. So right here, right? Why do they want that low? Tell me why, right? These algorithms, they want to open the door, right? So they want to not necessarily go down there, but they want to open the door down there, right? So you get an algorithm will come down here, and you see this like previous low right here. Just right over there is a previous low. They wanted that tick. Just come down and to the tick. Ticket, right? Who talks about this? David AMS, right? This is where the pain trade is. So right down here, it's actually, let's look back here a little bit. So this is where the max pain is. Not max pain, but right in here, area of interest. We've already been there, right? So we'll leave this up down here, right about there. So see how they're pounding down here right now? Like we want to get down here, right? So you get an algorithm that's selling down here, and they're like, this is where the real pain is down here. And they'll get just that tick right there. And then it blasts right straight back up again. Cleans everybody out, washes out everybody long. You have to reset your calls, all that kind of stuff down here. So be aware of this down below. The target down there, for me at least, is 504.59. 504.59 down there. Because that would put a hurting on some of you, right? Probably put a hurting on me too if I held. So I'm going to watch this down here. As long as this holds, we're good to go. But if this starts to break down here, see this low right here? Hold on here. So we get that right there. Right there. That low right there. This would probably knock me out. Right. There's probably some guy in an office right now watching the show going, I'm going to bring it down there just to fuck with him. So right there, you see that right there? Just that little bad boy right there. They're going to try to take that out right there. There's Bob in the basement, the gremlin in the basement down there, and he's watching this one right here. So I'm going to pay attention to this one as well. Let's try to put that pain on. Good news, though. 1 minute is trading sideways. 5 minute beginning to trade sideways. I'm going to keep my eyes, monitor this trade. Still long here. Have not sold. Have not been stopped out. They're going to try to liquidation break this right now. Dude, I should just do this with a vertical line. It's kind of nonsense right there. Right there. And watch that. Watch them do that right now. See that? See that taking that out right there? That stop? Right there. Watch this really close down here. That's your pain trade right there. You can see that break on right here. Watch that break right there. And you see that down there? Right down here. And there's probably more right there. That's the actual target right down here. That's the actual target right down there. Watch that blood as we blood down right now. And they're probably taking all of your stops out right now. You're down here and you're like, shit, I'm stopped out. They just took them. And the target down below is right here. Watch that target right there. Right down here, 504.49. And I'll show it to you right here. Get the first one right here. The last one right down there. And just wash everybody out right there. And there's your let me move the gamma flip over. Right there's your gamma flip. As soon as we gave this up, they were like, bye-bye, see you later. Come on now, give me that fucking line right there. Right there. Dude, this chart shit with TradingView is not nice right now. It's right there. And there's your gamma flip right there. They took your stops, right? Guaranteed they took your stops. That one right there. A little bit more to the downside to go here. You can watch that first bar and then the next bar, the blue bar, right down there. That should be that 504 down there. It's a 505, slightly higher. It's 5050. Can I bring that over there? Yeah, right there. 505, right there. This one right here, 505 on Bookmap. That's the pain trade right there. Give me I've got somebody here at my home right now. I gotta take a quick break one more time. I gotta check in with this guy. He's asking me some questions.
Stocks tanking and erasing all of its gains in 2024 as the outlook fell short of lofty expectations on AI momentum.
They're talking about GitLab right now. That's specific to GitLab.
Despite the drop, Mizuho remains bullish, saying shares are oversold this morning and to, quote, ignore the noise. Price target there at 75. Actually, most of the analysts are coming out saying you have to just be patient here and ignoring some of the macro concerns that led to less conservative guidance.
Meantime, session lows here. Dow's down 320 now. Shares of Apple are slipping again after this report of weak iPhone sales in China. Our Steve Kovac's been digging through that for today's Tech Check. Hey, Steve.
Hey there, Carl. Yeah, so, the AI question around Apple remains, but the current core business at Apple very much under pressure, especially in China. This morning, we got this new report from the research firm Counterpoint, and the big headline number here, iPhone sales in China down 24% year on year for the first 6 weeks of 2024. In fact, the only winner of the major phone makers in China, Huawei, surging 64% for that same period, though off a smaller base, of course. And Honor, that's Huawei's spin-off brand, by the way, up 2%. Two things happening in China, guys. First, weak consumer and overall the weakening economy there. Plus, you have Huawei, still small market share in China, but taking share from Apple and other competitors. On top of that, Apple already warned iPhone sales globally will be off by about $5 billion in the current March quarter. And we already saw how ugly China was in the holiday quarter last year. Sales there were down 13%. That's all inclusive, not just iPhones, of course. And looking ahead, many analysts from Bank of America to Wedbush expecting the iPhone 16 upgrade cycle this fall to be quite strong. But the question is, for Apple investors and Apple at large, is that just because more people have old iPhones and they're just ready to upgrade now? Or will the AI announcement Apple has been teasing for the last few weeks spur more upgrades than normal? Apple shares, by the way, guys, down more than 11% year to date. Compare that to Microsoft and NVIDIA.
I think we're going for 5 straight days down here. In addition to that, Steve, in the meantime, a lot of discussion about the news about the fine yesterday.
Keep your eyes on this gamma flip here. You do not want to see this turn into resistance. What happens here is going to matter.
The good news we're getting on, say, new MacBooks.
Yeah.
You don't want to see price come down, get underneath, 1, 2, and then bam to the downside.
Billion euro fine. That's about close to $2 billion US. That was around Apple Music. But look, starting on Thursday, Carl, it's the Digital Markets Act that is going to be in focus. That is that really hefty law in the EU, putting tough restrictions on Apple, forcing Apple to allow other app stores, for example, on the iPhone for the first time. That's going to be exclusive to Europe, but it's also informing other regulatory headwinds coming, including that Department of Justice antitrust case that is expected to drop basically any day now, probably by the end of the month, guys.
All right, sentiment's pretty weak on Apple right now. Definitely stands out. Thank you, Steve Kovac, for tracking it. By the way, we're down now 300 points on the Dow, making the lows of the session. Spruce Point Capital announcing a new short this morning. The bear thesis for Zillow next.
And keeping an eye on NYCB, bouncing back a bit from recent lows, up more than 10% today. Stay with us.
Spruce Point Capital issuing a new short report this morning on Zillow. They see as much as 60% downside risk to the stock. It is moving the stock down 4% right now. The report writes that while management may preach a growth story, we believe the facts show that Zillow is a mature business facing material headwinds and should be valued accordingly. We should note we've reached out to Zillow. They declined to comment for now. Joining us in a CNBC exclusive is Spruce Point Capital founder and Chief Investment Officer Ben Axler. Ben, welcome. It's good to have you here.
Thank you for having me. Appreciate it.
I feel like Zillow has gone through some really rough patches in recent years in its life as a public company, but is on the upswing. Why now?
Well, Zillow has a long history. You might recall they merged with Trulia back in 2013. Fast forward 10 years, they projected over $5 billion of revenue. Guess what? They're at $2 billion. They pivoted into other businesses, the iBuying disaster, where they were helping flipping homes based upon their estimates. They wrote that
years ago.
They wrote that down. That destroyed $8 billion of value. And now they're pitching a new growth story, a super housing app. Ultimately, we think that's going to fail. And you don't need to take our word for it. They just retracted their 2025 goals from their latest investor presentation. In addition to that, they projected 45% EBITDA margins. They backed off a timeline for that. They're only at 22% EBITDA margins. So we think this is a company that is generally disappointed and will continue to disappoint in the future.
I mean, it also trades on sort of the outlook for the housing market, which is improving with the idea of lower interest rates. So that might be a tough one to fight on that front.
Correct, but there's a few nuances there. So their biggest customer is basically buy-side real estate brokers. And that the real estate brokerage industry is under some legal pressure. So the National Association of Realtors just lost a lawsuit that could decouple commissions between buying brokers and selling brokers. Ultimately, what that means is we think brokerage commissions are going to come down. The amount of capital to real estate brokers to pay for advertising on Zillow is going to be reduced, and that's ultimately going to pressure their revenue and earnings outlook.
Is it more about that, or just the way in which the housing market is locked right now? I mean, if we were to come a little more unfrozen, new listings ticked up, would that change anything?
Not necessarily. So another misperception that we think the market doesn't understand is they pivoted to a new model called a flex model. So traditionally, they've sold a lot of advertising leads. But now what they're doing is they're giving these leads away to brokers and getting paid if they convert on a closed sale. So that's a different proposition. And we think, based on our checks, there just aren't enough trained brokers for them to convert. They're not disclosing what percentage of these are converting. And most importantly, they're booking revenue when they distribute these leads, even though they may never convert these leads to revenue. So we think there's earnings quality issues there, and that's pretty concerning.
But there is an advertising story where they generate revenue, right?
That's a small part of the business, but ultimately page views on the site are going down, revenue per premier agent's going down.
Why?
Well, we think ultimately there's more competition, and one of the biggest stories now is CoStar, which is a company 3 times the size of Zillow, has put a lot of research into Homes.com, and you might have watched the Super Bowl. They're unleashing a $1 billion advertising campaign with multiple ads. So Zillow's core business is under pressure. The regulatory regime for their customers under pressure, and ultimately the stock trading at 6 times revenues, we think should compress down to a low growth 2 to 3 times multiple to reflect, low single digit revenue growth.
Would you ever consider the idea that M&A optionality is a risk to your short?
We don't see Zillow as a takeover, particularly given the litigation overhang, right? I mean, that's a material issue, and we've talked to people in the ecosystem that agree with us. And so I think an acquirer stepping in here would assume a lot of risk. Now, Zillow's also tried to acquire other adjacency businesses. They've had some fits and starts, but generally we think haven't been successful in M&A. And instead, they've been buying back a lot of their stock. Why they're doing that? Because they issue a lot of stock for dilution. In fact, 120% of their cash flow last year came from issuing stock. So they're spending over $1.5 billion just to offset dilution there. So we don't like that story as well.
What if they start talking about AI, making prices more accurate, giving customers new tools and information, giving brokers? I mean, you could see how this could be an AI software transformation story.
It's a great question, one that we thought about. And, again, look at their recent 2024 investor presentation. They recently updated it after 2 years. There really isn't any discussion about AI and how that's going to increase their margins or give them more leverage. I mean, ultimately, we think the margin story is going to continue to disappoint. They're 20% off their target, and these are targets they've had for a number of years.
Ben,
this is looking better for bulls, by the way.
We've been reporting on how shorts are out of the market. They're getting crushed. You had shorts on C3AI and I think Supermicro, which has been one of the best stocks in the entire market.
Yeah.
Hasn't it been tough?
It's incredibly tough, but I think one of the things you learn as a short seller, you have to manage risk. And when the market is telling you you're wrong or wants to move against you, even though the fundamentals are saying otherwise, you have to cut your losses and or manage that risk, restructure trades, et cetera. So no question it's tough, but we're still alive, we're still thriving, we're still putting out unique reports, and we expect to continue to do so.
Elf Beauty, another one where you stopped out of that one too. It's been straight line up.
Yeah, that was an interesting one. I mean, we found some issues related to one of their marketing partners that we thought could impact some of their sales, but ultimately it hasn't. And so, we kind of laid out the risk potential there. Hasn't played out. We're no longer short. We covered that at a loss, unfortunately, but that's part of short selling. You win some, you lose some, but on balance, you want to be more of a winner than a loser over time.
Well, it hasn't stopped you. We appreciate you coming on to talk about the new one here.
Thank you.
On Money Movers. Ben Axler from Spruce Point Capital.
Interesting session in which we got a brief uptick on prices paid, ISM services, lowest of the year, but then gave way to more selling as the Dow's now down almost 300 points, and we lost 5,100 earlier today.
With lower Treasury yields as well. We'll hear from Jay Powell on the Hill tomorrow.
It's going to be a big day tomorrow on DC. Let's get to the judge in the half back at HQ.
All right, Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The Apple sell-off, shares continuing their early year slide. Now the investment committee debating how far the stock might fall and what to do if you own it. Joining me for the hour, Jim Lebenthal, Josh Brown, Shannon Sakosha, Sarat Sethi. We'll go to the markets. By now you know it's a red day across the board, and decidedly so. Led by the NASDAQ, many of the big names. Every mega cap stock's lower. Other big names, Uber, down about 4%. Tesla, Salesforce, so it's pretty ugly across the board. The biggie, though, as we mentioned, Jim, is Apple. It is below 170 for the first time since October. It's been hanging around right at that line, but did dip below. As I look at it in real time here, we're right there at 170. What's going on here?
Well, first off, it's a heavy tape. I don't mean to say something trite, but this is what a heavy tape looks like.
Yeah, there's been a heavy stock and a good tape. That's the problem.
That is the problem. Now, the news today, obviously, we know is China sales worse than expected. However, I have to say anybody who's fundamental on the stock certainly wasn't looking at China as an area that was going to go gangbusters, both because of what the economy is doing and because of the geopolitical tensions there. At the end of the day, this is still Apple. They have a huge ecosystem in the iPhone. The services business is fabulous. I'm not particularly very bullish on the eyewear that they've come out with, but who knows? Maybe that will go well. At the end of the day, this is a mid-20s multiple, a stock that buys back a ton of shares. I'm comfortable with my ownership in it. Now, I want to say to you, Scott, because I've said to you many times, I've had about half the market weight in it, and that has felt good until a day like today where you say, geez, I wish I didn't own any of it. However, this stock will find its level. I don't know where it is. I suspect it's around 160, but honestly, folks, you got to just let it find its level. When it does, when it bottoms out, I will be adding to it.
Josh,
there's no fatal flaw here.
Josh, what do we do with this stock, and what's the right way to view it if you own it in a year thus far where so many of the other big names in the space of the mega cap group have just stolen the thunder here for obvious reasons? We talk nonstop about AI. Apple doesn't talk about AI nonstop. In fact, they barely talk about it at all because they don't have anything yet.
So I think the first decision you have to make is, are you an investor or a trader? Okay, great. You're a trader. You're not in this stock anymore. If you have like any sell discipline whatsoever, like an actual trader, not like pretend, then you're already out because the momentum here has gone negative. It's got now it's got a lower high in place. The highest high was in December. You got a lower high now in place for 2024, and momentum is toxically low. It's like 30. So if you're a short-term trader, you went into this with an exit in advance, you're already out. If you're an investor, it's a different conversation. You have not been rewarded historically for panicking out of Apple because you think they're about to miss a technology cycle. They don't miss. But the thing with Apple is they also don't originate. They're never first. They're the best. That's the difference. So if in the past you've panicked out of Apple because you thought they were falling behind on innovation, you have been severely punished. They eventually get it right. I didn't expect them to be leading the charge on AI. Nobody internally in that building feels the pressure to do so. They've never done so. They weren't the first entrant with MP3 players. They came out with the iPod and took the whole game over. They weren't the first smartphone. The iPhone came out, 7 years after everyone else's, and absolutely dominated the game. This happens again and again and again. So if you're an investor, take a step back, take a deep breath, look at a 25-year chart, and ask yourself, point where on the chart it made sense to be overly concerned with recent price performance. You can't find that place. It doesn't exist. So that's my attitude. I've never sold it. I laugh at the downgrades, and I really don't mind a little bit of volatility. The stock has been just incredible over the last couple of years, and it's okay if it has 6 months, a year, where it doesn't give you much. I can live with that.
So, Rod, the bulls are out today, obviously defending it, like Dan Ives, who acknowledges how sentiment is dismal because of these headwinds in China, and these China stories about Apple and losing market share and sales down and deliveries, et cetera, have been going on for many months now. So it's not necessarily a new story, but there's still optimism, at least from this corner, Dan Ives, about estimates remain hittable for the iPhone, services being rock solid, pent-up demand for the upgrade cycle. AI's coming. It's just a matter of when, not if, and we think it's probably going to be WWDC, and they obviously have this installed base. So you're in the stock, too. What are we thinking here with the stock, as we said, breaking 170, sitting right there as we speak?
You know, I'm with Josh and Jim on this one. You don't trade this one, you hold it, and it's going to have its consolidation that it's having now. They don't have any new news, and you're getting, traders selling away or trimming positions. But I think if you look at the system, the ecosystem is really why you hold the stock, and then the cash flow. So what they can do with the cash flow are a couple of things, which is either buy back shares or invest in other areas, which they're doing both of. So as a long-term investor, this is not one that you want to trade. And when it's coming off, as some of the other mega caps are, it's okay. And to Jim's point, at a certain point, when it comes back down, you can start kind of adding to it again to this. But it is a solid company, and it's very well diversified. And it will lead at some point again. It's just you've got all the other players a little bit ahead, but then it catches up really fast.
I mean, it's driving the whole market in a sense today, right? Dow component, Dow's down near 300. Big player in the NASDAQ, second largest stock on earth. NASDAQ's down sharply. S&P obviously getting hit as well. I've got Steve Kovac, our technology correspondent, sitting at the desk. And Shannon, I'll come to you in a second, but I want to bring Kovac in first because this is a moment. Yeah. It's a moment that you don't ordinarily see. And even when you do, you're pretty much convinced that things are going to turn. What's the turning point here?
Yes. Moment is the exact way to put it. And Apple has overcome moments like these before. You might remember 11, 12 years ago, all the naysayers for Apple saying, oh, my God, here comes Samsung with these big screen phones. They're going to, eat Apple's lunch. Apple is doomed, and so on and so forth. What does Apple do? They put out a big screen phone. Sales go through the roof. Biggest upgrade cycle ever. Here we are with this AI moment. What is Apple's position in AI? Where does it play into this story that we're hearing from its peers, from Microsoft, from Meta, from Google, and so forth? We don't know. All we know is they're teasing something there. What you have to hope is that Apple a couple years ago hired this executive named John Giannandrea. He came from Google, an AI genius over there. They poached him 5 or 6 years ago. He reports directly to Tim Cook. This is time for him to show his work now. Mm-hmm. He has been kind of behind the scenes at Apple for all these years. What does that look like? And again, you mentioned it. Where's the turning point? WWDC. The company has put enormous pressure on itself, Scott, to have some kind of just knock her socks off. Sure. With some kind of AI announcement that is going to, one, convince people to start buying iPhones again, not just because their iPhone's 4 years old and they need a new one, but because they want these AI features that Apple keeps teasing. That's going to be the turning point that you're talking about.
It's funny, I wrote, as you were speaking, I wrote down pressure inside Cupertino because I'm wondering what they're feeling. I mean, you know Tim Cook better than most, and he sort of has this public persona of being as calm, cool, and collected as any CEO we ever see or deal with. I wonder how the stock move is playing inside the beautiful headquarters out there. They're
feeling it. They have to be.
They have to be, right? You said when you sat down here, thank God they have a buyback.
Right. Otherwise, who knows what the stock would look like before that. But you want to talk about what Tim Cook is thinking. In my conversations with him, I talk to him once a quarter during earnings. The shift in tone from the way he talks about AI has changed over the last year. just last week during their annual shareholders meeting, talking about features that have been in existence forever. Fitness tracking on your Apple Watch, all of a sudden they're labeling that as AI. Yesterday, new MacBooks come out. They're calling it, I'm going to mess up the direct quote, but basically the best consumer AI PC you can buy. It's all marketing right now. They have nothing, to supplement that or deliver on it. But they are changing their story. They used to be allergic to saying the term artificial intelligence. They would say machine learning or some other kind of concepts around it. Now it's AI, 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 because they know that's what the market wants to hear. So that's the shift in tone.
Sorry, Shan, multi-fronted, if you will, issues. It's China, it's regulatory, it's AI. It's sort of Apple getting it from all fronts,
Well, I think that there's a give and take here, Scott. I mean, everyone, when the China side of the business was going gangbusters, was more than happy to look aside from these potential concerns on the horizon. There's also, Apple itself has really set us up to no longer look at handsets, but look at services. And last quarter, services was a little disappointing, but still growing robustly. Yeah. I think that the challenge here for those that are building a portfolio is that if you can only allocate a certain amount of your portfolio to mega cap tech, then to your earlier point, you're probably looking at some of the stocks that have momentum, some of the stocks that have been performing better, and those that are more on the enablement side of the AI trend rather than being on the consumption side of the AI trend. But I think Josh has a great point here. They're not looking to be the lead disruptor. Look at the divergence between Meta and Apple when Facebook became Meta and they really started focusing only on what was happening from a virtual perspective. That stock languished because they were putting the money in to find the proof of concept. Apple is more than willing to let its competitors find the proof of concept and then monetize it. And to the point about their installed base, we cannot look past that. That is not going to be disrupted. There is no other consumer electronic company, at least in my opinion, that's going to be able to create such a strong installed base. And so do we have to wait for it? Perhaps. But that doesn't mean that they can't continue to grow. You're trying to move the Titanic here, and I think that people are always looking at this company as being able to grow like it did when it was much smaller. But the reality is, with its cap, with its balance sheet, and with the free cash flow, they do have a lot of levers that they can pull at any given time.
We'll get back to this conversation in just a moment, but I do want to get down to Washington, D.C. Our Emily Wilkins has some breaking news regarding TikTok. I think you're going to find interesting when she tells us what we're learning here. Emily?
Hey, Scott. Well, yeah, TikTok is again coming under scrutiny by congressional lawmakers who are out with a new bill today to force TikTok to either say goodbye to ByteDance or be banned in the U.S. The bipartisan bill from the Select Committee on the Chinese Communist Party seeks to narrowly target TikTok while avoiding potential issues with free speech. This is where some past TikTok legislation has ran into some tricky issues. Now, the bill would make it illegal for any app controlled by China or other foreign adversary countries from being distributed in the U.S., either through app stores or through web hosting services, unless those apps divested from their parent companies. The legislation also empowers the president to designate apps owned by certain countries as a national security risk, provided the app meets certain guidelines spelled out in the bill. Now, it remains to be seen how much support the bill is going to gather in Congress or if the White House will back it. We are expecting to see a markup of this bill in the Energy and Commerce Committee on Thursday. If it does become law, though, ByteDance would have a little less than 6 months to find a way to divest TikTok. Scott?
Emily, I appreciate that. Emily Wilkins, as we find China all over the tech trade today, whether it's the story about Apple and sales there down 24% year on year. You've got this news now, TikTok. There's AMD, which is selling off today in relation to some regulatory issues regarding that. Back to you, Steve Kovac. How concerning do you think it is, not TikTok, of course, but the China issue for Apple, where you could always say, well, it's 20% of their overall revenues. Now I'm wondering if they themselves need to rethink what their business model is going to look like because of the loss of sales from China.
Yeah, and I don't know if it's necessarily the business model, but it's also, I mean, they can't do anything about the macroeconomic.
Let's just say the expectations is probably a better way of saying that.
Yeah, and they can't change the Chinese economy. They can't subtly make consumers feel confident again. But what they can do is look at Huawei, which is taking market share from them, which is suddenly back on the market. We used to hear so much. You want to talk about my conversations with Tim Cook? So many of those conversations, a year and change ago, was about switchers. Huawei was out of the game for a while, and they would see people switch over from Huawei, from Android to iPhone. he stopped talking about that. He's not talking about switchers anymore because, yes, Huawei is small. Yes, Apple has more market share there, but Huawei's there chipping away, and it's a homegrown brand. It's a brand that they can play up to those nationalistic impulses maybe from the consumers there. So the real question is, in China, how do they compete with Huawei and then go from there? Hopefully the economic conditions improve, but that is the big question. It's Huawei, Huawei, Huawei.
Josh, it is pretty interesting when you look at the way that the trades have worked between the Qs themselves, the bigger group of these larger tech stocks, and Apple. One obviously going up, the other one sort of consistently going down, and how that resolves itself. And that's what Jonathan Krinsky is talking about today over at BTIG, who says at some point that divergence between Apple and the Qs is likely to resolve, either by Apple bouncing or the Qs pulling back. Our thinking is the latter. And I'm curious as to what you think about that and what the overall implications on the market itself would be if you have a more meaningful pullback in the largest tech stocks in this market for a considerable amount of time.
So I told you that that's exactly what I think is in the process of playing out. I said it 2 weeks ago on Closing Bell. Maybe I was a little bit early with NVIDIA continuing to make new highs. But if you look at the Mag 7, first of all, they're calling it the Sensational 6 now. What does that tell you? There's already that diversion even amongst the leadership. Tesla's out. Now, I don't know where they go. The Furious 5, this is the problem, because it's not just Apple, Judge, it's Alphabet. And I own both of these stocks. Mm-hmm. So what I'm saying is not like this long-term bearishness, but come on. Between Alphabet, Apple, and Amazon, Alphabet is the cheapest. It's a 23 PE. Apple's 26, Amazon is 60. But Amazon looks better than the other two. Year to date, Apple is down 12%. It's the second worst stock in the top 20 largest market caps of the S&P 500. The only one worse, actually, is Tesla, which is down 28%. And now Alphabet is breaking down. Google is in an 8% drawdown below its 50-day. Apple's about 9% below its 50-day. And Alphabet just broke below its 200-day. It's about 1% below. You might not care about those levels, but my friend, those levels care about you. The buyers didn't show up. The support wasn't there. So now you have this situation where the largest market cap companies in that Mag 7 are breaking down one by one. I don't know who's next, but I can tell you that as the air goes out of that theme, I don't think the money goes and sits in gold. I think the money is looking for a home. So I am bullish S&P over NASDAQ names. I want more exposure to anything that's not tech or utilities. And I'm not hunting for my next tech stock right now, because that's exactly what I think is playing out here. That theme is tired. It needs a rest. There's nothing wrong with those companies. The stock prices have run out of gas.
So, Kovac, talk about pressure inside HQs. Out in Mountain View, there's immense pressure. Yeah. Sergey Brin, co-founder of Google, they, quote, definitely messed up with the Gemini image generation launch. That's why we're seemingly talking about this story in a negative way every day, and I mean the stock story, right, because it can't get out of its own way as long as these bungled AI moves continue to happen.
And look what happened a year ago when they tried to kind of rush out that Bard, which eventually became Gemini. It messed up. Boom. They keep putting stuff out and they're getting in their own way, and they keep putting stuff out that just doesn't work or doesn't work the way they had to advertise. Remember, I was on with you when they first showed Gemini, and it turned out they kind of faked the video to show it can do things that it's actually not capable of doing. Mm-hmm. If they can't put out a perfect product, why do they keep putting it out and tripping over themselves? So you have Google putting out stuff that either doesn't work or gets criticized heavily as too woke or whatever. And then you have Apple, who's literally doing nothing, just teasing something is on the horizon. So, of course, people are worried and they think they don't have the AI story kind of locked up at either of those companies.
You've explained a lot of this away, quite frankly, assuming that they'll figure it out and get it right. And I'm wondering what makes you so sure they will.
Yeah, I hope I'm not explaining it away. That's not how I feel about it. I feel that when I look at these companies as an investor, I see the resources there. I'll pick up my iPhone for a second and say Siri to me is pretty impressive. This is before Apple even gets to AI. And when you talk about Google, I mean, this is a good point you brought up with the failed launch or the mistake that they made back in February of last year. Stock got knocked down under 100. It then went on to return 58%, which was 2x the S&P 500. Now, maybe that's not NVIDIA, I'll grant you, but that was pretty darn good. The resources are there. We know they've had DeepMind for however long, 10 years. They made
it's even more of an indictment.
I hear you.
You're using that as a plus.
Well,
I would suggest it's even more of an indictment of what were they doing for 10 years.
Wait, let's discuss what happened last week. That was an unforced error. It was stupid. It was dumb, okay? But we are, if we're going to use the tennis match analogy, we're in the first set of AI at best. Maybe they just lost a game, but there is so much more of this game to be played. And I want those resources from DeepMind. I hear you, and I've heard others say that that's an indictment. I say to you that as an investor looking at the company at 20x roughly forward earnings, having those resources there, having all those years of experience, I hate the stupid mistake they made last week. I mean, it was just unnecessary. They've got it. I mean, the heat on them right now, the heat on the CEO is tremendous. They either fix it right now or then there will be a problem. But I expect them to fix it with the resources they have.
I want to ask Shannon the last question on this segment. First, let me thank you, though,
Thanks.
Steve Kovac. It's been good having you for the first 20 minutes or so of our program to put all this into perspective. The idea, Shannon, of what Josh said, that you don't really want to be in the NASDAQ right now, that's where the bigger hits are going to continue to come, whether parts of that trade has become bubblicious, the chips have basically been going up every day. Truist Keith Lerner says no bubble there, but certainly could use a breather. Do you think that trade, the broader tech trade, is in a little bit of trouble for at least a short period of time?
Well, I don't think we've reached euphoric levels. And I think that a lot of investors cite the valuation differential and the premium. And frankly, these stocks grow at a pace that's higher than the broader market. And they generate a significant amount of free cash flow, have strong balance sheets. So they probably deserve some sort of premium. What I would say, Scott, is the challenge with this trade is it came into this year really being priced for perfection. And that perfection was driven by two things: expectations of more than expected interest rate cuts, but also, the fact that they continued to post really strong results last year when the economic picture was, from an outlook perspective, maybe wasn't as strong. And so coming into this year, why wouldn't there be a rotation to other parts of the market, other industries that, could potentially do better in a stronger economic environment than expected, but also aren't trading at and haven't received that type of love from investors? And so we did come in thinking that there was some susceptibility, if you will, to certainly to multiple compression for these names. But when it comes right down to it, this divergence is within these companies is actually a strong sign for the market, in our opinion, that people are looking at fundamentals and making some good choices.
You know what's going to happen, too. The moment people try and write the tech trade off, the dip buyers are going to come right back in, and we're going to be talking about, well, that was fun. A few days of upset within that trade as money's been broadening out and going everywhere, frankly. It's not like tech hasn't done anything over the last month. It's done quite well. It's just been overshadowed by, financials, industrials, materials. And speaking of other trades, our chart of the day is Target, because it's popping on its earnings. Stephanie Link joins us now to discuss this trade. She's been adding to it. The sales did fall for the first time since 2016. So what's the read here? Why is the stock, Steph, up near 12%? When you read through this and you hear the outlook, it doesn't sound all that sunny.
Well, I think it's because there was huge profitability improvement. Last year in 2023, operating margins expanded 180 basis points year over year to 5.3%. And in this past quarter, it expanded again to 5.8%. And they're on their path to getting to 6%, which is what they've kind of historically have done. And this is all because of things we've talked about: lower markdowns, lower freight and digital fulfillment costs. But inventories fell another 12%, while revenues rose 1.7%. And this is the key. This is the fifth straight quarter where sales outgrew inventory. That is huge in terms of visibility and in terms of visibility to margins and the profitability story. So I think that's what people are jazzed up about. There's still a lot of wood to chop on same-store sales. It's going to be a slow recovery, but they're giving us a pathway to get to flat to 2% same-store sales for the full year, which suggests that they have confidence in the the traffic trends they're seeing, as well as easy comparisons. I think, Scott, their guide is super conservative at 860 to 960 for this year in terms of earnings. If they can do a 6% operating margin and a 1% same-store sales number with a $3 billion buyback, which they have not announced yet, and this new loyalty program, I think that number that they're talking about is so low, I think it can be $10.50 to $11 a share for 2024.
Part of me wants to ask you whether you take this pop and run, because the same-store sales story, which you're just talking about, is pretty dismal. You know, comps were down 4.4%, third consecutive quarter of same-store sales declines. You can get back to flat. Is that the outlook, what you just said? That doesn't make me feel all that fabulous about a stock that's maybe given you a gift today.
Well, they have this new loyalty program, which I think is going to be very exciting. They're focused on a whole bunch of new products. One of the reasons I started adding to the position a couple of weeks ago is because of them going on the offense in terms of new product introductions, increasing private label and that sort of thing. This stock is just back to April 2023 levels, and it's still down 37% from November of 2021. And you only have 20 buys on this stock and 19 holds and sells. And I do think you're going to start to see the analysts start to change their opinion, because there is that opportunity to grow sales. The story's not over yet. That's my point. And at Walmart trading at 26 times, and this is at 17 times, I think this is a much better value.
Appreciate you calling in. Steph, thank you.
Scott.
Stephanie Link, Hightower Chief Investment Strategist. You've been shopping yourself for some retail. You bought Casey's General Stores, C-A-S-Y. Why?
Yeah, well, it links very nicely with what Stephanie was just talking about. Yes, that was on purpose. The consumer is strong, folks. I mean, the labor market is strong, the consumer is employed, and they're consuming. And I've been looking in retail for some time. A couple of weeks ago, I bought Amazon. That's obviously a large cap name. I'm looking for something that's a little bit more unique, a little bit more, you know, on the small side where things are not as well known. Casey's General Store is basically a gas and convenience store chain in the Midwest. Think Iowa, think Illinois, think small towns where this sort of store is actually a social center, not being pejorative or making fun of anyone. That's just literally the truth. Think about a locale where people generally drive 30 miles at a pop and they need to go get gas. And when they go to a Casey's, they get some of the prepared foods there. There's some special story to this story, some special aspects, like they have their own distribution change. They're growing at a measured pace of about 5 to 10% a year. Very good balance sheet. It's a little bit on the pricey side, but I've wanted to be in the space, and I like this story.
All right, good stuff. We're going to take a quick break, and when we come back, Josh Brown has a new buy. Something he says is one of the best opportunities in the entire U.S. stock market. We're going to tell you what it is. We're back in 2 minutes.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Download the app.
All right, we have a portfolio move to tell you about. Josh Brown adding to Pfizer, something he says is one of the best opportunities in the entire market right now. Tell us more.
Yeah, I mean, this is very far away from what people are doing. This stock is on the 52-week low list. It's actually at a 11-year low. We haven't seen it trade at these prices since December of 2013. What's happening here, in my view, is very simple. There's just no great near-term catalyst for this stock, and as a result, people are coming out of it and looking for other things to do that might be more rewarding in the shorter term. And from my perspective, that sets this up perfectly because I'm looking to be an investor here. I'm not looking for any kind of short-term pop in the stock. I don't even know if I'm done buying it yet, but I added to my position by about 50% yesterday as it was making a new 52-week low. The people that watch this stock, this show, know that I'm usually looking for stocks that are closer to a 52-week high and are exhibiting strength. But I think that this is a very special situation. COVID just absolutely wrecked this company. They went all in on Paxlovid and on the vaccines. Then the disease became endemic. Nobody needs the pills. Nobody cares about the shots. And their revenue was just demolished. That's the thing, though. That's why the stock's in a 60% drawdown, paying almost 6.5% dividend yield. And they made an acquisition of Seagen, which I think is going to have huge potential in the coming years for oncology drugs. So this is a stock that's been around, a company that's been around for 175 years. They've had other issues like this. People were worried about Viagra coming off patent in 2017. They got through that. Before that, people were worried about Lipitor in 2011. They always find a way to rebuild revenue growth and reorient the company. I don't think this time will be any different. So I am a buyer under 30, and we'll see what happens in the coming years.
All right, it's getting a move as we're having this conversation. You have a comment here?
Yeah. Hey, Josh, I'm sure you're not surprised. Pfizer is something that certainly comes on my radar screen a lot. I'll bet on Surat's too. I see what you're seeing. I agree with the fundamental picture. I think you're going to make money. The thing that's holding me back is that dividend yield. That's a lot of their free cash flow that they're paying off in dividends. Does that leave them enough for R&D? Are you worried that maybe that high yield is signaling that it's too high?
I'm really glad you asked that question. In a series of recent presentations, not only have they committed to substantial R&D, but in addition, last year they froze the buyback. So this used to be a dividend plus buyback story, shrinking the float. They stopped doing that. The Seagen acquisition is massive, very expensive. They're going to have to deleverage the balance sheet to get back to buybacks. But I do believe they'll continue the dividend, and then I think they'll add this new leg to the story when it's appropriate, going back to buybacks. And if you look at the history of shareholder return here, they've done a really good job historically with that capital allocation decision. So I think they can do all of these things at once. I don't think the street is really giving them that much credit that they will. So maybe that's why there's an opportunity if I end up being right.
All right. Well, as we said, stock's on the move, and we'll continue to watch it from negative or flat line to a nice little move by about 1%. Another alert. Bill Baruch joins us now because he has a new buy. Good to see you. And that is Duke Energy. Tell us more.
It's not a sexy buy. It's not buying NVIDIA at 790. But here's the thing. You can't manage risk all at once. What we're doing here is planting a seed. I am a believer that yields come down, and I think that's a tailwind to utilities. Utilities have been beaten down. I'm looking to Duke, and the reason why I'm leaning in here is if you see their earnings, just over the last year alone, 3 out of the last 4 reports, they've missed EPS estimates. I think a lot of that has to do with CapEx, and I think controlling CapEx is something that you're going to see in the coming quarters, and that's going to help be a tailwind to their earnings. But revenues, they've beat really every quarter over the last year. So I see this as a positive. They got a stranglehold. 75% of their earnings come from Florida and North Carolina, strong economies. Again, this is a seed I'm planting. And as I raise cash, whether it's coming here next week or in the coming months, this is a name I'll start nibbling more and more into.
Okay, Shan, what do you think about this utility move, which, look, let's be honest, this trade's been terrible. It's the only sector that is down year to date. and by a fair amount. I mean, it's down 1.6%, but when everything's up, it stands out like a sore thumb. And over 12 months, the only other sector that has done poorly relative to this is energy, which is down a smidge. This is down 5.5%. What do you make of this move?
Yeah, as Josh said earlier, I mean, I think the two things he said he wouldn't be buying right now are tech and utilities. Listen, utilities has two challenges right now. It's really a rate story, and so with less interest rate cuts, not as much momentum, if you will, or really any momentum or positive sentiment to go into utilities from a yield perspective. It's also seen as historically a defensive trade, and I don't think people are feeling like they want to add a lot of protection in this market. Scott, what's important is that there's the trend of electrification. There's the trend of demographic shifts in terms of where people are moving to. There are upgrades that are needed. You also have part of the solar story. You also have some, what I would say, some access to sustainability, which is becoming increasingly important outside of the ESG paradigm. So I think utilities, should be, looked at more so from an investment perspective, but I understand some of the near-term headwinds. We start to see a different story on the rate side and start to get some real spending coming out of the IRA, the Inflation Reduction Act. I think you could see a pop in utilities later this year.
Surat, you agree or disagree?
I do. I actually own AES and Edison, and I think owning these going into it appeared now where, look, if and when rates do come down, these stocks will pop just with multiple expansion. But at the end of the day, they also have 5 to 7% earnings growth with a 3 to 4% dividend yield. So given where the multiples are now, I like owning a couple of utilities in the portfolio to add to the diversification.
All right, good stuff, Surat. Thank you. Bill Baruch, thanks a lot. We'll see you soon. Appreciate the update on the trade along with Josh's move in Pfizer. As I said, we'll track that. Let's get the headlines now with Bertha Coombs. Hey, Bertha.
Hi, Scott. Meta's social media platforms are down for many users today. Facebook and Threads were affected the most, not loading around 10 a.m. Eastern time, while Instagram wasn't refreshing for some, according to Down Detector, which tracks outages. A Meta spokesman confirmed users were having issues. The Ukrainian military said that it sank a Russian ship off the Crimean coast in an overnight drone attack. Intelligence published a video that reportedly shows the ship being hit and going up in flames. NBC News could not independently verify the video or confirm the extent of the damages. Russia has yet to confirm the attack. And scanners to spot fentanyl crossing the U.S.-Mexico border in vehicles have been sitting in a warehouse because there's no money to install them. That's according to the Customs Border Protection Commissioner to NBC News. The $300 million to install them was part of the National Security Supplemental Funding request, blocked by Republicans. The CBP said over 80 or 95% of fentanyl seized at the border is in personal vehicles. Scott, back over to you.
All right, Bertha, appreciate that very much. Thank you, Bertha Coombs. Coming up, our calls of the day. We have analyst activity today in Toast and Oracle and Accenture. And the good news is we have ownership in all of them on this desk today. We'll trade them next.
NBC.
All right, let's talk some toast because, Josh, there was the call that came out yesterday. We wanted to do it today. It was initiated. Evercore outperform, price target 32. What do you think? You own the stock.
I'm in the stock, and the first quarter they reported after I bought it, it immediately collapsed. So I look like an idiot. But now it's on a rampage. It's up 20 some odd % over the last month. The stock looks really good. And I think what Evercore is saying in their call yesterday is the main point, which is the main reason not to be bullish on this company is that they haven't reached profitability yet on purpose because they're growing really fast and trying to capture market share. But people need to start thinking about what this looks like on a multiple to EBITDA, which is going to grow, in my opinion, very quickly, even if it takes a while to get to profitability. And when you do that, Evercore gets to a multiple of 10 times projected 2025 enterprise value to gross profit, or 32 times enterprise value to EBITDA. In either case, gets you into the 30s for the stock. And as far as the competition, which is the other bear case, I know a very big thing that people don't understand. Talk to restaurant owners. Once they train their staff on one software program, especially in that industry where the typical restaurant owner worker is not very adept at technology, they don't switch platforms. It's highly sticky. In addition, owners know that somebody who's learned Toast elsewhere can plug right in and use Toast for payments, for everything within their restaurant. So it is rapidly becoming the industry standard with the biggest market share. And once that becomes fully understood, the 106,000 restaurant customers they have today will pale in comparison to what the overall size really could be. So that's the story here.
Okay, so Sarat, Oracle reiterated overweight Barclays. This company's going to report earnings on Monday. You own it.
I do, and it's had a great run. I mean, it's up 50% in the last 2 years. It's up about 8% year to date. The key here is, and after the last earnings call, is what is the CapEx spend and what is the backlog, and that's what hurt the stock before. So it kind of got a little bit of the AI story. It's still cheap valuation compared to the rest of its peers, and it's just going to be an execution story going forward.
What about Accenture, which was reiterated today, a buy at Mizuho? You own that too. That's 426 is the price target on that one.
Look, Accenture has been a home run. The stock is asset light, as we know. The consulting business has really taken off, especially now as more clients look to AI, looking to more cloud that they've really established themselves with. So they're in the sweet spot in terms of working with a lot of the customers that are using the products from the Microsofts of the world. So I still like the company, and I think the operating leverage here is what you got to look for.
All right, a break, and then we're trading more of the day's biggest movers. First, though, Mike Santoli is going to join us next with his midday word. We're back right after this. daily business. Our senior markets commentator Mike Santoli joining us now with his midday word. It's going to be a good test for the market if these mega cap stocks remain upset for a bit. And as I was thinking about this, of course, I look down and NVIDIA goes green. So I don't know what you want from me.
Yeah, well, it remains the most exceptional of the exceptionals out there. That being said, I mean, we've had on the NASDAQ 100 in the last 6 months or so in this uptrend, you've had like 5 touches of the 20-day average. We're not even down to it yet. So this is kind of, you know, if it's going to be a proper pullback, this would be just the start of it. And I do think it's still trying to stay as a fitful rotation. There are more stocks up than down today on the New York Stock Exchange, for example. But that said, as I was saying yesterday near the close, it just feels like the rhythms are a little bit off in the market because you did have just so much hot money flow into some of the neglected corners. Stuff ran really fast. You cleared out the short base. So we'll just see how the market kind of handles that. But if you just look at the new high list, it's all of these big, important consumer, industrial, and financial stocks that people own a lot of. So right now, nothing to panic about, but nothing says it stops here either.
No, but you know, a breather is okay too. What are you going to go up, you know, by leaps and bounds every single day? I know the market was kind of doing that, but you know, you're still right at 5,100 thereabouts for the S&P. The Russell's, you know, over 2,060. So we're still holding on to some pretty good levels.
We are for now, yeah. And I do think if a 3% drop from the highs is so nothing in the long term, and it wouldn't even be visible on a chart. But if it's underway, you're going to feel like it's about something else.
Yeah,
you're going to feel like it's about what Powell says tomorrow or Thursday, or something that gives you reason to be concerned that the story's over and the choreography has gotten fouled up. We'll see, though. Not yet.
I'm glad you hit that, because maybe that's what this is in some sense. It's the market just trying to get ahead of what Powell may say over the next couple of days on the Hill.
Yeah.
We shall see, and I'll see you on Closing Bell. Mike Santoli up next. 2 big winners, 2 big losers after this quick break. We are back. Let's trade two big winners and two big losers today. We have DaVita, which has entered into an agreement to expand into 4 South American countries, stock up a bunch. Shan, the conversation's been all about GLP-1. Now, I'm not suggesting that this move today for this particular name means anything about anything else, but are we going to get some love into other areas of healthcare beyond that specific trade that has seen the likes of Lilly and some others just shoot to the moon?
Listen, this is a transformative franchise in terms of GLP-1, and there's going to be a lot of positive repercussions for health. But I think, this expansion into South America is indicative of growing demographic trends that are benefiting everything else, including GLP-1, but across the board. It's aging demographic globally, as well as an expansion of healthcare to, more developing markets. And so I think that this is something where this is fueling some of this rotation into healthcare, Scott, so far this year, away from just the GLP-1 franchises.
All right, AT&T gets an upgrade today. That stock is a winner. We can show you that. Losers, Albemarle, ALB, a blast from the past on this program for sure. And SoFi as well is down as they have a convertible senior notes offering in 2029. We are back with final trades next. All right, I'll see you at closing bell, 3 o'clock Eastern. I hope you'll join me then. We take you through this last hour of trade. It's going to be an interesting one, you know that. Anastasia Amoroso, Bryn Talkington, Kevin Simpson, and Jonathan Krinsky. Remember, top of the show, we talked about that note he had, this resolution he thinks has to happen between the Qs and Apple. Does Apple bounce? Do the Qs correct? He thinks it might be the latter. He'll explain further to you at 3 o'clock. Shan, final trade.
Japanese equities, still attractive valuation.
Okay. Surat Sethi.
SLB Schlumberger, I think, is very attractive at these levels.
All right, thank you for that. Josh Brown?
Berkshire in a 6% drawdown from all-time highs. This is where I would look at it.
All right, Jim?
Citigroup looks like it's breaking out of a 6-week consolidation phase.
Well, I told you a minute ago with Santoli. So NVIDIA is going green. Otherwise, we got all of the mega caps are in the red. Obviously, we're watching Apple closely. Some of these other names, Meta and Alphabet, down as well. I'll see you at 3 o'clock on the closing bell. The exchange is next.
Tech ODT.
Welcome to The Exchange. I'm Dominic Chu, and here's what's ahead on the show. NVIDIA turned him into a growth investor for a little while. That strategy did pay off handsomely, but now our market guest is back to his value roots and brings the names he likes coming up from here. Plus, a challenging housing market has been a good thing for this company. We'll tell you why and talk to the CEO about where he sees demand going in housing from here. And we have the action, the story, and the trade on three more names getting ready to report their results. Our trader likes two of them into the print. That's ahead in the earnings exchange. But we'll start with the markets, and we are decidedly red on the day so far, taking a bit of a breather. It's been a nice run. You can see the Dow Industrial is down about 0.75%, 38,691. The S&P 500 down nearly 1%, 5,086 the last trade there. And the tech-heavier NASDAQ composite, 15,959, really the lagger today, down about 1.5%. A bright spot in the market so far has been a not-so-bright spot for the longer and kind of medium term for some of these names. We're talking regional lenders, but a bounce back in today's trade for names like Comerica, up about 5%, Citizens Financial, up nearly 5% as well, two of the better performing regional banks. And then, of course, a check on embattled New York regional-based lender NYCB. You can see there it's up as well on the day. Now, there is one honorable and maybe even more so honorable mention is a mega cap bank, and that's JP Morgan Chase, the biggest lender in America by market value. It's up about 1%. It did hit a record intraday high in trading today. So if I was at a telestrator, I would draw a big star right next to that name. And by the way, speaking of record highs, Bitcoin just did it, surging past the 69,000 mark and setting a new record intraday high earlier today. But as you can see, we touched it and have pulled back significantly, now currently standing at about 65,366 for the largest cryptocurrency in the marketplace. Meanwhile, NVIDIA has been one of the big drivers of the recent market rally, and that's worked for our next guest. He bought that stock back in the summer of 2022 when it was under $200 a share. Sold it right before earnings at $705. He did, of course, leave some gains on the table post-earnings, but it's been a heck of a run. He's now returning to his value investor roots, betting on that trade from here. For more, let's bring in Vahan Janjigian, the Chief Investment Officer, Greenwich Wealth Management. It's good to have you back, and let's take maybe a bit of a victory lap for you on this. I kind of want to know why you got into NVIDIA in the first place, and then if you take a look at the reasons why you got out of it, and then why you wouldn't get back into it right now.
Yeah, hi, Dom. Thanks for having me back. First of all, I look for stocks that I think are undervalued, and sometimes growth stocks can be undervalued. And in the summer of 2022, NVIDIA was falling quite a bit, but I still felt that it was the leader in the chip area, and I thought the stock was very undervalued. So that's when I started buying it. And I kept buying it all the way down to, approximately, I think, 125 or so is where I got it at the lowest. But as you said, the stock has absolutely surged. And I started getting a little bit nervous, for a couple of reasons. One is that I think it's now overvalued. And I've heard the arguments that, it's not overvalued, but I think it's overvalued, especially if you look at it on a price to sales basis. But also, I have fairly large positions in ETFs such as QQQ, SPY, and SMH. And NVIDIA is 26% of the SMH. So I decided I didn't need to own the stock individually anymore, and that's the main reason I sold it.
All right, so it's a risk management and allocation decision, no doubt there. No one's going to blame you for that. But you got house money, so to speak, right now, Vahan. Where exactly would we roll that into? I mean, cash is still yielding 4 to 5% in savings accounts, even more so in certain parts of the Treasury market, money market funds. Do you stay there, or do you deploy elsewhere where there is value with the market still hovering near record highs?
Actually, I'm doing a little bit of both. I mean, I do have a large position in Treasury bills, and I'm still rolling those over, primarily very short-term Treasury bills at well over 5%. And I'm happy to take that money with money that I'm not sure how to invest right now. But I'm also, as you said, looking more in the value area, especially dividend-paying stocks. And my latest big buy was Pfizer. Just a couple of days ago, I put some money into Pfizer because I think that it is a very undervalued stock. I think the stock has really sold off primarily because we've overcome our fears about COVID. But this is a company that has, 112 drugs currently in the pipeline, and I'm betting that at least a few of those are going to hit pretty big. And it's yielding, well over 6%, and I'm happy to take that yield.
Does that mean that you're getting into it despite the fact that the momentum clearly is with some of these GLP-1s within healthcare and pharma specifically? We're talking about, of course, names like Novo Nordisk, Eli Lilly, amongst others. Is there a reason why you think that that's the better play right now versus, say, an Eli Lilly or a Novo?
Yeah, so I tend to be a long-term buy and hold investor. I mean, NVIDIA was a bit of an exception because I held that stock only for a couple of years. But when I buy a stock, I tend to buy for the long term. I'm looking for good dividends over time. And I think that because of those GLP-1 drugs, many of these other pharmaceutical companies have really run up a lot. And I'd be pretty hesitant to jump into them right now at their current prices. So I would rather go with something like a Pfizer that's been so oversold that everybody hates that they're pretty much just giving the stock away, and I'm happy to take it at current prices.
Okay, so if that's the case, we got the stocks kind of that you're milling about and putting money into. There's also a concern right now that the markets could fall even further from here. Nobody has a crystal ball, but it wouldn't be out of the realm of reason for a record run like this to have at least a bit of a pullback. If that were to hypothetically happen, how deep could it be, and what's the biggest concern you have for markets at these levels right now?
Well, when I look at the economy, I would say the economy is doing quite well. I'm not too concerned about a recession anytime in the immediate future. But the thing that worries me the most is the massive amount of government debt. We're at $34 trillion, and the interest on the debt, the average interest cost on the debt is now up to 3% from about 1.6% just 2 years ago. And it's going to go higher because the Fed keeps interest rates at very high levels. And I'm very concerned that this debt, which is already, the interest on the debt is already 14% of the budget and as big as what we're spending on defense, is going to prevent us from doing a lot of other things. So I am afraid that Congress, for example, may start talking about increasing taxes again. That would be a negative for the stock market. I've seen a big run primarily in the large cap sectors, so I'm kind of avoiding those right now. I am buying ETFs, but the ETFs I'm buying are primarily in the mid cap and small cap areas, except for a few individual stocks like Pfizer, which of course is a larger cap stock. But, other than that, I'm focusing more on areas that have not participated in the rally in the last year or so.
They would participate, Vahan, hypothetically, academically perhaps, if the Fed were to cut interest rates, those small and mid-cap type names. Do you feel as though that's something the Fed needs to seriously consider? Do we need to cut rates multiple times throughout the course of the next several months?
Oh, absolutely. I mean, in my opinion, the Fed should have started at the last meeting. They should have cut 25 basis points, perhaps every other meeting, and get that Fed funds rate down because, inflation is down. If you look at the last PCE, it's only 2.4% year over year. I don't think the Fed needs to wait anymore, and I really wonder why they're waiting. And remember, monetary policy works with a lag. So if they wait too long, they do risk a recession. I would like to see the shorter end of that yield curve come way down. But the Fed cutting rates, I don't think that's going to really affect the longer end very much. I think long-term interest rates may stay at current levels or maybe even go up a little bit.
All right. The call from Vahan Janjigian. Thank you very much, sir. We'll see you again soon.
Thanks, Tom.
All right. Well, Tesla shares are under pressure again this afternoon after a suspected arson attack halts production at its Gigafactory facility near Berlin. That stock is down nearly 4% today, but our next guest has a hold on that stock and still remains bearish on the auto sector overall. Joining me now is Wells Fargo senior analyst Colin Langan. Colin, thank you very much for joining us this afternoon here. Let's talk about Tesla first because it is a driver of the market, if you will. I mean, this is a stock that really does have a lot of influence on certain parts of the market dynamic right now. Do you feel as though this downward momentum that we've seen near to medium term is justified, and how much further could it go?
Yeah, I mean, I think in the near term, I mean, we're talking about another year at least until the Model 2 comes. So the stock really sort of lacks a very clear catalyst over that period. So, there is still going to be some downward pressure in the stock. But, there's risk rewards to the name, and so we're still equal weight on it.
Okay, if that's the case for Tesla, is it still best in breed with regard to the EV makers out there? The entire industry, every single one of them, from China to the U.S., everywhere else, has seen some of those publicly traded stocks take a huge hit. Is there a value proposition that eventually comes to fruition because Tesla is, in fact, the best that we have out here on the American side of things, market cap-wise right now, as opposed to some of the EV names perhaps out in China these days?
Tesla does have a current leadership position here. I think in the near term, we're still talking about slowing deliveries. I think from the broader industry, EVs are a challenge, and that was sort of the focus of our report this morning, particularly from a regulatory challenge. And we'll see what happens with, the White House proposed, apparently changes coming to the regulations that are already out there, which are quite aggressive and probably mean more headwinds for the traditional automakers as they're forced to meet them.
What exactly is the trade right now then within autos? Is there a place that there is a relative value proposition that stands out in your mind across the sphere from ICE to EV?
We're bullish on a handful of suppliers, BorgWarner being our top pick. I think it's a company that's both diversified on the internal combustion engine and in e-powertrain. And I think they're positioned regardless of how smooth that transition occurs. I think for the traditional automakers, there's just numerous challenges. You have the regulatory push toward EVs, and we're seeing the consumer demand is slowing, and yet they need to sell more of these. Particularly by 2026, the EPA rules really require them to sell around 9%. The Detroit's at 3 or around 3 today. You have pricing pressure that's going to put pressure on those stocks. That's been a big driver of their profitability. And all the indicators are that pricing is in decline, probably driven by the high amount of capacity in the industry, which I don't think people are focusing enough on.
The capacity side of things could be an overhang. There's also been this story that's developed over the last several months about some of the automakers that are having a relative and comparative advantage because of their tilt towards hybrid model vehicles, not straight up electric vehicles, and at the same time, not total internal combustion engine. How important do you think that transition period will be for some of these manufacturers, given that hybrid dynamic that's developing and the demand picture that seems to be picking up in some markets for hybrid vehicles as opposed to pure EV?
Well, I think having the capability of hybrid in your war chest is going to pay off for companies. So I think Ford, Toyota, Stellantis all have developed sort of that hybrid option. But the reality is, if you look at the rules and probably even what's going to be the revised rules for 2032, you're still going to need a massive amount of EVs regardless. So, we'll see what happens, particularly with the presidential election in November and how that changes. And maybe that'll change the outlook for the needed EVs to hit those rules. But, it's nice to have that hybrid. And I think ultimately the rules are going to eventually come down because the targets for BEV are so aggressive. So I think companies that have that hybrid option, it's probably going to be worth having if kept that investment up.
And Colin, before we let you go, you brought up the election and possible rules ahead. How much do you look at, or how do you even try to forecast what future regulations look like, and how much does that play into your models and valuation?
Well, the headwinds around electric vehicles is really one of the key drivers of our negative thesis. I think we've seen this, if you go back years, there were points where the automakers were sort of forced to sell small cars in order to hit fuel economy standards. And so it's something we're focused on. I think if you look at the media reports from people we talked to in D.C., it sounds like the proposed Biden changes seem to be fairly benign, that you're probably going to keep that 67%, maybe allow some PHEV in that mix to get to the targets. But we're still talking targets that are quite aggressive and are going to be very challenging economically for the industry to hit.
All right. Colin Langan, thank you very much for the conversation on EVs and ICE. Thank you very much, sir.
Thank you.
All right, well, coming up on the show, here's one more look at our mystery chart of the day. It's a company that's finding a way to benefit from the tight housing market as people stay in their homes for longer. We will reveal that name coming up next and speak with the CEO. Plus, 3 more names on deck with results. We are talking hangers, hackers, and headwinds ahead in earnings exchange. We are back after this.
This is The Exchange on CNBC.
$74 counterparties take $444.474 billion at the Federal Reserve Repo operation.
Download the app.
Welcome back to The Exchange. Shares of deck manufacturer, and that's putting it kind of simply, Trex, that's the company. It's up 15% so far this year, despite concerns about an economic slowdown. Higher mortgage rates, one of the reasons why, as it's led more people, not shockingly, to stay in their homes and maybe even renovate them. Renovations and home repair make up more than 90% of Trex's business, while only about 5% is actually from new home construction. For more now, I'm actually joined by Trex CEO Brian Fairbanks. You may recall that we spoke, audience, to Brian right after their quarterly earnings report the last time around. So thank you very much for being here in person with us.
Great to be back. Thank you.
All right. So let's talk about the state of the housing market. I mean, everybody who watches CNBC kind of knows what the current state of play is. But from somebody who has a big hand in how all of this is playing out, do you feel as though the housing market is in a place where interest rates are still a huge headwind for the market overall?
Yeah, what we talk less about in the housing market is what are those people doing that already have the lower mortgages, already in their home, and it is difficult to make that next move up to the extra 500 or 1,000 square feet because of the cost of the home as well as the mortgage rates. So a low-cost way to be able to add space onto your home is by putting a deck on. It might be replacing an old wood deck that's falling apart, generally get 10 to 12 years out of a wood deck, or putting on an all-new deck. And what you're seeing is a trend towards really bringing that indoors out. You're seeing couches, cookware, all kinds of TVs. So you're really bringing that feeling of your living room onto your deck.
Have you felt as though, you know, it's tough to comp against many parts of the pandemic lifestyle that have happened? We know people spent a lot of time on patio furniture, decking projects, that sort of thing during the pandemic. If you could put for us in your expert terms and your expert vision, the demand picture now versus what it was like in, say, 2021, 22. What do you feel as though the trajectory still is? Is there still real momentum, or is it starting to normalize, so to speak?
We saw explosive growth through the pandemic period. And a lot of companies saw that and then gave a lot of that back again. So we saw the growth and we've held on to the growth. In 2023, we saw a mid-single-digit increase in our sell-through to the end customer. For 2024, we've guided to 11 to 13% growth. So as the industry, the higher interest in outdoor living, it is normalized back to kind of the areas where we've expected it to be. Long term, we expect to deliver on average about 12% growth. That's conversion against wood, so those low-performing wood decks, converting them to composite, more railing on our decks, and then some adjacent products that we can help grow the company with as well and make it easier for the consumer to have that outdoor living.
Part of the education process for me, because I told you the last time I did a decking project, was going through all the options and the cost benefit for all the different price points. And the price points can vary from lumber all the way through full PVC and everything else. What is the education process like on your end? Because you're not necessarily selling to the end customer, but you've got distribution out there. What exactly do you tell customers about why the product that you have out there compares better than certain other products on the wood side of things, on the PVC side of things, and everything kind of in between?
The most important thing we can do is make it easy for that consumer. A lot of information out there. We've got product lines anywhere from 2x the price of wood all the way up to our super premium products, our signature decking line. So anything between $2 a foot all the way up to $9 to $10 a linear foot. We want it to be easy so that that consumer can quickly see the products, be able to find a contractor if that's what they choose, or if they're doing it on their own, where can they get that material? We use our website for a lot of that education. People will start with that, searching on composite decking or just decking, find the Trex website, and then we'll help walk them through that process. Even to the extent that we have our own inside sales department, when we see this information coming in, we can pick up the phone and say, is there something we can do to help you through this process?
Based upon that phone and web traffic, based upon how you're seeing customer demand pick up or wane or wherever it is, where do you think in America, where are you seeing the most activity and interest in your products, and where are things maybe not quite as robust as other parts of the U.S.?
It's really balanced across North America where the population centers are. We're in the winter, of course, so we're going to get more snow in the Northeast, Midwest. So you don't build quite as many decks in those areas. So more of that business moves into the southern regions and out west. But the season really kicks off when you get out into the month of April and then runs through the end of October or so. And all of the indicators that we're seeing thus far, contractors have good backlogs. They're ready. They're back to where they were pre-pandemic. So generally speaking, about 5 to 7 weeks. That's a normal backlog. And we're hearing strong indicators from those in our channel, on the pro channel, the home setters, as well as the contractors.
Now, before we let you go, from either your business perspective and or the macro market overall, where do you think interest rates could be, should be, to kind of really kick things off for your business and the housing market in general?
I think we'll continue to perform well, even if rates stay where they are. I would expect over the next year or so, we'll start to see some easing within those rates. That'll open up the affordability. And the nice part of that is as you have people moving up from their first home to the second home to the third home, that does drive repair and remodeling. Today, we're seeing our tailwind coming from people staying in their homes. But the great part is once they start moving, we go back to that old model again, where they'll be looking to repair the deck that's already on the house or add additional space.
All right. Brian Fairbanks with Trex, thank you very much, sir. We appreciate it.
Thanks.
All right, we'll see you soon. All right, still ahead on the show, it's been a rough year for Tesla shareholders like Elon Musk, but up next, we'll explain why Musk's pain is becoming Jeff Bezos' gain. The exchange is back after this. Welcome back to the exchange. Let's get another check on Tesla, with shares now down roughly 11% over the last 2 days. The stock's already on pace for its worst week in over a month. And those losses are having a big impact on Elon Musk's bottom line and net worth. Robert Frank is here to explain. Robert.
Dom, good to see you. Well, for the first time in 3 years, Jeff Bezos is once again the world's richest person. Bezos now has a net worth of $200 billion, just passing Elon Musk's fortune of $198 billion. Musk lost $18 billion yesterday. That's just one of the largest wealth losses ever in one day in dollar terms. He's down $31 billion for the year. Meanwhile, Jeff Bezos, well, he is living his best life, moving to Miami, spending time on his 400-foot yacht with his partner Lauren Sanchez, and saving a lot of taxes. He sold $8.5 billion of Amazon stock just in February. Now, by moving to Miami, he saved up to $600 million in taxes that he would have paid if he still lived in Seattle. The big question is what Bezos plans to buy with all that cash. He had a year to sell that stock under that sale plan, and he sold it all in just a few weeks. So he's in a hurry to do something very big. Speculation right now is around his possible interest in United Launch Alliance. That's the rocket launch company that could add to Blue Origin. Now, despite that massive share sale, Amazon shares up over 18% this year. And Dom, until we know what he's going to buy, he could park that money in a money market and earn more than $1 million a day just in interest.
That's how the rich get richer in this case here. Robert, let's take us through the dynamic. We understand what's kind of happening with Tesla and how it affects Elon Musk and Amazon stock, how it affects Jeff Bezos. Can you take us through some of the movement that we are seeing in the world's richest ranks? At one point, you know, the Arnauds were doing pretty well for themselves up there. Warren Buffett, Bill Gates, always kind of in that mix as well. How exactly has the market developed, and how does it change the dynamic in the top ranks of the world's billionaires?
Yeah, Dom, it's really kind of an exciting time because it's a three-way race right now. They're kind of all tied for first place, right around $200 billion. So, you know, Jeff Bezos is at 200, Elon Musk is at 198, Bernard Arnault of LVMH is at 197. So with all of these stocks sort of playing a day-by-day narrative, we could see them change a couple times a week, and we haven't seen that for quite a while. You know, 3 years ago, when Musk took over from Bezos, we had a brief period where Bernard Arnault was number one, but that didn't last very long. But right now, you've got luxury, EVs, and online retail, as well as web services, Amazon, all kind of vying to be the dominant force in driving this wealth. And so as much as we hear about AI, it's really exciting to see these top three and where it's going to shake out.
We can't forget about space exploration as part of that mix as well. Robert Frank, thank you very much. We'll talk to you later on. All right, now let's send it over to Leslie Picker for a CNBC News update. Good afternoon, Leslie.
Hi, good afternoon, Dom. The creator of a software that can hack smartphones and turn them into surveillance devices can no longer do business in the United States. The Treasury Department made the announcement today banning the company Intellexa, which makes Predator spyware. An Amnesty International investigation found Predator was used to hack into the phones of journalists, human rights workers, and politicians, including 2 members of Congress. And speaking of Congress, Senator John Barrasso won't be running for Senate GOP leader, but he will throw his hat in the ring for the number 2 position. Senators John Thune and John Cornyn have said they will run to replace Mitch McConnell. The vote will happen at the end of the year. And the iconic booth, there it is, featured in the final scene of The Sopranos, sold at auction for a hefty $82,000. The owner of Holston's, where the scene was filmed, put the booth up on eBay Thursday to help pay for renovations. The winner will take home booth seats, the table, and the divider wall with the plaque, reserved for the Soprano family. There you have it. Dom, back over to you.
I think Tyler told me they have good ice cream there, too, but I'll have to see for myself. Leslie Picker, thank you very much for that. Disney is turning positive in just the last few moments here as CEO Bob Iger says he's extremely confident the company's streaming offerings will be profitable by the 4th quarter of this fiscal year. He made those comments at the Morgan Stanley TMT conference. Those shares, you can see, they're up about 0.75%, spiking in just the last few moments or so on that bit of news coming out of Morgan Stanley's Tech, Media, and Telecom conference. Well, coming up on the show, this one-year chart looks a little bit like the good, the bad, and the ugly, with CrowdStrike more than doubling, Nordstrom basically flat, and then JD.com losing more than half its value over the past year. We'll get the trade on all three of them coming up next in Earnings Exchange. And as we head out to break, let's do some show and tell, where we show you a chart and then tell you the story. Target is moving higher on a big earnings beat, with shares having their best day since spiking 17% in November in response to the last time the retailer reported results. Now, in fact, the stock's up 50% since then and has only posted 2 weekly declines in the past 4 months. Here's what CEO Brian Cornell told Squawk Box earlier this morning about the road ahead for that retailer.
We're not satisfied with where we are, and our theme today is all about a roadmap for growth, getting back to growing the top line, growing traffic, and making sure that we make Target a growth company again. We've seen a very resilient U.S. consumer. Despite inflationary headwinds, rising interest rates, the uncertainty of the market overall, the consumer continues to shop.
CNBC.
Welcome back. We are trading shopping, cybersecurity, and the supply chain in today's Earnings Exchange, with shares of Nordstrom, CrowdStrike, and JD.com results on deck. KKM Financials, Jeff Kilberg is here with the trades. First up, let's talk Nordstrom. Shares are up about more than 30% over the past 6 months, but UBS is seeing potential challenges ahead as consumers flock to discount retailers. They currently have a sell rating on that stock, but Jeff, you believe Nordstrom is actually a buy. Why?
Yeah, I do want to push back on that note, Dom, and I think it does make a lot of sense to be a buyer here. Let's look back on a 5-year perspective. It's still recovering. The consumer, which is still strong, but it's still recovering on a 5-year perspective, down about 55%. So as I continue to see strength in the consumer, this is a consumer cyclical name I think we want to own. If you look at a forward PE ratio, it's relatively inexpensive over the last 5-year average. So trading with a 4% dividend, this stock right here, right now, Dom, as long as we continue to see strength in consumer and no outlier of inflation, I think you want to own Nordstrom.
All right. It was also a featured stock yesterday, and I think Gina Sanchez was talking a little bit more about the bear case over there. So we have the bull and the bear. Next up is CrowdStrike. Shares are down nearly 7% today, but more than doubling over the course of the past year as demand for cybersecurity continues to grow. Wedbush is upping its 12-month price target to $350 a share from $278 prior, reiterating its buy rating this morning. What's your take for CrowdStrike?
I think you can be a buyer here too, but you have to be very careful here. We are testing the 50-day moving average, down about $21 in today's action, but you're seeing a partnership roll out today. If you saw the news, we've been talking about Dell and CrowdStrike, talking about how they can be implemented, their platform to help Dell computers and Dell software out there, because it's interesting. All these cybersecurity threats we are seeing, they become more sophisticated. They become more stealth. So I think when you talk about cybersecurity, we actually own Palo Alto. That's our preferred way to own this. And if you look on a 3-year metric, Palo Alto Networks has been outperforming CrowdStrike. But on a 1-year, there's a ton of momentum here. So I think it's inexpensive. But look at this 50-day moving average right here at 293. That you can be a buyer against it.
All right. And finally, Jeff, let's talk JD.com. Lots of headwinds for the Chinese economy and the markets as of late. And Morgan Stanley warns that increasing competition in the discount segments of e-commerce will keep pressure on JD this year. Jeff, it's the micro with the competition. It's the macro with the slowdown in the Chinese markets. What's the call on JD?
I think you could potentially be a buyer. I want to be very considerate because this is a falling knife. And when you look at JD.com, when you compare it to Alibaba, Alibaba is about 5 times bigger than JD.com. And I actually have exposure to JD.com in the ETF PGJ, that's the Invesco Golden Dragon Index. But I get very careful, to your point, what's the catalyst to own China? We have seen the continued struggling economy over there. There's going to be a catalyst, but when you talk about being more than 50% off its 52-week high. I know you had that chart earlier, the good, the bad, the ugly. This is the ugly, but I like ugly charts. I think there's opportunities in ugly charts, Dom, but you have to have your trading hat on versus your long-term investing hat.
All right, so that's the call on all 3 of those names. Jeff, while we have just a few moments left here, let's talk about the pullback we're seeing in markets right now. The big take from you on whether or not there's still more downside ahead.
You rolled me out on the one day in the last 18 weeks. We actually have red on the screen. So it's interesting to see. I think we have been overextended. We talk about RSI, that's relative strength index. So yes, you could argue that RSI levels, not just in NVIDIA, but in the overall S&P 500 are overbought. But overbought conditions can persist, and we're seeing that. And we're going to be waiting to hear what Fed Chairman Powell says. So I'm still cautiously optimistic. But Dom, you know how I feel about markets. They're not linear. They can't go straight up. So after the 4 consecutive months of positive gains, I think it is positive. I think the market would welcome to see us go back and test that 4950 level in the S&P 500. It's just a back and fill concept that we've seen for decades upon decades, and I think it may be coming. I think it's something to embrace and lean into and buy, not run from and get scared.
All right, 4950, the level to watch. Jeff Kilbert, KKM Financial, thank you very much. We'll see you soon.
See you, pal.
All right, still ahead on the exchange, daytime dining and battery bears. We'll dig into 2 of today's big movers coming up. And speaking of movers, AeroVironment shares are surging on an earnings beat. The CEO will join Closing Bell Overtime today, 4 p.m. Eastern Time, to discuss those results. An interview you won't want to miss. Keep it right here.
NBC.
All right, welcome back. We got a market flash on Albemarle shares falling about 12% right now. Pippa Stevens joins us with what's weighing on the shares of that big lithium company.
Well, Dom, it is the worst performer today on the S&P after Albemarle announced an up to $2 billion capital raise via convertible preferred notes. The market clearly viewing this as dilutive, while also signaling that the company needs cash and now to fund its operations. TD Cowen's David Deckelbaum telling me Albemarle is aggressively outspending cash flow, and rather than pumping the brakes on current projects, they're raising capital to continue expanding through what they perceive to be a temporarily weak period. This, of course, comes as lithium prices have all but collapsed, down 80% from 2022's high. The downturn is thanks to three key reasons. Battery producers are working through inventory, meaning they're not buying new supply. Demand for electric vehicles has slowed, and new supply came online faster than expected. Shares of Albemarle are now 65% below 2022's record high, with other producers, including Arcadium Lithium and SQM, also seeing heavy losses. And Dom, this trade was all the trend for a couple of years.
Consensus, because of EVs. So EVs taketh, giveth, taketh away. What's going on? Is it all about just the EVs?
So I think that everyone would say when prices shot up, more than 300% in the span of a year, they got too high. And so that wasn't good for anyone. But then on the flip side, I think the correction we've now seen has taken the market really by surprise. And of course, EV demand has slowed, but it hasn't stopped. And so the danger here and what we see with commodity markets, particularly more nascent ones like lithium, is that when we see these massive swings, it changes the capital funding requirements for these companies. And then now, if prices drop to below what's sustainable for the miners, and this is expensive, then they'll stop spending, and then we'll have a supply will drop, and then we'll see the exact same thing.
Yeah.
Exactly, and so that's the problem. And I think that somewhere in maybe the $30,000 to $35,000 per metric ton range is what experts say is kind of the middle ground. And so right now we're below 15,000. For a time we were at 80,000. And so this has really been on a wild ride.
Trying to find equilibrium.
Yeah.
Pippa Stevens, thank you very much. Okay, coming up, can $1 million bacon take the place of silver dollar pancakes? Breakfast, brunch, lunch, chain, First Watch is banking on it. We'll talk to the CEO about their expansion plans coming up next. As we head out to break, though, here's a look at the Dow falling right now to session lows. We're down about 345 points, the worst levels of the day, down nearly 1%. We'll keep an eye on that and be back after this commercial break.
Insurance.
Welcome back to the exchange. Shares of Starbucks are lower despite the end of a union proxy battle at the coffee giant. Kate Rogers is here with more on that story. Good afternoon, Kate.
Hey there, Dom. Good to see you. The Strategic Organizing Center, which is a coalition of unions, including the SEIU, confirming this morning it is withdrawing its 3 director nominees ahead of Starbucks' annual meeting next week, ending a potential proxy fight over the company's handling of unionization. Now, the withdrawal came after Starbucks and Workers United announced last week that the two had agreed to work on a framework for collective bargaining. Starbucks also put forth a good faith offering of benefits that non-unionized stores, did have access to, including credit card tipping and tenured raises for some workers. Now, in a statement, the SOC said, quote, as was widely noted, this agreement represents a potentially huge shift in Starbucks' labor relations strategy and a major step forward for all involved. Since the announcements, we've had meaningful dialogue with a number of other shareholders. Based on these discussions, we believed that by and large, shareholders are optimistic the company is committed to these changes in good faith and intends to begin to repair its relationship with its workers, which will ultimately enhance performance and shareholder value. Now, in response, Starbucks said in part, quote, Starbucks has always been committed to doing the right thing, importantly for our partners who are the heart of our business. Now, this proxy fight, of course, was closely watched as it was one of the biggest fights of the season, and the SOC had enlisted advisors that are typically reserved for activist investor campaigns. So fascinating back and forth there, Dom, and it seems this fight is dropped for now.
All right, so Kate, I want to call your attention now and pivot a little bit to another union labor story. You've been following this one. This is the Dartmouth men's basketball team actually voting to unionize earlier this hour. What can you tell us about the latest there on college athletics and unionization?
This is a big one, Dom. So as you said, Dartmouth men's basketball team voting 13-2 in favor of unionizing. So this is the first time in NCAA Division I history that a vote like this has been passed. A big step in a case that could wind up killing the NCAA's amateurism model. And it's likely, of course, other schools are watching and will follow suit as players are really looking to get a piece of the NCAA's billion-dollar pie. In a statement, Dartmouth maintained that classifying these students as employees is unprecedented and inaccurate. We haven't heard yet from the NCAA, but this will, of course, have big implications going forward for college athletes and will be very closely watched.
Possibly precedent-setting. Kate Rogers, thank you very much for both of those stories. We appreciate it. We'll go back to the restaurant side of things. Shares of breakfast and lunch chain First Watch are down today, but well off the 10% drop that they saw pre-market despite inline earnings and a top line, a revenue beat. Company projecting comp store sales in the low single digits with flat to negative traffic growth, but also planning to open more than 50 new locations later on throughout the year. Joining me now is First Watch President and CEO Chris Tomaso for more on that story. Chris, thank you very much for being here on the exchange. I wonder if you might be able to tell us a little bit more about the concept of the restaurant for those who don't know it very well. Even in New Jersey, there's only one that's kind of close by to where we are here at CNBC.
Yeah, so we're a breakfast, brunch, and lunch only concept. We have more than 520 restaurants in 29 states. We've been around for 40 years, but we know we have pretty low awareness. We're not really known as a chain. People think we're a local restaurant, and we love that. We're only open from 7 a.m. to 2:30 p.m., and we've been at this a long time. We've been a high-growth concept. We went public in 2021, so we've been here for a while. We're the leader in the space. We were the kind of an early mover in this daytime dining category. That's really been the only growth segment in the restaurant industry.
There haven't been, in my mind, many of these kind of daytime only restaurants that are pure play publicly traded. You're one of the handful that are out there right now. What exactly is the growth strategy? What exactly are you targeting geography, demographic wise, about what type of customer you're trying to cater to power that growth level that you're trying to achieve?
Yeah, I mean, I think it's taken advantage of a number of long-term consumer trends that we've been in advance of and now right in the middle of. And so one is certainly the growth in the brunch and breakfast segment. A lot of people talk about us being open only 7 a.m. to 2:30 and 2 day parts. And if you think about it, most restaurants are only open 2 day parts, lunch and dinner. We just happen to take on 2 different ones. And again, there's less competition in that space. It's a much more fragmented segment. So there's also a brunch revolution that's happening in the U.S., and we're taking advantage of that as well. So that's been going on for a while. With breakfast being the only growth segment in the restaurant industry, yet still 70% of breakfast occasions being eaten at home. We just see a tremendous amount of white space for us. And we have, again, more than 500 restaurants in 29 states. And the interesting thing is that we perform well in a number of different markets. Our top decile restaurants span 20 states and 10 DMAs. So we've definitely proven our portability and proven that the consumer is interested in an offering like ours, as unique as it is. And as far as who we go after, we have a very, very broad demographic profile of our customer, multi-generational, higher household income, higher educated, but it's a consumer who appreciates quality ingredients, prepared well, at a value. And so we don't have heat lamps, deep fryers, or microwaves in our restaurant. We use cage-free eggs, organic mixed greens. So that's another consumer trend that we feel like we're aligned with perfectly.
Profit margin wise, where is the more attractive part of the day? Is it tilting more towards the breakfast side or more towards the lunch side?
Yeah, I mean, not just for us, but breakfast has been known as the most profitable segment, in the restaurant industry. And certainly you can, if you think about it, eggs and toast and potatoes and things like that have great margins. And so, but it's also, there's a lot of breakfast items that you can't really make at home like you can with dinner. So going out for breakfast and the social occasion around brunch is something that the consumer's been leaning into for years and has been growing. And we do it at a $16.50 check average. So it's a very approachable occasion.
All right, $16.50 for the average check is pretty big. Also, you're a private equity backed company, and Advent International, which is a big name in the private equity, is still a major shareholder for your company. What's the conversation like between you and your private equity owners about just what you think the plan is going forward about achieving those growth plans?
You know what? Advent's been a great partner of ours. They invested in 2017. They're a great strategic partner. They've helped us tremendously along the way, certainly with our IPO journey. And that partnership is such that we're fully aligned on our growth and where we can see this company going. So we have a path towards 2,200 restaurants. They're aligned with us on it, and we have the resources necessary to get there.
All right. And before we let you go, Chris, really quickly, your favorite menu item?
Oh, man, I'm a traditionalist. I love the traditional breakfast with eggs and bacon and potatoes, but I'll splurge sometimes on one of our decadent items like a stuffed French toast or something like that. But you can pretty much find me having the traditional breakfast.
All right. Chris Tomaso, First Watch Restaurant Group, thank you very much. Please update us soon.
All right, will do. Thank you.
All right. Well, that does it for the exchange. Power Lunch is coming up next. Courtney Reagan is just over there getting ready. I'll join her on the other side of this commercial break.
All right, I'm back. Sorry it took so freaking long. Hold on one second here. I've been sitting here in some meeting here for some time. I apologize. That right there. Move that over. Sorry about that. I had a guy here earlier, and then I was on a call with Joe. I could not take. It was something for technically that had to happen. So I apologize. I'm still on calls. I took my cell stop off earlier this morning when I came back. And then when I left, I did not take that cell stop off. I'm still in calls right now. I'm getting blooded here. I got 21-cent calls right now. They were in the money on 4 or 508s. So I'm still sitting in these calls. Now I'm kind of tied into them. So they're going to stay on here into the close. Hopefully get a creepy crawl up the Wally. But you can tell here that they're trying to pin us here underneath this gamma flip into this close. Now, do we get the same result as yesterday where we close and then, or are we going to chase the hole into tomorrow? Also down below there, that pain trade that's down below still hasn't been hit as of right now. That's this trade right over here, this one right down here that we were looking at earlier this morning. Do they hit that trade just later in the day, blast us down right into this close right here? Woof. And I had said earlier, too, that I'd wished I had put some calls on for the 11th of March, but, dude, I'm in zero dates right now. These things, they're going to fuck these things up right into the close here, and they're worth 20 fucking cents right now. And I bought them at 80 fucking 5 cents earlier this morning. So I'm a little pissy here. Definitely not happy at this point. And then when we rolled down, I came back to get on the phone with I was with a guy, and then I got on the phone with Joe, and I'm like, oh, they're already fucking down. They went up, came back down, broke back above right here. I think they were at like 85 cents or something, fucking around in here, and they started blooding me. So I'm still sitting here in calls right now. I'll mute this while I'm here. You don't have to listen to that garbage CNBC anymore. Woo! Take that cash. I think Joe's long with me. Oh, no. I don't know if he's long with me now or not, but I didn't have sell stops. I had sell stops on earlier. I took them off. I'm like, I don't want to get fucking stopped out if we're going to turn higher. But it looks like they want to slam that down here. This one right down here. Pretty fucking bad. This is what it looks like to me, is that we're going to go down there and tag that 504.58. I can't tell right now, but that's what it looks like to me. If you're a long puts here or something, I'd be looking for that tag way down here, the tag of 504.54. Or let me know if you're on that trade to go down there, because I think that's where we're going. I think they're going to go down there and take out all that shit down there. Let's take a quick look at Bookmap and see where the levels are. Hold on one second here. Yeah, come over there. Hold on one second here. Bookmap. Let's take a bigger look at Bookmap right now. And we'll see it right down here, right? Oh, wait a minute. Got the wrong fucking cursor. So look at that down there. And we got a new level opening up. This is the level that I'm talking about. This is 50-50 down here. This one was sitting here earlier. They tried to drop us down here. I think right here was where they tried. No, it's this one right here. I thought in here when they were taking out the stops earlier that they were going to drop us down, but I thought way down here, 550. Here's 50.72 right here. That's firming up for support, but this one down here is just begging. I think that's stink bid. That's the whole market down there. Right there, 550. So we'll keep this one on the chart right now and see if they blood us down into the close, because it's a real possibility. Let me go back to the main screen here. And this is that 50.70. This is basically where we are right now. Is this tag right here is this first orange bar is somewhere right in here, and then that white bar down below is way down inside here. Way down inside in here. Spooky and scary. And not only that, right? They got the pin going for the close. It's already 2 o'clock in the afternoon right now. We're going to find out the funny business that takes place. Usually at 2 p.m. we get a big move between 2 p.m. and 3 p.m. And then we get power hour at 3 p.m. So I'm sweating bullets here, definitely. Not a happy trader right now in any way, shape, or form. I've got a bunch of shit out there that hasn't printed. I still have a bunch of shit sitting in my account, and then I've got some 0-day calls. And they were making money earlier. I know they were up at one point close to $1, $1.50. But 20%, who wants 20% on a call? I want the whole fucking thing. I guess I was up 25%, but I don't want fucking 25% on 0 dates. I want like 300%, 400%, 500%, 600%. So I'm going to stay in these calls into 4 p.m., see if I can hold them onto it. They take the hedge off the market and hopefully rip up 30 points into the close here today. Woo! GameStop turning around right now. GME holding its hourly trigger, now trading on its 1521 right here. Next target to the upside for GameStop is 1560. Google holding itself up, but right now pretty good, not too bad. Google could look a lot worse. It's parked on its half-hour trigger right now. Has a little bit of a bear cross above it here, looking to recheck its low at 130.67. SMCI holding its V-shaped recovery right now, currently trading 1042. Doesn't look bearish at all. Tesla parked still not blooding right now. You're saying that it's blooding, but it's not. It's actually holding up pretty well. Looks like a V-shaped recovery down there on Tesla. AMD parked as well, like it was this morning. No movement right here. Looks like tech is catching a bid. What else am I missing here? I think I got them all. So not too much doom and gloom. My one fear here, I was thinking about this when I was gone. I was like, you know what they'll do is they'll fucking pin SPY. They'll hedge the fuck out of SPY, and they'll let other stuff run or hold or go higher. But SPY itself will be the tool to hedge the market into Wednesday, Thursday, until they take that hedge off, hopefully. We get a big old squeeze up in Friday. So I'm going to have to try to, if I don't catch this money trade here to the upside on the close today, I'm going to have to look for a better trade, something into the weekend or something. Because I'm not on the camp of, I'm still not on the camp of correction. I'm still on the camp of this is part of a pullback and not a corrective motion on the market. I'm hoping that it's not a correction yet, because I'm on the wrong side of that trade for sure. I got no heavy like puts in this market here. I've got a put spread that I need to I need to be below 520. I need to be between 520, 525 and 500 into the 28th. If I'm in that zone there, I'm going to get paid. But I would prefer to have some kind of a bloodbath at some point between now and the 28th to get paid on that trade. But it hasn't paid me the full trade yet. So I either need a ton of doom,
Community Development Financial Institute.
either need a shit ton of doom, or we need to go the fuck up.
As for a live stream, that is pinned to FedSpar's entry in the calendar for anybody interested.
Hold on, I got to put a computer down here. I was in some meetings trying to do some work. Yeah, I don't follow the 200 daily moving average at all. I used to follow moving averages. I don't follow them anymore. I lost more following moving averages than I do on triggers. I used to like the 50 weekly too. I thought I always liked that one too for big buys. Yeah, I'm not on an invalidation level yet. I'm still in like this pullback thing, but we'd get this doom every week. This week's a little bit more than usual, but I'm still not seeing it as corrective yet. Or not corrective, but like doom and gloom. Like this is it. We're rolling down into, I don't know, the end of quarter, stuff like that. We're going to hit 5,000 and then blood down below it. So I'm still on like corrective. So like 5,490, any of that to me is considered a pullback, not what we're looking for. So like for me, looking for the seasonal low is not 490 or 500. If that is the low for the seasonal low, that's still extremely bullish and more pullback. For like a seasonal low for me, I want to see like fucking 460, 470, somewhere that low. That's what I want to see in a correction. I don't want to see 490, 500. I don't want to see people telling me, yeah, dude, that was a seasonal low, because that is not a low to me. The low to me is like a good seasonal low for me would be 460, 470, somewhere in there, nice and deep. You guys understand what I'm saying here? Like, think about price here. Like a pullback to 500, a pullback to 490 is not a correction. Not in my view, it isn't. It might be in your view that's corrective, but if you're a bear, you know that for a correction to take place, or probably I would want to see the monthly at least. Let me show it to you. Let's take a look at where the monthly is. I'll show you where I want it to be. So you gotta understand here, we're still on daily trend. As of right now, that's at 498.68. Right? Weekly trend is 467. So if we were to crash today, I'd want 470. And I'll be honest, I'd really like to see, like right now we're at 424, so on a monthly basis, that would put us at 440. So like somewhere between 440 and 470 is where I want to be. Somewhere in there for a true correction. Like you want to see some pullbacks? There's one right there, right down to the monthly. That's a correction. Here, let me show it to you guys. So this is a correction right here. You want to see what a correction looks like? Right? I don't want to see like we go down here and then we're off and running. I don't want to even see this down here and then we're off and running. I want to see a corrective seasonal low for March or April, right? We talked about that beginning of the year, right? We always watch the seasonality calendar. I want that low is, look where that low is, and look where we are. Let me hide some of this stuff here. Pivots look so fucking big on this basis. Here, hold on 1 second. We'll just delete all this shit. I gotta take this call. Hold on 1 minute, guys. I'm gonna call him back. Hold on a second. Okay, so let's look at where we are right now. You need to be sober about this. This is what they've been doing to us, right? Pull it back, sell it, or buy it, right? Send it back, buy it, right? Right over there. Buy it again, buy it again, buy it again, buy it again. And when you're over here, you're thinking to yourself, doom and gloom, right? Everything is awful, everything is terrible, market's going to crash. And they buy this, or even this, even if it goes all the way down to 500. Does any of that look like, was this correction? You let me know, because you're telling me then we've had corrections 1, 2, 3, 4, I don't know, 5, 6, whatever, right? 8 or whatever in this run. Fuck no. So the correction is down here. The corrective minimum correction would be down here at this 470. That's minimum. Truthfully, be about 440 if it got really nasty. And that would be the seasonal low for the rest of the year. You'd have another downtime in summertime, another downtime in August, September, somewhere around there. But this is the one that the money on the sidelines is waiting for. All that cash that missed this whole run, that you're talking about taking away this whole run right here in a corrective move. At minimum, you're talking about that 460, 470, and erasing all of this right here. All this whole move being taken away. So the only way that I'm looking at this, we're getting off a 1 minute time frame right now, right? And this is all I'm looking for here is, still buying dips, still trying to take this up and to the right. Anyone out there that's telling you this is it, I can show you 20 examples of it not being it. So not 20, but 15 fucking times, 20 times. So at least I'd be less myopic in your thought process right now. I'd be less myopic in what you think is happening and the doom and gloom and all that stuff, and be focused on what's really happening here, right? Just right in. Wait a minute, I got to go back in the wrong screen. I'd be really focused on an opportunity to buy a dip here, try to be a dip buyer. I'm a buyer of this market until we begin to correct. As soon as we start correcting, I'm fucking full bear. Let's get down there and take it out. Let's go down there and take out 490, take out 470. I don't think you're going to get the 460, 470. That would be an extra little tease. I would love that trade if that happens, but as of right now, get off a 1 minute ticker or a chart and look at the daily chart on where we actually are. Because I already know who's gotten blown out doing that. I already know that the sellers have been blown out with that thesis, right? You can't tell me that you were down here as a seller and you've made money this year. You haven't. You've gotten blown the fuck out 12 times. 12 times you've gotten blown out. We'll count them right now. Let's count them. How many times have they been blown out? Well, let's look at it. Let's go to the daily chart on SPY. Jesus Christ, that's so disgusting. Look at it. It's so wrong. It's so wrong. I hope they're right this time. I'm going to be honest. If you're a seller, I hope you're right. But let's look at it honestly here. Seriously, let's look at it. Ready? Correction over, right? You get the first pull back up here. Probably thinking it was going to go this way, and that way, right? Didn't happen. What happened was You got one there, blowouts, right? You got one there, that's 2 blowouts. You got another one right there, cut half of one, 2.5. You got 3.5, 4.5, right? 4.5 right here. 5.5, 6.5, 7.5, 8.5 into Monday, right? It's a Friday and Monday. That's 8.5 times, and we're down here again. Now, does it not work? And we begin to roll over. Is there a window of weakness that can take us lower into that corrective territory? Seasonally, are we due for it? Yes. I am 100% on that trade, but the truth is that this is what they do is they come in, they buy this shit up. These fucking buyers, these fucking bulls don't learn, and they just want to buy it for the next rip higher. Until you need to break this at least. Like, just break this shit here. Break 500 for me. Or I should say break 500. Break 500, right? And then reject that 500, that 499 right here. Like, break that daily trigger. Start rejecting. Get the, hold on, maybe, no, let's do it this way. Get that hourly trigger underneath like this and give me like a 4 trigger bear cluster so we can start raining hammers down on these buyers. You know, that's 470 from 500. That's 300 points. You know, that's where the juice is right there for bears. Like, that is big money. Big, giant money. Otherwise, dip buying. I hate to say it. It's horrible to say. I know in a 1 minute trigger or chart, you're like, oh, dude, this is all terrible. Boom. Horrible. Ruined my life down here, but it really isn't. It really isn't nothing right now. You need to see, I need to see more. I need to see more doom. I want more doom. Give me more doom, please. Give me more doom. Otherwise, you're going to get blown the fuck out. Especially if you're a seller. You're like, I'm just all fucking short. Fuck you. Because you can't believe him. I can't believe him in public. I try, right? But I'm on public and I'm like, these fucking guys tell me that they're max short. You can't be max short 8, 9 times and not say that you didn't get a margin call, a maintenance call, you blew it all up. My friends that are bears are fucking destroyed right now. Like, truthfully, behind a closed door, not on a phone call or sitting here on a live stream, they are fucking destroyed. If you're a bear and you tell me that you aren't, like my friends that are good, great traders, they're torched. We get down here and they buy the fucking dip and they run it straight up on you, like vertical. Come back a few days later, you're up 100 fucking points and you're like, what the fuck happened? And those people disappear, right? That's what happens, or that's what's been happening. So I don't expect these bulls to go away quietly. I don't think that's in the cards. I don't believe it. My friends that are actual bears, they're getting torched. That's the truth. Truth. Like, that's the actual truth. They're getting torched. Like, they sell, but then they get the drink the Kool-Aid, and they're like, we're gonna roll down here. And I'm sure you've already heard it today. I'm not positive, but I'm sure that they're talking like this. I'm sure that you're being fed it on CNBC. I'm sure you're being fed it on Bloomberg. I'm sure it's everywhere right now. Doom and gloom. And people drink that shit. They're like, fuck that, I'm staying max short. I don't care if we squeeze here. It's coming back down. And that's not what's happened. It is not the actual facts of what happens. So just be careful out there of that squeeze higher. Yeah, no shit. I agree with that. With Yellen, dude, they are protecting this market so hard. It's so fucked up. I'm not even a fan of it. You know, it's like a counterintuitive. It's like a like it's at every turn. It's like counterintuitive. So I was talking last night with Scott, and I'm like, you know, for everything, like, then you get all excited. Like, I get excited. I'm like, you want to correct? I would love a correction. Even a bull wants to see a correction. Not the FOMO bulls, but true bulls want to see a correction. Matter of fact, a close friend of Joe and I's, I'm not going to say who, but a close friend who's like, I've got $1 million sitting on the sidelines. When is that correction coming? I want to buy this market. I just missed this whole run, right? From December, October till now, I haven't been able to participate because we were expecting a seasonal low. And this guy's a bull. This guy wants to go fucking slam $1 million down the market, hold this market for the rest of the year. And he has not been given the chance to do it. I've got money in the market, but not like I did last year. I don't own the market. I exited them. I was one of the guys that got scared. I took my money on ERs last year in Q3 and Q4. Any good ER, I took the money and ran for my year last year. And I sat on my hands and traded options all from then until now. That's it. Just options. Not buying the market. I own like RGF and shit like that. But this isn't like real holdings, right? This isn't like I'm in for $500,000. I'm in for $250,000. So there are people out there that want this to happen. So yeah. But is it going to happen? I want to see it first. I want to see a break of that daily trigger. I want to see a break of 500. I want to see the rejection. I want to see the hourly trigger come down and slam this fucker down below the daily trigger and start burning the fuck out all these bulls. All this FOMO that's the fomenting that's in the market. But it's not there. It's not confirmed here. So the last 8 or 10 times where it was unconfirmed, like not right 9 times, 8.5 times, you got smoked. With that thesis. So I'm not throwing the cards yet until that actually happens. I want a confirmation. And if you're a real bear out there, you probably understand this completely. If you got burned in any of those jumps where we didn't correct, I'm sure that you felt that fucking pain. So you have to have. There's no way you didn't. Yeah, no, confirmation is easy. The moment that you get the moment that hourly trigger gets underneath that daily trigger, you fucking go full bear until it turns around. 100%. Unless it turns around, unless price and that hourly trigger gets back above that daily trigger, you are full fucking bear. We're selling this market anytime we're below that. We are in a bearish stance every time. Every time. That's how we correct. That's how we correct. Those fucking lines follow every single time. Every single time. It's a beautiful thing.
For a year's worth of our service for the price of one.
Beautiful, beautiful thing. Trading 507.09 right now. Just climbing all the way down. 222 in the afternoon. Still making new lows right now on SPOOs, baby. Well, let me put the stuff back on there for you because I deleted a bunch of cool shit. Hold on 1 second here. 5,100, right? Hold on right here. That was at 9:30, right? I can tell you 1 second here. This right here is local support. Let me put this back up for you guys. Right here. This was local support on Gamma for SPX, right? Right there. Let me put this shit back up there. Support. What else do we got here? Cap wants to buy this one right here, 55085 right there. 5085. What time was that? 12:30. Right there. Am I in the right place right there? Hold on a second here. Did I get that right? Whoop, I'm running around here myself. 50, wait a minute, go back over there. Where was that at? 5085. Right in here is the Gamma Flip, somewhere in here. This is the Gamma Flip right here. I think that's the Gamma Flip. I'm almost sure. That's the Gamma Flip right there. Sorry, I got to try to get this stuff, cue this stuff up to the to SPX. Gamma Flip. Do I have that right or do I have that wrong? No, the Gamma Flip's up above. One second here. Gamma Flip is right here. I have that right. I might be wrong in this right now. That's the gamma flip right there. And then your next level down, the glass floor, right? Come on back over here. Glass floor is 50-40. Right down there. Yeah, it's a little bit off. It's like 30 cents off or something like that. Right down there. This is the floor is glass, right, on SPX? Glass floor right here. I always like calling it that, the glass floor, especially when it gets made. It came in earlier this week. Glass floor. Came in on Monday, actually, I think. Right down there. And this is the, hold on here, we'll do this one first. 4 p.m. right there. And then do they get the up and then down right there? We'll move it over, bring it right there for you. Do they get that down move into that close? And this isn't good enough for me. Like, I don't know that this is going to help me get into the money on my calls. I don't think even going up here is going to matter to me. I think I'm going to lose that trade. Like, even if we go up into 509, 508, I don't think it's going to matter because my calls are 508. So I guess I'd have to get all the way up into here into the close for it to make a difference. I doubt you even get that right there. Maybe. Move that over so you can see it. So yeah, just on the doom and gloom, be careful. Like, you need to see like that roll, that, you know, the roll, and you need to see the rejection of that daily trigger because we are on daily trend still on daily trend. Yeah, that's really what you want. If you're a seller, like the pullbacks, you know, like the thesis becomes, I should start putting that on these charts too. So like you're a buyer of markets or a seller of markets. You're one or the other. You're either a buyer of markets or a seller of markets. There are people that can operate within the buying of the market to be a seller. And I know there are buyers that can operate in the markets as a seller of the markets. So if we're mainly selling the markets, you can operate in those regimes. But the truth is that we're still in a buyer's market here. Nothing has changed the regime hasn't changed, I should say. And when the regime changes, that's when we get below that daily trigger and reject it. Until that regime changes, this is a pullback. I know that's hard to swallow. I know, I get it. I get the anger. I get the anger at that concept. But, you know, 9 times it was a buy the dip environment. And you have to stay on that until you're proven otherwise. Otherwise, you get blown out. I'm going to make this prettier so we can see if they blood it or not. SMCI catching a bid right now. Green as of right now. Google's still parked right now. GME parked on its half-hour or its hourly trigger. Tesla holding itself up okay. AMD holding itself up way better than Tesla. God damn this chair. Ooh, what is that? Am I just drawing shit everywhere? SPX currently below its gamma flip. If you're a bear out there, I bet if you're a bear out there, you're going to say we broke the gamma flip and now we're in bear town. We're selling every rip. There is some truth to that. Gamma flip is at 50.90. If we remain below the gamma flip on SPX, ooh, spicy. Yeah, it's pretty good. I like our Discord. I think our Discord is awesome. New Discord, dude. When you go to the paid model, even if it's just low money, it changes everything for our Discord. The free Discord was I liked the thesis of the free Discord. In practice, it sucks. I gotta be honest. Over time it becomes a problem. But the paid Discord is outstanding. I love it. I love it. I love the new Discord. It's cranking. Thanks, NorCal Joe. Appreciate it. Trader Podcast, what are you saying here? I missed what you were saying. I missed the conversation in the chat. I don't understand the context of what you guys are talking about. Oh, yeah. We have an NVIDIA conference coming up, right? Like, I would never be short that shit running. Well, maybe on the day of. I'd probably short it like the day before, the day of or something, but they'll just ram it up your throats before they roll it. If they say anything nice in that conference, I wouldn't be fucking around with that conference. 10-foot pull, like 10-foot pull in that conference. You get all these like bulls coming out and just ramping the call market. I wouldn't want anything to do with that in NVDA. I would say afterwards maybe, but
$1.95. Diesel April futures settling at $2.61. Gasoline April futures, they're settling at $2.53. Finally, WTI crude April futures settle at $78.51 a barrel, which is down 59 cents or 0.75% on the session.
HYG rolling over right now. VIX closing more gaps to the upside, right? Closing 1547. They have some more gaps above at $15 that remain unclosed. Tesla's bleeding now. They weren't before. They just took a roll retesting its low. Dixie looks like it's holding its bottom right now too. Looking pretty bulled up. NDX coming back down right now to test its low. TNX has another gap on the upside from 41.37. They left a gap behind at 42.20, and they still have a gap above at 42.87 on a 5-minute chart. So still some doom here. We'll see if we can get this deep low down here, this glass floor, into the close. Now 2:32. We've got 2 hours left, 2:30 to 3:30 and 3:30 to 4:30. U.S. factory orders from earlier at 10 o'clock this morning, and never went over those. January of 2024, we had 569.7 billion. That was minus 3.6%. December 2023 revised was 591.2 billion, minus 3%. No, they're not showing last year's. They're not showing last year's numbers. For some reason, I can't see. For some reason, I can't see 2022 in here. I don't know why they're not showing me 2022. ISM Services PMI February report. The series index for February is 52.6. The index for January was 53.4. Percentage point change was minus 0.8%. Direction is growing. The rate of change is slower. The trend for months is 14. Series index for February is 47.8. Series index for January, 49.1. The percentage point change was minus 1.3. So yeah, we got the fact. So at the month-over-month actual was minus 0.36%. The forecast was minus 3%. Dollar dived. S&P ripped on that news this morning. And they still took the chance to hedge the market. Any rips to hedge going into the volatility of the expectation of volatility tomorrow. I want to leave you with one more thing. So tomorrow we begin the Jerome Powell Senate hearing, where some of you out there are expecting Jerome to sell this market, possibly say things about the market that to start a corrective action inside the market. or lend some doom or try to trigger a seasonal pullback. Let's take a look really quick at the seasonality chart and show the disparity over what the expectation is for a seasonal correction and where the market actually is. And I want to also let you know that tomorrow we will be here early. So tomorrow I will start the stream at 8:30 in the morning. You'll have me here for about 15 minutes. I'll do that usual spiel to get you caught up for the day and what the expectations are. Let me show you guys one quick, I'll stay here because we might go down some more. Let me go switch over really quick and show you guys some stuff. So for tomorrow, I think it's gonna look something like this over here. No, that's not the right one, is it? Here it is, rate decision. So for tomorrow, what you're gonna get is you'll get like a rolling list over here on the left-hand side. You'll get your charts and you'll get your big trigger screen, and then you'll get me blabbing and you guys talking here in the center of the show. So tomorrow, look forward to that. 8:30 in the morning, we'll start the broadcast for the Senate hearings. And one of those windows that you just saw, where you had like two windows with a chart, one of them is going to be Jerome Powell testifying and the reaction in the market. The charts that I will show for you tomorrow likely will not be the trigger. You'll see, I guess you could see the trigger screen, but I think what you're going to see is SPX. I was going to do a chart with three windows on it, like SPX, TNX, and also SPX, TNX, and Dixie. So I've had those three up. Maybe we can see the interplay between the sentiments from the Senate versus what Jerome says. I'm not expecting that from Jerome. Jerome has notified everybody that they're not adversarial anymore, and I'm not expecting him to be adversarial. Sometimes, though, in these Senate hearings, what you get is Jerome is like not adversarial, right? Everything is going great. We're doing my job, taking a victory lap. We've got robust jobs. We've got robust, our unemployment is stable. And he's going to tell you that we're winning against inflation. He's going to tell you also that we have more to work on and that we're doing our job. That's about it. That's all I expect out of him. Now, volatility does come when certain people speak to him, right? We get certain senators that will come out there and they will say things like, bullshit. Inflation is way too high. Cost of potato chips, the size of potato chips. They're going to say I bet you someone from Massachusetts will come out and say, I have to go shop at Aldi now because I can't afford the food and all that kind of stuff. What do you say to that? Do you think we need to increase rates more? Any of that kind of talk, that should bring some volatility. And that usually does bring volatility. There should be moments in this Senate hearing over the next 2 days where you will get moments of volatility because Jerome gets led into these conversations and he doesn't know to back out. If you've ever seen Jerome in an interview, he does okay at I'll give him like a grade C+ to B+ at rate decisions. At Senate hearings, I've seen him implode. Like you see him get mad, he gets angry, and sometimes he's even on the side of the person asking the questions. And he will be frank in those moments. He will say in those moments, you're right. The rent is too damn high. You're right. Your groceries are too damn high. And you will get those lucid moments from Jerome where he will agree that things are still bad out there, which we all know are, right? You know it is. I know it is. Matter of fact, this morning we said we're going to discuss this. Last night I had a conversation with Joe Donut about it, and we were talking about rate cuts and the reality of rate cuts. And he made a fascinating statement to me last night. He was able to put into words what a lot of us can't. And what he said was, he said we went from the cost of things. We jumped 25 years, 20 years basically, in 3 to 5 years. And we're paying that right now. We're paying that price out there. So if we were expecting the cost of things, right, inflation, to grow at a rate over the next 20 years, no matter what the inflation picture is showing us, we all know that that is not the fucking case. We know it's not the case. We saw FedEx renegotiate with their workers for their complete compensation package of about $150,000 a year for some people, right? Even if you're going to call it a scam or it's not really that cap or something like that, there's acknowledgement from some of these large corporations that they're not going to lower prices. They're making that jump. We know that price setters are doing the same thing. We even heard it from one of the Fed presidents about 3 months ago. We've talked to price setters. They never get the chance to raise the price of eggs. They're going to raise the price and not bring them down, and they're going to hammer it. And they have. You can't say that they haven't, right? Home prices. So I don't know what to say, or what I should say or not. Not me, but a friend of mine was out looking for homes.
And Brent crude futures settle at $82.04 a barrel. That's down 76 cents or 0.92%.
These homes are worth $500,000 or $600,000, right? There's a bidding war right now everywhere in the country. These homes are going for no less than $700,000, but upwards of $1 million. And we're coming into buying season, right? Buying and selling season. When he is at these home sales, right? Do you know who's there? Old people. Old people are there. It's all old people. It's not a 20, 30-year-old engineer, 20, 30-year-old doctor. It's all old people. Do you know who else is there? People from cultures that save money as a cultural part of life, right? Like where I pay up into my dad, right? My father, my grandfather manages my whole family's finances, right? People that have actual wealth. In an American system, that's not always the case, right? Your parents say, we're going to help you go to high school. We're going to take care of you. You're going to go to college. I don't make enough money. You have to get a scholarship or take loans. When you get out of college in the U.S., that you don't really have your parents helping you, right? Not a ton of you do. It's not a cultural thing in the U.S., right, to do that, where you go to work and you funnel money to your dad and your grandfather, and they say you're going to buy this house and you're going to buy that. You're going to do this. This is the job you're going to do. This is the university you're going to go to. And he's saying, I'm going there, and there's no like 20, 30-year-olds. It's all old people with wealth. So there's this huge disparity in our country. Home prices, and people are paying this money, and they're doing it with cash offers. They're not even taking mortgages. These people have wealth, and what are they saying? What are these people saying? I don't care about the interest rate. I'm not taking a mortgage. I can outbid you even if you want to take a mortgage. So if you're a 30-year-old guy, right, or woman, you're a 30-year-old woman, you're a doctor, and you're like, okay, I just got out of school. I got a ton of debt. I've got insurance I got to pay for. I'm going to go buy a house right now. You're competing with an old man with cash, and they're not paying a mortgage. So they come in and they go, hey, you know that $900,000 house that you're asking too much money for, right? I'm going to outbid this other guy by 10% with cash. Do you get what I'm saying? You're like literally like, because I'm not paying a mortgage. I'm not paying more interest over 30 years. I can go 10% more. You can't as the young doctor. And what do you have as a young doctor? A $500,000 house requires a down payment of what? $120,000 or something like that, right? Something like that. Right off the cuff. That house now costs $900,000, cresting $1 million. Now you need $250 in cash just to enter the picture. And I can begin to outbid you with cash. I'll offer another 5%. Can you go that high? Do you have that cash reserve to put that down payment? Let's say you had $100,000 or $200,000. Let's say you're like a wealthy kid. You got $250,000 in the bank. You're rocking. All I got to do is go up 10% more on that offer, and I cut you out because you can't meet the requirement of that offer. Now you're at 300,000. That's how you're getting pushed out of that market, right? Brutal. I know. It's the cash buyer. It's always the cash buyer. Cash buyer has that money to burn. And you see it everywhere, right? You see it when you go out to restaurants. Everything is shrinking, right? The cost is through the roof. It's cheaper for you to go to a local. It's cheaper for me to go to my local bar to get a burger and a beer than it is for me to go to McDonald's. That's true. Can you imagine being a working class person? Like, you're a working class person and you work hard all day long, right? You might not be educated. You might not even want to go to tech school. You didn't even do an apprenticeship. You're just a working class worker.
U.S. stock.
And you want to be able to take yourself or your girlfriend or your boyfriend out for McDonald's. You can't even do that, can you? You likely can't. You likely can't even afford McDonald's right now. So that stuff is real, baby. Absolutely real. Glass floor down below. We look like we're selling down there, don't we? We're like free falling down there. That target down below. If you check out the SPX chart down here, keep your eyes on this stuff right down here. This is that glass floor down below at the 5040. That is the entire put market right now. Well, there's one more level down below. There's I'm sorry, I forgot the glass floor changed. Glass floor is at 5014. 5014. Even lower than 5040. It really isn't. I'm telling you, it's not corporations. It really isn't. Show up to some of these. You guys should show up to some of these open houses. Show up and see who's standing in the room. This is not corporations. These are wealthy individuals that'll outbid you. And these are sellers that know it. We have a low housing stock right now. Buyers or sellers are in control of that. Realtors are in on it too. That's the other part of this. Like, there's a whole another scummy part to this. And that's the realtor side of things. The realtors are discussing right now. They don't give a fuck either. I'm serious. You guys should, if you want to do something really cool, we're coming into selling season, right? Buying and selling season. Don't go look at like a $100,000 house or a $300,000 house or a $500,000 house. Start going to the more expensive homes. Go to an open house. Go this weekend. Do it this weekend on a Saturday. Go out and see who's buying these houses. See who has the actual money. Wealthy individuals. And they're driving this market to the moon. No, they stopped buying, man. They were buying. They aren't buying anymore. They started, matter of fact, I think Blackstone started selling. And there's a whole nother level. There's actually a bigger argument here. So there was a housing crisis that some of you guys might be in real estate, might know this. So there was a larger housing crisis before 2007 and 2008 for the population that we have. We had a housing crisis before 2007, 2008. It was about 15% for rental properties. After 2007, 2008, we created another class of people that became permanent, lifelong renters. These are older people, like 40-year-olds, 50-year-olds. They got washed out in 07, 08. And so we actually increased artificially, not population growth-wise, but we actually increased the disparity in housing needs for rentals. They went to like 25%, right around there. Okay? Now, the population has continued to grow since then. The mechanics of this was that when they made changes to mortgages, you had a lot of flippers, people that were investing in property, small people like me, right? And a lot of these guys and women that I knew back in the mid 2010s or so, 2010, 2015, rather than taking mortgages, they started taking what do you call it? I'm at a mind block when this is what it's called right now, but hard money loans. And this is how all this shit started. They were taking hard money loans rather than taking mortgages. And they were now under the thumb of a hard money lender. And hard money lenders taught these investors how to get into a house, how to renovate it, and get out of it and make money. So you would go and buy your first house with a hard money lender, right? And that basically you're under the thumb of, this is what you do. This is how you buy with cash. This is how you renovate. And this is how you sell and make a profit. And so these people were doing was they'd start with a hard money lender and they'd learn how to do a flip. They would make enough cash they didn't need the hard money lender anymore, right? Then they started buying houses with their own money. You understand? Like with their own money. So they learned the right way of how to do this, right? Then they started to buy houses with their own cash, and they changed from a flipper to a buy and holder. So you, instead of flipping, you're now buying and holding. Okay, so now I've got one property, I flip it, I flip another one, I flip a third one, a fourth one, and a fifth one. And meanwhile, there was a housing shortage that had already grown and a need for renter or need for housing for renters. So these guys are doing this shit, right? And they become buy and holders. They start to accumulate properties. So like you're talking about the Blackstones out there and all these companies out there, they're building rentals. We know that, right? They're building rental housing communities. But these fucking flippers, I'm telling you, these guys are out there booming, like buying and holding, thinking they're going to only own one property. They wind up accumulating 10, 20, 30, 40, 50 as other people are aging out of those apartment buildings, housing blocks that they own. And they're saying, oh, we can't do lead remediation anymore. I'm losing my 30%. Do you want to buy it? All these guys had cash and they started buying these properties and absorbing the lead remediation, the window, the insulation, all the shit that needed done. And they started accumulating these fucking places. All these guys are rich as fuck. Then they go back and remortgage these now rental properties. They take that money, right, and all the money they've made, and they're just out there buying whatever they want. They're rich as fuck. It is bizarre. It is one of the most bizarre. We like incidentally created like this rich home buyer in the U.S. from reform in 07, 08. Now that sounds crazy, but we did. That's a real thing. I'm in these groups. This is a real thing, and no one talks about it, but it is real. You can find these people, man. They're up there on Saturdays and Sundays. You can see them. Yeah, I don't know if it's incidental. I don't know if it's like a byproduct of it, but you basically taught people and forced people not to take or not to be allowed to take risky investments. And so what they did was they didn't take risky investments. They took good investments. And what does that do? It compounds wealth. It concentrates wealth away from you that can't buy. And now you are pushed out of any kind of a housing shortage to buy. You don't have the power anymore. No, you're in that group as well. Okay, so you understand what I'm talking about. This is like an untalked about subject. Not a lot of people talk about this in public, but you're creating like a better investor. It's hard to explain properly, but what they buy is overpriced. No. They go in and they buy cheap shit. They go to auctions and stuff, tax auctions. They go to bank auctions. They buy all that shit. That's where they make their money. But then they go into these neighborhoods that are really nice. They want to buy a nice house to live in, and it's cash. I got cash in hand right now. That's a large percentage of these people that I'm seeing. They have money, actual wealth. Yeah, no mortgages for me either. My properties I own outright. There are no mortgages. Straight cash. Straight fucking cash. Dude, we were on this show talking about that shit 3 years ago. Buy a house with cash if you can. It's going to get even more fucked up as time goes on. And it is right now. It really is. So Joe and I were talking last night about it, right? And I was like, what's the function that you put in to remove that wealth from these people? I don't know what that is. A lot of the solutions are not what people want to hear. They're usually like death taxes of some kind, property taxes of some kind that price people out. They make it not worth it for you to do that kind of stuff. Redistribution of wealth, basically. You have to find a way, and Dalio talks about this too, that when you're in the end of a short or long-term debt cycle, one of the things that has to take place is that you tax the rich. Now, I'm not for that, but I'm telling you that one of the functions in that process is not rate hikes. It's not cutting off the money flow. It's actually taxing the extreme wealthy that are hoarding all that money or able to hoard all that money. There might need to be something like that in the future. I don't know that I'm for that, but I don't know any other solution. What ends up happening is you create a real wealth class, giant wealth class, not giant, but like a wealth class, and you create this lower people that think they're middle class, but they're not, and that class gets huge. It's wild. Yeah, and I'm talking about, yeah, exactly. I'm not talking about taxing the guy that makes $500,000 at a job every year. I'm talking about taxing the wealthy, like literally taking the money out of the wealthy's hands. I don't know that there's any other solution than that. There might be. Maybe just a normal business cycle or something could do it. But other than that, these investors, man, they get smart. And the government's holding them to being smart. That's the key here. That's the key part here. Sorry, you can't take 6 mortgages out with bad credit and no cash. You got to do it the hard way. And they did it the hard way. That's the point. They did it the hard way. But what does that create? A more resilient, wealthy person, doesn't it? Creates a more resilient wealth class. More resilient wealth class. That's what it ends up doing. I don't know. I don't know what the end result of that is. If you're young out there, let me know in the chat. Say something in the chat so that tell me, how about this? If you make $100,000 plus and you're under 30 years old and you do not own a home, are you trying to buy a home? Do you feel good buying a home right now?
Gaza.
Do you have a lot of options? Yeah, I don't resent them either. I have no resent towards any of these people. I've got zero resent towards this happening. It looks to me like it was created by the rules that were put in for people taking on risks they shouldn't. So instead of naturally weeding out bad investors, they forced people to invest properly.
So Bitcoin down 11.3% at $59,867.
Yeah, that's what. So Carrera Low just said. Lower end millionaire is going to be so confused when they start to realize they're not actually wealthy. Joe and I talked about that last night. Absolutely, you are not wealthy at $1 million anymore. No way, shape, or form. Millionaires are not the wealthy class anymore. They're like upper middle class at best. That's true. That is 100% true.
Biden says price.
Sold house 2 months ago, renting for 2 years till the kids are out of the house. Then we'll buy what wife and I want then, hopefully after the correction. In the city I lived in forever and want to buy in, no options. The house we almost bought 4 years ago and backed away from, I'm missing some of you guys are saying. Sketchy inspection is now back in the market for 2.5 times more. God damn. Going to get priced out by the real 1% that they fought so hard to be accepted by. Yeah, I'm with you, Carrillo. Joe and I were talking about that last night because we had a conversation. Do you guys remember when Netflix and a couple other companies said that they were going to raise what they were paying AI engineers, robotics engineers, and AI engineers? Their offers were now in the $700,000 to $900,000 range, where were at like the $250,000 to $450,000 range, and then like a regular engineer was like $90,000 to $120,000. So if you're an entry-level engineer today, you likely need to be making what, 240? I would think that if you were an engineer today, out of like a not just like your 4-year, but like you get a license. I would think that you would expect or want to start out today with a package around 240, full benefits, all that stuff. Right around there, you need to be right in there, so that you can make about 4 to 5 to 600,000 in 20 years to be middle class. And then if you want to be wealthy in 20 years, you probably need to be making 450 to 650 on the low end to be able in 20 years to say, yeah, I'm making $1 million, I'm upper middle class, I'm feeling good. Isn't that bizarre? I think that's fucking bizarre. Not gonna lie, I love renting so far. Same size house with 0 responsibilities. Yeah, I can see that too. I don't know what to say. I don't know what. It reminds me of Japan. To be honest, reminds me of what's the name of that documentary called? Sons of the Yen or something like that. Children of the Yen. There's a documentary out there that if you haven't watched, you should watch. But I want to say, tell me if I'm wrong. If I'm wrong on this, I'm not talking about my ass, but I think like apartments in Japan at one time were like, 35,000 yen or something like that, like $35,000. Their currency was so devalued. Princes of the Yen, that's the name of it. Princes of the Yen. If you've never seen that movie, you should. That's the track we're on right now. Yeah. That's where a millionaire is not wealthy. Yep, millionaire not wealthy. It's gross. So in that discussion tomorrow with the Senate, I would expect some of that conversation to come out Wednesday and Thursday, and for Jerome to likely react to it. And just what we're talking about right now, same kind of stuff. What about this? What about that? What about all these things that are happening out there to people? Their pay is not high enough. It's getting better. Wages are getting better, but it'll take 20 years, right? But pricing is, right? We've jumped 20 years in pricing in a lot of places. Just staircasing down right now into the close here. Trading 505.61. Looking for that glass floor down below at 504. Renting is a short-term high for long-term loss. It is identical to drug in that sense. I don't know. I think people have needs to. I think people have a need to rent. I think people. Well, even myself. I spent a lot of my years in my profession moving from place to place. My job took me one place after another, 6 months, a year, and I had to rent. I think a lot of people have to rent. Not necessarily because they want to, or like people's jobs sometimes require it. Their professions sometimes require it. Sometimes it's money, sometimes it's credit, sometimes it's debt. But there is always going to be a renter class. Some people don't want to be tied down either. Yeah, I would say I'm not like, I know that there's this whole thing like fuck landlords. I know there's a ton of bad landlords. So like, of course I'm against bad landlords. But I think there's always going to be a need for renters. I think there's always going to be a need for landlords. So I think that's just a function of society. Yeah, you know what? Here's another one too. Yeah, you guys are seeing growth in like Inland Empire stuff, right? That's what I read yesterday, the day before. I was watching. What was the other big one that I really liked seeing? You know what Joe brought up too, which could help. Tell me about. What do you guys know about Palm Desert and Palm Springs? They started banning. They started banning Airbnb out there, right? And they had a housing crash in Palm Desert because no one wants to live there. Does anybody know about what's going on in Palm Springs? So you get a place like Vail or Park City or Vancouver that people don't want to live, but they want a vacation. If you ban Airbnb there, the housing options become more reasonable. I say people. That's another thing that people ask me. Like people say, why do you not rent to people? Why do you? So I do Airbnb. So Airbnb is the only way to, not the only way, but it's the best way to go as an owner, because you're not tied to a tenant. You make more money. I know that people like to say, yeah, those Airbnb owners are getting fucked. They're not. They make a lot of money. They do very well. They don't have to deal with any tenant issues, none, like zero. They don't have to deal with a tenant that's like, I paid $1,000. I want this fixed or I want this upgraded. You get those tenants 4 times a month, not once, 4, sometimes more. Yeah, they do. Airbnb is one of the even though I'm an Airbnber, they're one of the scourges in our country. Yeah, I think they banned them like last month. Palm Springs or Palm Desert, one or the other. Palm Springs in there, something like that. Let me know on that one if you think that let me know on that one if Turkey McNugget saying sold half my puts for 280%. Congratulations, Turkey McNugget. Like Wellington here in South, I missed that comment. Probably should have sold them all, but hell, guess we'll see where it ends up. You guys are the chat's going too fast for me. I have an Airbnb in small town Kentucky doing $4K a month from 3 guys working there to build a battery factory. Insane. Absolutely, dude. Locally, they hate Airbnb. Yeah. Airbnb is one of the other things you could do. If you ban, so Airbnb is another touchy subject for me. So like Airbnb, right? Before Airbnb was here. So here you go. Here's your glass floor. Someone asked about glass floor. It's right down here. You can take a snap of it. That's the bottom of the put market down there. So here's how it was. This is what it was. If you're young, pre-Airbnb, right? Hotels and motels just stopped fucking caring. It was very very similar to taxi service. So there was a time where you'd pay top dollar for dog shit hotels and motels and bad service, and everything was getting bad. When Airbnb came on the scene, two things were true, right? You could rent out a room for a reasonable price in your home and make some extra money. That turned into making a lot of money for the homeowner. Making more money or enough money if they rented out their whole home that they lived in and bought a second home. And Airbnbs were great. They were awesome. The great alternative to shitty motels, shitty hotels, and high overpriced hotels and shitty motels. Now we've like flipped, right? When I rent an Airbnb, I often find the pictures are great and the place sucks. Especially the higher price ones. The ones that are like 5 to 15 grand a month. The higher priced Airbnbs, not the top ones, like this middle group, a lot of times they really suck. And they're not as good as a hotel is today. And hotels and motels have to do more today for your business. They have to compete with Airbnb. So there are a lot of instances right now where a hotel and motel might be better, or a better option at least, or a more competitive option than an Airbnb. But at that same token, right, if Airbnbs go away, what happens? If a hotel and a motel doesn't have to compete with Airbnb, your options get fucked once more again, right? You go skiing in Vail, and now you have all of these rental homes off market. What are your choices? A resort, a hotel, a motel. That's it. So maybe it's not get rid of Airbnb. Maybe it's limit Airbnb. Maybe there just has to be a limit on it. I've never stayed in Airbnb. Too many perks with Hilton Amex to even consider. I gave up my Delta. I gave up my Delta card. I'm done with Delta. I don't do anything else right now except for Airbnb. That's all I do. That's what I rent still. To this day, I just rent Airbnb. I like the idea, or I like the feeling of not being with like other people's used. Well, I guess it is still used sheets, but in my brain, like they're not having I guess they are having big orgies in Airbnb. My brain tells me it's better. Also, I get some privacy as well, which I like the privacy. I like to walk out, look at the lake, and sit in my shorts. Yeah, travel nurses too. Airline pilots help out. Oil workers, gas workers, all kinds of traveling professions. Oh, I'm missing some of your comments. Comments are going by so fast that I'm missing stuff. Miss Chocolate Monkey's saying what? Hold on, I gotta scroll back up. Looks like restricting Airbnb rentals and PS already have banned parties. Airbnb is making permanent its ban on parties at homes listed on the site for short-term rentals. Am I thinking about getting one-day calls? No, I'm still sitting in calls right now for the close. 3:10 in the afternoon. I'm looking for a squeeze up into the bell for the hedge to come off. And what else am I doing? I'm loaded to the tits right now. I've got SPY put spreads. I've got 0-8 calls on SPY right now. I've got a bunch of March 18 Tesla calls. I think I'm good right now. I need to clear off my books here. I own RGF as well, Real Good Foods. I need to clear the books a little bit here. I either need prints or I need them to burn to the ground. Yeah, airline crews stay inside of hotels always. No, so I got friends that are airline pilots. They rent houses through Airbnb, and then they come and go as they please often. So you'll get like a group of like 10. You'll get like a group of like 10 airline pilots, and they'll rent an entire house. Politicians are famous for that too. It's like a college dorm room. What's going on down here? I think someone's logging in under my account right now. Hold on a second here. I got a session disconnect. Oopsie. Close that one out. I'm being logged in by somebody else. Oh, and layovers. Yeah. I think they only do that in their hubs, right? They only rent I don't know for sure, but I have a buddy that flies for JetBlue, and he rents a house with some friends. He's on like one route, and instead of staying in the hotels, he does the like a dorm type situation. Q's still rolling down again. I'll bring this back up for you. Down to its daily trigger, 431.07 on Q's. Violence in the Q's right now. Yeah, you know what? I might buy some calls down here. You know what? I might actually buy Q's calls here. I'm with you on that one. Looking at the Q's right now. Q's coming into 431.07. I think I am going to buy some Q's spreads here. Hold on. Q's coming down, trading 434.42. Come on, log me in, baby. QQQs. Yeah, I might put a trade on here. Let's see what we got here. Call spread. Or maybe a credit put spread here. March 15th. I want to turn this in on the 11th, right? March 18th. I'm just going to do the 11th. Because the 11th is when the lowest point of vol is there. What do we got here? Short put. 427. 426. 426. Where's that Q's at? 431. 431. Six days. $434, right? 434. 431. $431. It's not really a good deal. I'm not finding any good deals here. I might just have to go straight Q calls. Hold on here. March 28th. Let me look at NVDA. Yeah, that's not that big. Maybe Qs are better. Qs probably are better. 434, 432. Or 40. They're still kind of steep. They're like they're $5 right now for 440 Cs for the 28th of March. But I want to get rid of them before then. I want to stay on the Qs here. I'm watching March 28th QQQs. Yeah, you still got that bounce down there in that daily trigger. Like 440C. Oh. Yeah, I'm likely going to take a trade on 4 or but I'm waiting for 431, 432 somewhere in there. Or should I just put on the call spread not to deal with it? That shit's $5 fucking grand, dude. All right, I got a trade set up for 440Cs for March 28th. Want to sell them on the 14th or the 11th if possible on SPY. I haven't sent the order in yet, but it's right now it's $5.38. It was $5.40 just a second ago. So I'm going to watch this into the close here on Qs and see if I can get a bounce down here right to the upside. Trade is set up right now. Pentagon saying there are no plans to send U.S. forces into Gaza. Bought this down here this morning, had a small print, and then rolled right down on myself. Still sitting on those calls right now. They went down to 20 cents. Didn't even bother turning them back in, hoping for a squeeze up into the close. They're going to torch those things to zero. Full loss right there. That's a pretty big loss. Not huge, but decent loss for me. $322. 536. Here, I'll put a fucking stink bid in. Let's see if I can catch a fill at $5. I just want like $5. Trading 530 right now. If I can catch like $5, I'll put that trade on. CDN through AWS. Conversation. We got a stink bid at $5 down here, but it's like now we're trading 543 in those calls. Not long right now in those. Spoo's squeezing right now. These calls are at 547. I have a bid at $5. I'm being left behind here. Check Q's real quick. And they're getting a change here. This Q's now 1 minute chart. Let me check that in the 30 minute. Oh yeah, dude, I'm buying the fuck out of that. Oh, dude, I'm gonna be pissing away fucking money in this. Oh, go back there. Q's, baby, Q's. Still no buy for me. $440 on Q's at $540 right now. 328, almost to the half. I'm going to start a position. HYG turning up now. HYG turning around to the upside. Dixie starting to roll over. NDX still bleeding right now. TNX, can't see too much there. Tesla's still down there messing around. Just parked on that same low from earlier. VIX still blasting up at 1489. They still have, VIX still has some kind of, or had earlier, some kind of gap above at the $15 mark. Target on SPY 50402. If they can get there. SPX down below here. Next level here is 5040. I want to see Q's just blood this here. I just want to see Q's do this right here. Just like blast straight down right there. $3:30 now, new half an hour. SPY trading 504.91. Starting to add to a position here on QQQ's March 28th, 440C. HYG turning around to the upside right now. Dixie rolling over slightly, but still no like big bloodbath, anything like that. NASDAQ breaking above currently. It's 1 minute trigger. There we go. There we go. There we go. Keep on turning. You know, I don't want to see is like, I don't want to see that fucking bloodbath, and that was the buy right there. 552 right now. Come on, baby. Come on. Q's with a small turn here. Still no conviction in this trade yet. Q's turning on the 1 minute trigger. Don't want to see it get sold down. This is the Q's down below. Don't like this would hurt right down there would hurt. That would hurt right there. I'm going to take this off and keep it on. I'm going to keep it on the Q's here for a minute. SPY turning around. Now I can fucking be here to monitor my shit. I'm so fucking pissed that I wasn't here to do this shit earlier. $337. We'll see a move here. Right around 340, we should see a move. Next 3 minutes. We're going to find out if we're going to roll this shit down into the close or not. I think I need better glasses. I think I need to go up a prescription for my glasses here. I'm not being able to see my fucking trades. HYG coming back in to test the cross to the upside. Dixie holding on right now, even though HYG wants to go up. VIX still climbing right now, trading 15.04. I'm like a fucking hawk watching this right now. I'm like, if this fucker breaks down, like if this Q's here breaks down, if at any point I see any of this bullshit here, like I got caught in this earlier, not watching my fucking trade. Any of this bullshit down here breaking a new low or anything like that, and I am fucking out. They tried this shit earlier. They pulled this shit earlier on me when I was in a fucking meeting with a guy, property manager, to do some work. I'm fucking pissed about that shit's starting to kick in for me. I'm starting to get angry here. Starting to get angry. Starting to get kind of stinky. Bookmap looks like it wants to go down too. You can see down below there, there's still a little floor down there, much lower. Like right down here, all this stuff down here. None of this has been filled down here. I'm still up. I'm still good. I'm still good right now. 549 right now. I was picked it up for 535, so I'm still up at least some change here. Can't believe I got caught today. I'm so fucking mad, dude. I never get, well, I sometimes get caught, but not that fucking frequently. Fucking pissed. Ah! I know. I'm over here like, fuck. I'm looking at my account right now and I got torched on these fucking calls. These fucking spy calls from earlier. So fucking mad. I'll say that. I'll say this. I'm up 15 cents right now, but I don't have 50 fucking calls either. So I'm not rocking 50 or 100 fucking $5 calls on fucking Qs. Fuck no. Fuck no. Like 80 cents, yeah, I'll do that. 80, 100, whatever you want to do. But fucking, I'm not spending fucking $20,000, $10,000, $20,000 for fucking, more than that actually, closer to 100. I'm good here though right now. So far I'm good. As long as this shit doesn't get stupid down here, I'm feeling pretty good right now. They ain't taking me for another fucking ride today. No more. Dude, I had a guy walk in the office. So when we were streaming, I had this guy, the property manager came into my office. I'm like, nah, dude, you can't be in here right now. Go out there. I'm like, who lets you in here? True story. I almost had like a guy walk in, like some rando dude walk in the back camera. I think he actually wanted to see what I was doing in here. I mean, who could blame him, right? What's he doing down there in that office? I was like, no, we ain't doing that. Yeah, I know. This looks good. I like this. This looks nice turnaround. I want to see us get above the 434.76. I don't want to see any kind of bullshit roll down nonsense. Fucking hand to God come down and try to get the last fucking 20 minutes or any of that bullshit. I'm going to make that fucking money back. I'm pretty fucking pissed right now. It's like kicking in. Like I was like, it's fine. Don't worry about it. But now as time's passing, my brain's going, you fucking idiot. And I took the fucking sell stop off. Fucking, I had the sell stop on, then I came back and I'm like, I don't need it on anymore. I'll be fine. If you're in puts all day long, congratulations today. If you had this nice trade down, I still don't have a print on my puts. I need to go lower. So I'm still sitting in a hedge. Yeah, that's all I got to say. I think that's it. I'll be here with you guys tomorrow at 8:30 in the morning, earlier than usual. Setup will be a little bit different tomorrow. We might have some guests on as well to go over the Senate hearings. If they get boring or anything, maybe we'll just put them on in the background and get back to trading. Maybe just monitor it, but we'll see how it goes tomorrow. It seems like people are building themselves up for doom and gloom on these Senate hearings. I did make a comment saying that Bears probably want to see some kind of like, they want to see some kind of a fucking like unknown rate hike or something like that. But we're still following the plan right now to sell the volatility on the event. Just like all previous events, we go down into them and then we blast off. So I am long again right here. A little bit more risk on than before. I'm looking for on Qs this time, not SPY so much. I want to get out of fucking SPY because I think that shit's going to stay hedged. I don't want to see Qs go up. I want to also see the going up for NVDA and their event and all that kind of stuff. So I'm looking to looking for that outsized move in Qs, not so much in SPX or SPY. Oh yeah, baby, I'm at 565 right now. Woo! Hell yeah! Woo! It's a winner. I'm a winner. Oh, is he over there right now? Is he on Twitch right now talking? Hey, G-Dad Gold, is he over there right now? We can raid them, right? Like, nicely. Go over there and everybody say hello? Yeah, we can totally do that. Yeah, should we go over there and say hi to him? Hey, I don't know how to do that, but I know it can be done. Hold on a second. Let's do it as we had it. You want to do it? I'm down. Let's do it. Where's who? I think I need Bork to do this stuff. We should totally go over there and do it. I'm totally down to do it. Trading 505.80 right now. We've got the nice squeeze here on Qs, trading 434.80, upside target on Qs. You know how this goes down here, right? At least on QQQ, you want to break above, come back down, and then confirm the move higher here. 3:47 in the afternoon, not a ton of time left. I don't want to get trapped in this trade either, right? Right there. Right up in there on the Qs, what I'm looking for right now on the Qs. Trading 573 right now with a buy-in at 535. $348, 12 minutes left. I'm going to leave these calls on for Qs. My SPY calls are fucking dead, dude. Gone. I'll leave those on. I'll check them at 4:15. If they pull any funny business, we start blasting up. But I don't think anything's going to matter. They're going to zero them all out. Take the money and run, baby. Those calls are dead. I do have some really nice calls sitting here on Qs so far. Man, I want to see HYG just rip up there in the bell. They're not doing that right now. They're parking it. NDX blasting looks really nice right now. A little bit of outperformance by NDX. Watching Tesla right now, it's just parked. I'm kind of grateful right now that my calls are for the 18th on Tesla. So I'm not too concerned here with Tesla. I'm still feeling good about it. Haven't cut them loose, not going to cut those loose. I want to see what happens in these next 2 days. When that volatility comes off the market, I'm hoping for a fucking face ripper.
Market on close imbalance, 1.7 billion to the buy side.
Trading 586 right now on those calls. HYG, every time HYG tries to come up, it's like, wham! Big fucking wicks coming down in HYG. Have a cross coming up on the 1 and 5 minute trigger on Qs. Trading 587 right now and a 535 buy. Nine minutes left to the close. You know, I might take the money. I could, if we blast off up into the close here, I might take the money if it's crazy. If Q starts spinning around up here and start blasting north, yeah, there you go. There you go. Trading 590 there for a minute. I make a greed. I'm already thinking about the greed right now. I'm like, yeah, if it squeezes up into the fucking bell here, I'm like, yeah, you know, you maybe just take the money and run. I'll stick around with you till 4:15. If you're in calls, I want to see what happens between 4 and 4:15. If it starts like doing the creepy crawly up into after hours, like we close out and you start seeing like big green bars, like bam, bam, and then after 4, you see something like that. I might take the money at 4:15 if I see that happen up there. Keep an eye on this cross here, too. They always come back to check these crosses, so be careful of a reversal in the last few minutes here, like something down for the reversal, and then you get the cross right there after hours. You end up getting like this, like, reversal down, and then you get the shooting up here. Oh, dude, come on. That's bullshit. Raising a sell stop right now to 550. Trading 596 right here. Raising stops again on Qs. 575. Now trading 609. Coming to first resistance here. I could get stopped out here. If they reverse it down really quick, I could get stopped out. Trading 611 right now. Three minutes left to the close. I don't know how the fuck you guys trade these long dated strikes. It's like take the money and run, wait for a fucking resistance point, then jump back in again. Trading 611. They're like, take the 610. I'm like, no. Now trading 612. I'm like, I ain't taking it. Squeeze it up there. Squeeze on up there. Squeeze on up there. Keep on going. Trading 616 right now. One minute left. Man, I don't want to hold this. $6.06 right now into the last minute. 6:05, 6:07. Watch out for the pullback on the cross on the 1 and 5 minute trigger. All right, I'm still long. I'm going to stay long. I ain't going to fuck around with this. I'm going to leave it on. Fuck that. I want more money. I want more fucking money. Yeah, no, I'm not afraid. I didn't even read your comment. I just saw it. I'm still long. I didn't close them. I'm like, fuck that. I'm on. I'm going to ride that shit out and see what they do. All right, I'll check in with you guys tomorrow at 8:30 in the morning. I'll see you guys. What else? I think that's all I got. We're going to be covering the Senate hearings tomorrow on Wednesday. Take note that whenever we go into these events of recent, we have early week volatility. We sell the event vol, and then we usually squeeze up. Does that hold true again? It's been holding true every week, and every week they set us up. We head into Wednesday, Thursday vol, and they cut it loose, and we blast off to the moon. Do we do it again? Do we do it again, or is this the start of a correction? You'll find out more this week if we get that correction or if this is going to work one more time. I'll see all of you guys tomorrow, 8:30 in the afternoon, babies. See you then.